but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Did you just pop like a 40 ouncer or something like that? I just heard a little click over there.
Yeah, I was trying to be discreet, but it's tropical vibes this morning because it's anything but here in Chicago.
It is anything but cold this morning. Cold.
Yeah.
Welcome home,
Thank you.
by the way.
Thank
Yes,
you.
very
Good to be
nice.
back.
How was Arizona?
It was great. It was great.
You spend the time indoors? It looks like you don't, no tan going on.
Yeah, it wasn't like sunny hot. I mean, it was sunny obviously, but it was like, it gets into like the high 60s, low 70s.
I'm sorry, was there 10 inches of snow?
No. But that's why I don't have my tan.
Oh, I see.
I don't have the tan, but it was good.
You know you can buy a tan.
Yes, spray tan it. You ever been to a spray tan?
No.
Me
Why would I do a spray tan?
I know. I'm just
He's
asking.
old school.
Yeah.
Yeah, I'm just asking.
Can't do it. I have some color.
Yeah.
Like,
Did you get to play golf, Nikki?
I did. I played 3 rounds of golf.
Ooh, how was it?
It was great. It's great.
Did you rent clubs or did you ship your clubs out there?
No, I have a set there that I leave at my mom's.
Oh, excuse
sure
me.
you do. A couple of two,
Excuse
three
me.
Little
sets. Must be
backup
nice.
set.
Okay.
Must be nice. Ooh.
Yes.
I didn't know you had it like that.
You got to if you're out there enough.
Yeah.
Shipping the clubs back and forth or renting them is like
No, I guess it makes sense.
do that 3 times and it's.
Because you're not paying for lodging, so
That's true.
it's a big savings there.
Yeah.
Oh,
You ever
sometimes you
see-
can't afford free.
Do you ever see a snake on the course out there?
Yes.
Yeah.
I have seen snakes out there. That's why you don't go get your ball.
You're
Balls-
just like, you know what?
Unless you can see it and my stepdad has one of those little like ball grabber thing that you can.
Oh, like you go for water,
ball
like
retriever,
yeah,
yeah.
but you can get them because everything has thorns too. So
Sure.
you walk in there and
Why does anyone live there?
it's 70 degrees in November.
That is- that is
in
true.
December, so it's kind
That
of
is
some hiking, which was nice. I
Yes.
saw a beautiful picture of you,
Yes.
like a patriot out
Yes.
up on the.
yeah. That was Black Mountain. Black Mountain, yeah. So I did a couple hikes.
Doesn't mean anything to me. What is Black Mountain?
It's just one of the
One of the
mountains.
trails there.
Yeah.
Someone on Twitter, they knew exactly where
Yeah.
you were right away. They're like, oh, that's
Gotcha.
Yeah, they're like, that's such and
And
such.
drop a
trail.
pin.
Yeah, yeah. So.
How was the food? Good, like Mexican food?
Yeah,
or
no, the
just-
food's kind of junky there.
No?
in that area. It's
I
all
think
like
they have just all of our food. Like it's all just like Portillo's.
that's
and
in Scottsdale.
Oh,
That's-
yeah, like it's
that's
all
the-
Chicagoans who set up out there.
Yeah, that's like 30-ish minutes away from where my mom is.
Oh, so she's outside of Scottsdale.
Yeah.
Okay.
So by
An
her,
undisclosed location. I'm not allowed to know. No, I'm just kidding.
by her, it's all it's a lot of
Mountains.
biker bars.
Oh.
So it's
good
not,
for your mom. Get it, girl.
Yeah. So it's not
As you
a
said
fine
it.
dining experience. A lot of barbecue and burgers, stuff like that. So
That sounds good.
yeah.
Armadillo and stuff like that. Roasted armadillo. No?
No.
No? Whatever. I don't know. Whatever. I couldn't think of possum. That's what I was trying to think of. But
What are you doing? Are you?
I was trying to think of some sort of Arizona. I was in Texas. I don't know.
Do you want some of my Celsius?
I could probably use it. No, actually, I couldn't. I've been traveling, even though I've been home, I've been traveling up and back to Wisconsin numerous times for your brother to go skiing. I can't wait for
Whose
him to
fault is that?
Well, I mean, he gets his license in January, so I have another month or 2 to go. So
what do you do when he's skiing?
I drive back, and then another parent goes back
Oh,
up. I mean,
okay.
like,
Oh,
we,
that's
we
nice.
split it. Yeah.
Yeah.
I mean, it's an hour and a half to get up there or whatever, but he wanted to go when it was snowing, the day he was snowing.
Yeah.
And I finally became a parent, and he heard a word.
You finally became a parent?
Yes.
Yeah.
Yes.
Well, no. He wouldn't ever say no.
Oh, no. I said no on Saturday.
You did?
He didn't know what the
wow.
word meant. He had to look it up.
I was like, wait, what?
Yeah. What do you mean no? Wait a minute. If I just ask another time,
Yeah.
you usually switch. But I couldn't do it. It really was the first. Kudos to the weathermen. They finally got it. They finally got it right.
Meteorologists.
Meteorologists, whatever.
They're not all men.
Yeah.
I'm.
They really got it. They really
Meteorolo-
got it. They meteorologists really got it correct. We did have the 10 inches plus of heavy snow.
Yeah.
I mean, it was.
Do you want to guess, make me a market, you two traders, what percentage of over we are on our average snowfall for here in Chicago? So it's December 2nd. And
Thus far?
Yeah, thus far. How
Oh my God!
much?
Last couple of years, we haven't had any snow.
Yeah.
So what percent over average?
125%.
What do you say?
I'll take the under.
700. We're 700%
We haven't had any
above
snow.
average.
How many years? Yeah, because
Yeah.
it's been like 5.
It's like 695% over it because it's just like we're already at like a foot. And
Yeah.
it's not even December. Like
Yeah.
I was Tokyo drifting on the way here. Like the car was like I was trying to go this way and the car was like I was like
We're
oh,
supposed to
fuck.
get cold too. It's supposed to be like real
negative
cold.
30. Yeah. Mm-hmm. Yeah.
I don't like that.
I know.
I don't like that.
Should have put my Christmas stuff up already.
I told you
I know.
that. It was like 70 degrees, my guy.
I know.
You couldn't do it before Thanksgiving though.
I know. That's what I'm saying.
But the weather. All right.
I know the weather. Yeah.
Have you been in your sauna?
Oh yeah. That's been getting a ton of. And my daughter was in town from D.C. and she loves the sauna.
And she's like, "This is what my inheritance is going. This is what you."
I'm
choose."
telling you, I'm not leaving any inheritance. I told everybody.
Oh, you're gonna Buffett it? You're gonna Warren Buffett it?
No, I'm gonna spend it like a drunken sailor. Is what I'm gonna do. I want to be gutterless in a gutter somewhere, maybe a little high at the time when I click out.
I don't know. I think
Maybe in
Vinny's
California.
this
Yeah, Vinny.
close to like giving like himself power of attorney.
No.
He's the beneficiary. Don't worry. Yeah, he's put his
Oh
name on.
man! Oh, this is a
Sign
fun
this,
can
Dad.
of worms.
Not this one. Not that.
Fun can of
Open the
worms,
door. I'm leaving the whole world. You know how it goes.
Yes,
You've heard it.
yes.
Heard it since you're 12.
Hey, I saw the video, but the people are asking, inquiring minds are asking, because there wasn't a first call on Sunday.
That's correct.
How was the Sunwa turkey?
God, I leave for 1 week. The whole thing.
We didn't have an update.
Can't have
I owe you money.
Sunday.
I was at like 0 Delta that you had confirmation that this was actually a viable order, but it came through.
Sure. I didn't really know this, but Tom did leave a deposit. So I didn't know that ahead of time. So that might have skewed the betting a little bit.
Okay.
I didn't know it either, so I couldn't tell you about
Right.
it. So yeah, we got the turkey on time. I was there at 10 o'clock in the morning. Met the great Puba there at 10 o'clock in the morning. He was there, picked up our turkeys. They were partly cooked, like, you needed about another half an hour, 45 minutes.
Oh, that's not bad.
Yeah, to get them done. The turkey was great. The barbecue from Pecan Lodge in or
Terry Black's.
how do you say it? No.
Oh, pecan.
Pecan, because everyone's making fun of me.
I think it's Pecan Lodge. I think that's how that name is spread. But I do say pecan, like pecan pie.
Right, I say pecan.
I say pecan. But
Yeah. Well, that lodge did a great job with their burnt ends. I did a burnt end cook-off between Jack Stack in Kansas City.
Oh.
And I was really neck and neck. I got to give the Pecan Lodge a little bit of a nod, but they were both excellent. It could have been just the way it was.
How do you bring them up to temperature? Like what? How do you?
Everything except the pulled pork, you just kind of take it out of the bag, put it in a tray, cover it for about 20 minutes at 3 something, and then take the cover off for 5 minutes. It was very easy. I mean, it was a simple meal to make. But the Sunwa turkey was great. But it's still turkey. Like, I mean, like you can't.
Did it stay juicy?
It stayed pretty juicy. It wasn't.
The duck is, the duck.
I know the duck
fattier.
the duck is phenomenal. The turkey's just good.
Yeah.
You know what I mean? I just think it's the bird itself. I don't think it's
do they give you that sauce that they give with the
they
duck?
give you a sauce. And you can make like a gravy or like a roux gravy kind of with it. That my wife did. Good. Now, nothing was like nothing from the turkey side was phenomenal. Stuffing's always great. Nothing was ever phenomenal from the turkey, but it was really good. I had it out a little bit with my wife on Thanksgiving.
Oh, you're a peach.
It's a Batista class.
Yeah,
Gotta have at least
it
one
wasn't
fight.
heated or anything like that. But I just decided next year she can do it all. Like I'm gonna sit back. I'm gonna sit back on a couch
Ooh, that's really smart.
and just relax. Help whenever.
How long is this one?
Smart?
Yeah, I know. I was like,
No. I was being sarcastic. How long has this one been?
21 years.
21 years.
20 years. You asked me how long I've been married. Yeah.
What was the first?
17.
17. Okay, so you beat that one. So
Yeah.
All right.
I mean, I got 38 years under incarceration. That's pretty good.
Nope.
Yeah.
No.
People sold that.
No,
I mean,
no.
There's no way people thought 30.
She is registered at Cartier.
Yeah, so next year I'm just gonna let her do it. I'm just gonna step back and let her do it and organize it. And get
Jean-Marc.
I had way too much food. We only had 10 people. And I had way too much food, 3 pounds of brisket, 3 pounds of burnt ends.
But you got the son-in-law. You got the eater. A couple of eaters in the family now.
Yeah, I had one son-in-law who was kind of down this.
Oh no!
Like caught a bug or something.
I was like, is he on the Ozempic?
No. He's a skinny guy. He's always been kind of a skinny guy.
He's on
But
the
he can
Ozempic?
eat like a garbage pail.
Yeah.
He was kind of down, very disappointing. My other son-in-law's chasing a kid around, so
Sure.
he couldn't belly up to the bar or the dinner table, so it was kind of subdued.
Yeah.
I had a hockey kid and a mom come over.
He's got to be an eater.
He's a great eater. Yeah. He's a skinny little kid too, but he's a great eater. Yeah. They taught my little grandson who's 2 how to check.
Nice.
So you now get on your knees or sit on the floor, and he comes up to you with a hockey stick and checks you, which is pretty cool. They taught him how to do that. Mom's real happy about that.
Wait, there was a hockey mom. Was Slappy there?
No, but Slappy comes around. Slappy was with Sheridan. That's his number 1. I'm his number 2. Sheridan never goes.
I mean, I gotta say, like a Sheridan event, that's elite.
Yeah,
you get that invite.
That's like getting an invitation to the Met Gala.
Right. I invited him, and he's like,
You're the People's Choice Awards.
Yes. No, I'm like the what was it? Nickelodeon.
Yeah, that's fine. The Kids' Choice Awards.
Kids' Choice Awards. There you
Choice
go.
Awards.
There you go.
Yeah.
But it was fun. Yeah, it was good.
Well, that's good.
How about your own?
I am.
Mom, Dad, good?
Everyone's great.
Good.
Can't
You
complain.
traveled during.
Yeah, it was
that,
dicey.
so.
I came back Sunday because I normally would come back Saturday to give myself a day, but Saturday was just out as a travel day. So I came back Sunday, and the toll road was decent. So many cars were off in like the ditch,
Yeah.
and one was like a pancaked tractor trailer, and I was like, "Girl, what happened?"
Well, they had that 50-car pilot too.
I know. And so there was one spot. I don't know, like, I think before I got to Michigan City, it was like total whiteout. So you just go real slow. But once you got through it, then it was okay. But my mom was like, you can stay here forever. And I'm like, I literally cannot, Mom. I have to go back to work. But it was good to see my parents, so.
Nice.
Good times all around. Hey, we got a good time for you. We got a full schedule of show for you on this terrific Tuesday here at Tasty Live at the top of the 8 o'clock hour. A little options jive, mastering delta neutrality and strategic roles.
Yeah.
That's at 8 a.m. That's a strong.
Yeah.
Start.
It sounds
okay?
It sounds a little wordy, but we're talking about just like kind of reducing delta and how rolling kind of adjusts your delta and
Okay.
how we do that mechanically. You want to do?
Which, by the way, Friday was 21 days. If you haven't done it yet, you probably should get on the pony and stuff.
Isn't every Friday 21 days theoretically?
Yes.
Yes.
Yes. Could be.
Okay. Well, we're going to talk about mastering delta neutrality with lethality at 8 o'clock. And then 8:40, we have Futures Focus. Craig is coming back.
Yes.
That's great. Everything you need to know about ES and MES. Craig from the SIBO. It was awesome. He came for his first segment around 2 weeks ago, so he'll be in every other Tuesday. Great response to his segment, and we are grateful for our partnership with the SIBO. So looking forward to that at 8:40 with Craig in the house. And then 9 o'clock. See me. Sorry. It's on my, yes, okay. On my thing, it says.
It's I.
Different.
Well.
Okay. You take it up with a higher power. That would be Beth.
We'll talk to John.
It's fine. Hey, 9 o'clock market measures. Does higher buying power lead to greater risks?
What do you think?
I think high buying power has more fun.
That's right. Yeah, so we're going to look at strangles versus iron condors and the relative risk that you can expect through those positions, because when you have an undefined risk position, it's hard to quantify what that risk is. So we're going to kind of try and put some context around that.
And then live from the trading desk, we got Quentin and Glenn. Quentin counting down the top trending tickers over at tastytrade, and Glenn exploring the FX side of things. Have you talked to Mikey? Mikey is in Japan right now, literally using the yen.
Yes. The yen has had a little bit of a rally.
I know. Good. I'm glad things are more expensive
down
for him.
a little bit this morning.
Yeah, well, it's at lows, so he's having a good time.
He's having a good time.
Yes.
So much ramen. I'm like,
So much
Mikey, you got to slow your roll, bud. That's a lot of sodium, bud.
Sodium, mercury poisoning is possible. I mean, that he's a good eater. Mike's a good eater.
It's surprising because he's in great shape too.
Yeah. When he wants to eat, he can eat.
Yeah. Anyway, I hope he's having fun.
Yes.
But that is our run of show for today. Liz and Jenny are live from the SIBO, though, today. It's always electric when the ladies are live. Catch the ladies live for the SIBO Tuesday, Wednesday, and that's it. Do you want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across the wire. Our leading story.
Top story. Just in.
Today's headline.
This just in.
Breaking news.
Story.
All right, everybody. Today, I consider myself the greatest. No, okay. Today is a terrific Tuesday. It's December the 2nd. It's a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
Crowd.
Crowd.
Dollar Tree, if you're
CRWD.
interested.
And
Crowd.
what'd you say?
CRWD.
Okay. Hey, Goldman Sachs is acquiring an ETF firm for $2 billion in its latest deal to bolster its asset management division. They're buying Innovator Capital Management, a provider of defined outcome ETFs, for around $2 billion. Look, Goldman Sachs is trying to just straight up compete with JP Morgan. Someone on Twitter said, and I don't know if this is true, but it makes sense, that this funds or these ETFs, their fees are like 80 basis points or something like ridiculous.
Yeah.
And so it's nice little margins for Goldman Sachs here.
Yeah.
Yeah, which we are going to start an ETF firm pretty soon. Let's get on that, son.
It's the easy way. We're taking the hard way, trying to build technology, all this other stuff.
Right.
Make an ETF.
Investor education.
just-
bleh.
Yeah.
We'll just do the ETF 499.
Yeah.
There we go. So the S&P 500.
These products, I've seen some of these. Like a lot of them are like the buffer products. where
Yes.
It's basically like a collar around whatever the product is. And to your point, the fees are just astronomical, and there's a lot of costs underneath the surface of rolling the positions and managing the positions and all that stuff that these products typically underperform whatever they're trying to match.
Benchmark that
The
they're trying to match,
benchmark is usually just way better. So
Just on the fees.
One thing I did want to talk about, though, because it is a big component of the Russell, is I want to talk about the Russell because banking stocks are a component of that. Are you doing anything in like an IWM or the RUT?
Russell's been doing pretty good as of late. I mean, obviously it has probably an 85% market movement, same way as the S&P and the NASDAQ. Russell's up around 13 this morning. Some of the banking stocks, if you look at, well, we'll go back to it. JP Morgan is basically unchanged, maybe up small. Goldman Sachs was doing the same, maybe unchanged, up small. But a surprising market yesterday with the way Bitcoin and some of the other assets were acting. The market acted really, really well. U.S. liquid natural gas exports hit a record high in November on cooler weather and strong output. It's the world's top LNG exporter shipped 10.9 million metric tons last month. Let's talk natty gas. Also crude oil, I think, moving last night, maybe this morning. Crude oil is unchanged right now at 59. It's been in a fairly tight range from like 58 to 61 or so. So it's right there in the middle of its range. The IV rank is 23, so it's neither here nor there. Nat gas, something we don't talk about that much, has really caught a bid last week, going from around, 4.5 to almost 5. I think it almost touched 5 last night, 4.98. So,
do you believe in seasonality?
I mean, if you look at it, it made lows in October. Is that considered winter? I think so. I mean,
it's in preparation of winter.
In preparation. October 30th, it was just a skosh off of its lows, and then it's caught a bit since then. I mean, You can look at these time frames however you want. It certainly caught a bid last week.
Yeah.
Now
I mean,
what?
technically, the winter solstice is not till like later this month. So
So it hasn't even had.
right,
that
yeah,
yet.
right. So we're not right.
Yeah. So there's still time to catch up.
Yes.
I don't know about nat gas, a real big product with markets that can get real funky. I avoid nat gas, and
Okay.
UNG is a horrible product to trade. But
We should look at oil though.
you
Once
could
the market
certainly
opens,
look at
'cause
oil.
I had I sold the 55 strike puts with 14 days to go till expiration. We closed them yesterday or the day.
We've had some nice trades because it's been great two-sided, wide. We missed you last week. The markets were
Yeah.
100-point range
Well,
to the
I
upside.
would, if you must have missed the follow page and all that stuff.
No, I
because I'm
caught you on the
still
follow
here.
page. I
I'm
caught you.
still here. Okay.
I understand, but we had some.
You
great,
texted me a couple times. You didn't give me a "How does Daddy do it?" because that would be weird. But
no high five.
Nope, that would be weird.
That would be weird.
yeah, that wouldn't make sense.
I don't tend to click on those videos. Gold and silver.
Sure.
Gold and silver rise with crypto sell-off. I'll get to crypto, just that'll be the next story. But let's talk gold and silver. Talking about the precious metals rally. Silver hitting new highs yesterday.
Gold's been on like a 10-day bender.
Yeah.
If you ever had a
Silver has gold.
Silver
gold's
too.
been
Yeah.
good, but not like silver. Silver.
I think gold has better markets than silver. That's why I talk about it first. But
Yeah.
you are correct. Silver almost trade up to $60. I mean, crazy markets. It's down about 2% today. Silver, gold is down about 1% today.
Yeah.
But they've been parabolic. Both of them have been parabolic.
How are you playing this?
I did the gold silver pair trade yesterday, a little bit early, so I'm taking a little bit of heat there. But you got the ratio at 73, which is like 80 is kind of the lower end of the last like 5 or 6 years.
Okay.
So we are certainly at an extreme, but you got to be careful with volatility here. And obviously these, with prices now, you're at way different prices. So it moves a lot.
And you're long gold, short silver on a 2-to-1 ratio, just to let everybody know.
With MGC versus SIL.
Right.
So the volatility, like it's not when you're looking 5 years ago when gold was at 2,200 and silver was at 30 or 25. The moves are a lot less notional value wise. Now it's big.
Well, that ratio, that spread got well over 100.
Yes.
That he's talking about that's at 70 and change.
Okay.
So
yeah, it was 100 earlier this year. So it's had a huge move.
Yep.
What underlyings are you using?
The futures.
Okay.
/MGC and /SIO, which Craig talked about last time he was on the
Yes.
show. Got us in it a little bit early, but we got bailed out, so we don't have to take it out of his paycheck. So
Yes.
it was good.
You are not going to fight that man. That man will snap you in half like a twig.
Probably. I'm getting old.
Bitcoin logged its worst day since March. Bitcoin and Ether fell sharply yesterday. Risk-off sentiment in broader market hangs over digital assets as the sell-off resumed in down December. See what I did there? What are you doing in Bitcoin and Ether?
Crying.
And Bitcoin 87,000 and change, actually up 2,000. But you are right. Bitcoin traded under almost as low as 84,000, 84,001 or so. A couple of days prior to that, remember in November, it got down to around 81 and change. I take it
Seems
back.
like 80 is that level of support there.
Volatility's back in the Bitcoin products, but it's kind of a dead money product. There's really, unless you look at like BITO or what's the other one that's even better than BITO? IBIT to trade it. It's kind of dead money. You're either long it or you're out of it kind of thing. But Bitcoin volatility definitely back. Definitely some little trade in Bitcoin.
Something else that got rocked right along with it, rightly so, is Strategy. MSTR has sold common stock to fund a $1.44 billion cash reserve to fund dividends on its preferred stock. The company sizably cut its full-year profit, as Bitcoin yield targets, and its Bitcoin yield targets given the sharp recent declines in Bitcoin's price. How much longer can Strategy use this as a strategy?
MSTR is not, it's where it was last year in October, believe it or not. I was actually taking a look at this because I think it's an interesting, and I said this a few about a week or so ago when it was closer to $200. It's 170 now, or 174. It's up $3 this morning. If MSTR traded a multiple of Bitcoin, and I think their Bitcoin.
Yeah, it was like sometimes up to like 2
to 1.
2
right?
to 1 in terms of like their actual net holdings. Yeah.
Right, like a net asset value kind of thing. We talked about how that was just too large and too great, and you really should be kind of short MSTR, and it went nothing but straight up. Now, over the last 2 months or 3-4 months, maybe since August, or maybe 5-6 months since August, it's come all the way down to now where it's almost at net asset value. It's an interesting play. Like, I don't know if I would rather be long Bitcoin. If I wanted to be long the product, would I rather be long MSTR that has maybe a little bit of a kicker that it might trade at a multiple over its holdings than Bitcoin itself? Like, which one will have more, I don't want to say alpha to it, but which one would move a little bit faster?
More vol.
I think MSTR becomes interesting here.
They are guiding to a full year net income ranging from a loss of $5.5 billion to a gain of $6.3 billion. Love it.
If you want to be long Bitcoin.
Yeah.
In other news, Vanguard changing their minds, and they will now allow crypto ETFs on its platform. The world's second largest asset manager has decided to allow ETFs and mutual funds that primarily hold cryptocurrencies to be traded on its platform, reversing a long-standing position. What are your thoughts?
A little late to the party. They've been trading for what, a year now? Basically.
It's Vanguard.
Yeah.
The size of their ship to turn it around, like it.
That's true.
It takes a while, I guess.
This is the other side of the like the bullish narrative is like everybody's thinks crypto's dead and like it's got just all this like bad juju around it. This is the other side of the coin.
Juju?
Yeah,
I know.
Like everything is like bad around it. But this part is like the other side of the coin is like, oh God, Vanguard is opening up the floodgates. That's exit liquidity.
Yeah.
Like that's the you finally get the this is who's gonna buy on the way down.
Yep.
So.
In other crypto news, the last crypto story, for some reason I just had a lot of crypto stories yesterday, but that's okay. Kalshi is moving to court crypto traders with tokenized betting contracts. Tokenization refers to creating a digital version of a real-world financial asset, such as a stock, bond, or treasury note, but using that to make bets.
It's interesting. I think I saw the CME was saying that they were thinking about or going to kind of put it on the fast.
FanDuel.
Yeah.
They had signed they have a partnership with FanDuel.
Right. Yeah. They're gonna put that on the fast track. So I think this tokenization is the real deal. So that might help a lot of, like they always talked about, how are we going to do 0-day settlement of equity stocks, and this might be the way to do it. Like you have an SPX that has a 0-day. You might be able to get stocks that have a 0-day that don't settle to stock itself. It's interesting.
Yeah, but
the world is changing.
Mark my words, Kalshi's having an uphill battle right now. They are going to have to start fighting their battles, I think, now on the state level, and it's going to be a seismic decision on whether prediction markets go forward or not. So we'll see what happens.
It's interesting.
Earnings from last night, MongoDB stock jumped 15% on an earnings and revenue beat, and the company issued strong guidance. They said revenue for the current quarter is expected to reach $665 million and $670 million between the two. MongoDB.
Untradeable stock.
Oh.
I mean,
why did you let me go on so long?
Sorry.
No, I'm just kidding.
Crazy move from $328 where it closed to almost $405 where it looks like it's going to open. So humongous move, but markets were $2-3 wide, no bid at $2. Some of these markets. So great story. Very happy for Mongo. In peace, Mongo from the Bears. But very happy for MDB.
Didn't he die recently? Like
Yeah.
I saw him on a plane once, and he couldn't walk up the aisle. He was with his wife and his little dog.
Yeah.
He's like a little chihuahua. Anyway.
Yeah.
But he couldn't. It was just. It was
he
so
was
sad.
a freak of nature. He was an unbelievable football player and great partier on Rush Street.
Okay.
I mean, we would see him all the time at Gibson's, and he was a lot of fun.
I did watch that Super Bowl documentary, the Super Bowl Shuffle.
Oh, I haven't seen it.
It's
How
great.
is it?
It's great. It's
Is
fast. It's great. I don't want to spoil it, but there's like a shocking moment. I was like, oh, I did not know that. But it was great. It's funny. Just the footage that they have. But they filmed it. This is not giving anything away. But as we know, they filmed the Super Bowl Shuffle at the Park West. We did a show at the, and so it was cool to
Sold out
see.
show.
It was
Sold
cool
out
to
show.
see the footage from like 1985 Lincoln Park, in the Park West, and we got to be on that same stage, so that was cool.
Yeah. We're
Nvidia.
talking about Steve McMichael, by the way. We called him Mongo the whole time.
Yeah.
Steve McMichael. Yep.
Nvidia has taken a $2 billion stake in Synopsys with expanded computing power partnership. The two companies are partnering to accelerate computing and AI engineering solutions. Nvidia.
Nvidia hanging in there, 181, up around buck and a half. I mean, it's at the lower end of its most recent range, but this is really kind of where the mean probably for this stock is somewhere around 185 or so. It's trading in 181 and change. I'm talking about the mean from maybe August till now. It got up to 210, down to around 170.
You buy all the dips in Nvidia?
If you have, you've done okay. You've took
Yeah.
a little heat the last
Or
month
if you
or so.
sold vol.
What's that? Or if you sold vol, it's been
Sold
great. I mean,
vol.
Ivy rank is 11 now in there. Last week, 2 weeks ago, it got up into the 40s.
Yeah.
So yeah,
We
definitely. been a good
sold
play.
puts multiple times. We
and the
had
stock is probably
strangles.
lower than where we sold puts.
It's gone lower, but not low enough. I mean,
Right. The
volatility
puts
has
have made money, is what I'm trying
yeah.
to say.
Volatility has been way overpriced
Yep.
there.
Yep.
Are Oracle bears too pessimistic? One analyst thinks the stock can rise 90%. Okay. A Deutsche Bank analyst sees limited additional downside for the stock, even under draconian assumptions, and he sees big upside if the company starts capitalizing on its opportunity. Oracle does not have any money. What are you doing in Oracle?
Looking for a rally. Can we have?
Yeah,
one,
we're
please?
right at
Do you
the
see
money.
90% upside?
It is up $3-4. 204. So
At this price, it actually does have sort of like 50-60% upside if it gets back to highs. So
Okay.
it's a pretty good ways to the 90%. I think that's a little lofty there, but
remember, it started the year closer to around $140-ish. It's 204.5 now. It's well off its highs of 320. I happen to be short puts in Oracle that are underwater. So earnings are coming actually December 8th.
reverse the entire move, which, it's a little spooky.
Little spooky.
It had 100, it had that face ripper, 120
Yeah.
points to the upside. It's
Yep.
now, right back to where it was.
Will
lower.
Larry Ellison be okay?
Oh, I'm sure.
Yes, it'll be fine.
Hey, Apple getting into it on the AI side of things. They're making a big shakeup. They are naming Amar Subramanyanya as the new VP of AI, replacing their previous head of AI. Apple has been a laggard in the AI race, which has actually saved it a couple times when AI, stocks get throttled. But they have been slow to add AI features to their products in comparison to rivals like Samsung. So they need to, they do need to get on it. So they hired this guy, and it's seen as a big shakeup. What are you doing at Apple?
Say what you want about being a lagger. I mean, it made new highs for the
Because
year
it wasn't focused on AI.
right, and all time yesterday. So it's down around 50 cents, but it's just a skosh off of all-time highs when the market hasn't made all-time highs. And Apple is a big part of every ETF that mirrors the market. So Apple, slow clap for them.
What's the IV rank in there?
6.
Oh, whoa.
It's been so
Gross.
steady. I mean, you got to be careful in here. If you got to do anything, you have to be directional in Apple.
Amazon and Google introduced a jointly developed multi-cloud networking service on Sunday to meet growing demand for reliable connectivity. Amazon and Google.
The Goog, Googl, is trading at around $3.15 and change, up around $1. It too made all-time highs maybe a week or so ago. It's just a skosh off of them. I mean, all-time highs were closer to $3.25. It's $3.15, $3.16 right now. But Google has been a straight upward. If you had Apple and Google as your two top picks, you did quite good. Amazon, AMZN, on the other hand, has had a lot more two-sided action.
Well, if you had Apple and Google, you're Warren Buffett.
That's right.
So-
That's right.
Well, but
Amazon-
he top ticked Google.
Yeah, okay.
He
Well,
got
did.
Google at like 300.
Yeah.
You can't give him that one.
Yeah.
But yeah.
He did the same thing in Apple many years ago. He missed the whole big move in Apple and then made it one of his overweights and benefited from it now, but he missed the...
He had it way back when.
Sure.
Ever.
Also, Amazon's going to start 30-minute deliveries in select neighborhoods in
Whoa.
Seattle and Philly. And I'm like, what are we doing?
We did a lot in Apple, like, kind of buying the dip in there a little bit early.
Amazon too.
Yeah, Amazon too. So Amazon.
And should they have 30-minute deliveries? Like, what are we doing?
Now don't they? My wife was telling me, like, you order one thing, and you can, even if you don't have Amazon Prime, you can order a specific amount of groceries too to get delivered for free with your order. That doesn't come with your order.
It's called an upsell.
Yeah.
It's brilliant. It's brilliant. I told my wife, it's brilliant. You got the guy coming here anyway.
Yeah.
But it came in 2 different deliveries, so they had 2 different. But again, they hit you with that.
Sure,
extra.
it could come from like different warehouses or whatever. But
It's like when you're about to click the checkout button and it says, "Would you like to add, this to your?" And you're like, "Oh yeah," and then the next one comes up. "Oh yeah, I need that too."
And that's why I've got like 9 months of methylene blue or something like that. I only wanted to try one.
Okay, no hay. Palantir has had its worst month in 2 years as AI stocks sell off. Thanks, Michael Burry. Palantir dropped 16% in November for its worst month since August 2023. Investors dumped AI stocks, including Palantir, on valuation fears. What do we do?
You know what? I put a trade on for my option trades today in Palantir, and it was kind of a bullish play. I did like a Jade Lizard, which is like a short call spread and a short naked put. So your heavy side is the short naked put. And the stock went nowhere but lower, but volatility really collapsed in there. Ivy rank is 6 now. I think when I put it on, it was around 40.
Oh, wow. So you got
a couple
paid.
of pennies from closing. I think on this morning's rally, if it opens $1.50 higher, I'll be able to finally close that trade. Never really took any heat on it.
Nice.
So Palantir had good IV rank. I think if you played it from the bullish side, you made money. If you played it from the bearish side, you had a chance to make money too. Palantir's been a decent trade. Now at IV rank of 6, might be
Tougher
a little-
trade.
Tougher trade.
Just wait till its next earnings cycle, maybe.
Yeah.
For it to get juicy. Hey, speaking of Michael Burry, he's back at it again. And now he says that Tesla is ridiculously overvalued, and he slammed Musk's pay package. His latest missive comes after the noted short seller took bearish bets against Nvidia and Palantir, and those paid off. In a Substack post on Sunday, he went off, "Look, take it up with Michael Burry. I'm just reporting the news."
Yeah, I don't know if it paid off for Michael. I think he missed some of the biggest moves in those 2 stocks that you just mentioned. Tesla right now, 430.
Did he short it, and then did it not go lower?
No, he actually shorted it. It went higher by about $10
But then it
or
went
so,
lower.
and then went lower, and now back to around where he shorted it.
Everybody wins.
Everybody wins, but the way that he shorted, like, you talked about it, Nick, better than I did. I mean, he bought out of the money puts. I mean,
And the
mentioned the
notional
value.
value of his bet was minuscule. So
Right.
Yeah, but no one's gonna click on that headline, Nikki.
I know, but it's like now he's
$1 billion bet against Nvidia.
Yeah.
Sizzles.
yeah.
What are you doing in Tesla? Who cares?
Tesla,
what he
Ivy
says?
rank at 8. These volatility
Ugh.
ranks are getting lower. /VX at 18 and change. $432. You have to be directional, and I think it's kind of right about in the middle of its range, from around 470 to around 370 or 380 or so. Trading at 430, 432 right now. Maybe an iron condor candidate, but Ivy rank at 8. You got to be careful.
I push back on these because I think a lot of people see these headlines and you get stuck.
Yeah, okay.
People use this as like an excuse not to do something because Michael Burry put, $3 million on an out of the money put position. The guy's got a $2 billion fund.
He closed his fund, and now he is a newsletter author. You can subscribe.
Yes, exactly. So it's just, there's for every one of these headlines, there's another headline on the other side. You got to kind of do your own thing and trade around it.
Did you just Aaron Rodgers do your own research me?
Kind of.
No, you're making good points, Nikki. This is why we have this segment.
Yeah.
This is a discourse. It's
Yeah,
not just one-sided.
yeah.
Hey, but on the other side of automotive news, GM stock just revved up to new 10-year highs. What? The automaker has a strong technical momentum. Shares have 100% buy technical opinion, and the stock is doing its thing. 10-year high for GM.
Woo.
A sneaky 10-year high, $73 where it is this morning.
I always in my mind think that it's $8, like from 2000. Like
That's Ford. That's Ford.
Oh yeah, Ford.
That's Ford.
Ford
Yeah.
has been like $10 for
That's fine.
15 years, I think.
I'm
Yeah,
mixed
GM
up.
was more like in the 40s.
Yeah.
Okay.
You know, 40 something, 35 to 45,
Yeah.
something like that. 73. I wouldn't touch it with a 10-foot pole, but hey, who knows?
Okay.
Ivy rank of 8. Get directional.
Yeah.
All right. Hey, Nikki, did you do any online shopping for Black Friday, Cyber Monday?
I got a couple things from Amazon that I needed.
Okay.
Like the new, not very cool things. Like I needed a new router.
Okay.
So I bought a new router. To get a little.
That you're getting old. New router.
Yeah.
You need a new spatula.
I actually do need, because I've been on my soup kick, so I need like a good ladle.
Ooh.
I love soup.
Like
I
I
want
need
a good ladle. Yeah, I have
Yeah.
a nice ladle. It's
The
nice.
ladle I have is the last
Ladle, ladle, ladle. I made it out of
like-
clay.
dreidel.
Oh, sorry.
The ladle I have is the last piece of plastic that I have in my kitchen.
Oh, you've
I got it.
purged your plastic.
I don't do any plastic.
You know, Nikki, right here, like where we are, is like restaurant circle,
Row,
like
yeah.
restaurant row. Like you could buy like a
You know
chef
that.
grade ladle for like $3. Like don't go to like Williams Sonoma and get fleeced. Just go up here.
I kind of like the
You
bougie
get
ones.
you get one of those big like metal ladles
super ones,
for your one person soup can.
But
that
you could
you're
get a really
making.
nice pot though from the restaurant
Yeah.
supply place. too.
Yeah. You get one of those big pots.
Hey, well, U.S. shoppers shrugged off worries about the economy after their Thanksgiving dinners and went on a $23.6 billion three-day bender online that exceeded analysts' expectations. Adobe Analytics said online spending for Cyber Monday up 4.5% from last year to around $9.1 billion. We don't have other consumer data because of the government shutdown, but we do have this spending data, and it could be a boon to buy now, pay later services, which saw a massive influx of purchases. So that's your Klarna, your Affirm, your Afterpay.
Buy now, pay never.
Hate it.
Yeah.
Buy now, pay later. I've said it for years on this show. Is the death of the consumer. I know the
Payday lending.
Yeah, I know the model works.
Yeah.
Meaning that, people are going to default and then they're going to sue them and then they're going to send the money to collection and they'll get pennies on the dollar and then those other people are paying 25% pay each week for the rest of their lives.
No, it's not an installment. Like as long as you make the payments, it's zero interest.
Yeah.
Yeah, if you miss a payment, then you
Right.
You get all the
Right.
accrued
All the
interest too.
Right.
interest,
Yes.
yeah.
I
that
mean,
is true.
it's wonderful for somebody who can pay it, and in
Sure.
6 months, you buy this furniture for X amount of dollars, and you didn't have to pay anything for 6 months, and then you pay it in one balloon payment at the end, and you got to use the money for free. It works. That's awesome.
The better thing would be if it actually spurred some competition between credit card companies to get
Lower
rates
that rate.
a little bit lower, but it doesn't because they're all in.
Yeah.
It's one big cartel, right?
one big
Really
cartel.
just MasterCard and Visa,
Yeah.
right? I mean, every one of them, MasterCard and Visa, in the back end, pretty much of all of these. Yeah.
But interesting to note, Walmart, you could check Walmart because I'm sure they're very integral to the Black Friday, Cyber Monday stuff. But their stock is going into the NASDAQ. So I just thought I would mention that. So because they are a tech company now.
Yes.
So Walmart going into the NASDAQ
They're online.
from the NYSE. So,
Heck.
I mean, Amazon is in the NASDAQ, and that's Walmart's biggest competitor. So, but yeah, I guess holiday shoppers, good luck to everyone. Please just spend what you can afford. This is so shady, and I'm so upset. And I don't know. Okay, I'll just tell you. So Zillow is dropping its climate risk scores because real estate agents complained of lost sales. So this very detailed data was like, hey, here's your risk for fires, for hurricanes, for flooding, for all of these other factors, for blizzards, for whatever. And so people are like, oh, great, I'm going to be an informed, consumer, and I don't want to buy a house that has a climate score that's a little bit higher. And so realtors were like, stop giving people transparency. And so Zillow caved to the realtors. And I love sexy realtors as a show for reality shows, but this is shady.
$73 and change. Ivy rank of 22 in Zillow, off its lows around 68. I mean, if you don't know that you're in a flood zone, I mean, they have to disclose.
Some of it is granular, though, like between neighbor. Like, I mean, it's data that not everyone, and for it to be so accessible instead of you having to go dig through, resources. But I agree.
Yeah.
But you also bought a house in Florida, so that's your, so.
Yes, I knew it was going to be hot. Okay, when I bought it.
You got hit by a hurricane.
Summers are going to be
Two
hot.
hurricanes.
Two hurricanes, right?
Yes, and hurricanes do come.
He's had more hurricanes than stays
Right.
at the house.
This is true.
I'm not
It's
taking
true.
advice.
It's true. Almost.
I'm not taking advice from you.
Yeah. I mean, you should know this, but
Yes.
sure. I get it.
Hey, this is crazy. A Sharpie maker. I didn't know Sharpies were made by a company called Newell Brands, NWL. But they are cutting 900 jobs, around 4% of its global workforce, and they are going to take $90 million in restructuring charges. I guess Sharpie says our markers are permanent. Your jobs are not.
I will
It's a good
say,
marketing campaign.
of markers, there's nothing quite like a Sharpie.
I know, but how often
Sharpies
are you
are
buying
good
They're
How
awesome.
often are you buying Sharpies? Because you buy them once and you're like, okay, I'm set
Yeah, not
for
that
life.
often. But they
But you lose them. I mean, they disappear.
Yeah.
disappear. But dude,
$3.80 stock.
can't
down.
get a knockoff. They don't have. There is no knockoff.
Yeah, that's true.
Sharpies
We used to
are
make.
good.
We would call them unis. Like you would break up the Sharpie. When you were tagging things on a building or something
Yeah.
like that, you would make like a bigger.
Oh yeah, you
like,
can make it because
fatter.
Yeah,
We used to call them unis.
Yeah, but think of like the global impact of all of the autographs that have been signed by famous people with Sharpies. Like, just.
So there you go. It's iconic. It's still a $3.80 stock.
I mean, my Taylor Swift CDs are signed.
That's right. That's right.
true.
That's right.
That's right.
That's right.
Hey,
Where'd you get that CD from?
Huh?
Who'd you get that CD
I
from?
got it from you.
That's right. You sure did. Sure did.
So,
Sure
Nikki,
did.
I'm actually his favorite. So,
maybe. Certainly not me.
hey, this is crazy. Stevie Cohen is going to run a casino next to Citi Field. What? He's partnering with Bally's. What? And the New York Mets owner got approval to operate a casino next to Citi Field in Queens as one of 3 projects selected for gambling licenses. Look, I had to Google because I was actually wrong. I thought he was banned from trading for life, and I was like, why would you let a dude who's banned from trading for life like run a casino? But I was wrong. He was not actually banned from trading for life. It was like a short ban, and like he couldn't manage money for like 2 years or 3 years. But then like now he could just do whatever he wants. But still, not a good look is if as soon as you type in his name, Google fills in is banned from trading for life.
Right. Early on in Tasty Land, when we first started, we had Stevie Cohen come to, pitch him to invest.
Oh, really?
Yeah, and he said this has no legs and will go nowhere. So he doesn't get it all right all the time, but I don't know how they do this right next to the field that he owns. I don't know.
Or were you a Mets fan growing up?
Say again?
Were you a Mets fan growing up? Or were you a Yankees? Or was it the Brooklyn
I was kind
Dodgers?
of a bandwagon kid when I was very younger. Like so Joe Torre.
Okay, yes.
Which-
he used to coach the Yankees. That's how I know.
The
Yeah.
Yankees. He lived around the corner
Okay.
from me.
Okay.
Well, his mom still did when I left.
Is Joe Torre your dad?
No. My mom was a good woman. My dad was a bad person.
Okay.
That's my dad. All my family members are my estranged family members who I found later on in life are all from my dad.
I'm
My
just
mom.
teasing you.
My mom was a saint, bless her heart. I think a virgin when she was married at 38. No, he's not. But so I was a bandwagon. Mets and Yankees. I kind of went both ways.
Okay. That's okay. It was the 80s.
Yeah.
I didn't know if this was like sacrilegious or if this is something that people in New York want is a casino next to Mets Stadium. But the
There are
Citi
no
Fields,
better betters than New Yorkers.
Citi Fields
they will
has, like, the
bet
best
on
food.
anything.
Yeah.
Cockroaches on the ground, anything. They will bet on everything. So it's going to be a win-win.
Hey, it is time for the holiday season, and a lot of people started decorating well before Thanksgiving, but now is officially time to decorate your homes. And this is how I would choose to decorate my living room. Yeah, I would not get mad at this if someone wanted to do this. Watch this.
It's beginning to look a lot like Christmas.
That's cool. That's cool.
Everywhere you go,
He's got his husky
take
up
a
there.
look at the 5 and It's glistening once again.
With the fire, too.
Candy canes
Very cool.
and silver lanes of gloom. It's beginning.
I would not get mad at this. Like, you want to bring the motorcycle inside?
I like
wouldn't
the
get mad.
videos of the supersized trees, like the people that buy the trees and they don't know how big they are because they're all wrapped up. Then they put them inside the house.
Takes up the whole
And
room.
it takes up the whole freaking room. It's so great. I love those videos.
That's too funny. Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We got confirm and send, and we'll take a look at the market. We'll be back in 90 seconds. Tasty Live. Good job to you.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send, where we go over your viewer emails. But before we do that, let's take a quick look at the market. Even the S&Ps, 68.45, up 18 and change. But look at this big move in the market over the last couple of weeks, down from right where we are right now, all the way down to around, let's just call it 6 and change. Back up to right where we are today. Volatility, on the other hand, 1810. Well off of its highs, making new lows after the roll. 1810, you can see as volatility just collapsed. When we talk about ramping up positions when volatility is high, certainly paid off. NASDAQ up, they're all up around the same. NASDAQ up 100 and change. You can see each one of these charts looks the same. Russell up 17 and change, and the Dow up 100 and change. Bonds might become interesting here. 116.02 down near the lows. Ivy rank is relatively low at 9 also, but on a directional trade here, maybe something to do in TLT or the bonds themselves, the bond options. Notes mirroring the bonds. As notes go lower, rates typically go higher. As bonds go lower, rates typically go higher. Bitcoin trading down to 86 and change last night, back to 88 and change. Really surprised at how well the market handled the sell-off in Bitcoin yesterday, if that's the reason why the market went lower back in mid-November or so. It's certainly that scare has certainly gone away. Bitcoin 22.7 back up 22.7. Up 2,270, almost a 2.5% move. Ethereum, which had a 10% move yesterday to the downside, is up 3% or more this morning. Oil down 40 cents. You were talking about it being interesting. IV rank of 23.
That was my ding.
That was your ding. Oh, so you just traded oil. Yes, you did. You sold
the 54 strike puts. We were talking about oil and volatility has, it's not high, but an IV rank of 23 is not, not too bad here in this market.
Yeah, and you're selling puts. You're getting small, going out of the money on those puts, right? You're selling the 22-ish delta, the 20-ish delta.
We haven't had 54 all year.
That's correct.
So 55 has kind of been the low. I think we got into the 54 handle briefly in April for like a day.
Yeah. And then had a big rally from there.
Yeah, so I figure, that's kind of my spot.
Yeah, no, listen, you're slightly bullish on it, right?
Neutral,
but you may put on bullish trade, so you have to be slightly
delta.
Gun to your head, you'd rather buy it than sell it at this level.
Yes.
And you'd rather buy it lower than sell it.
Yes.
Good job of you. Gold was down around 50 this morning when I woke up. It's down around 32. That's the first downtick in gold that we've seen. As you can see here with the market going lower, gold was going higher. Well, it was really kind of following the market. If you look at GLD, for instance, on what its correlation is, it's 0.31, a positive correlation. So gold has actually had a slightly neutral to positive reaction to the overall market. The overall market, the equity market, just off of highs. Gold is just off of highs. So it doesn't really have an inverse relationship at all. If anything, it has a slightly positive relationship to the market. Silver, you talked about it having even more of a move to the upside, and you can see here it just made all-time highs yesterday.
Yeah.
Silver has been on an absolute tear. Nat gas taking a little bit of a breather. It too has been on a little bit of a tear. And that's all I got. I think you have Crowd, CRWD, for earnings after the close, and then Dollar Tree, DLTR, in the morning. Oracle, we talked about real briefly this morning. Now, the stock is up.
Your Marvell, too.
What's Marvell doing?
It's got earnings after the close today.
Oh, does it?
Yeah,
I missed it.
Yeah.
Oh, you were right. MRVL.
Yep.
You trade Marvell well?
I know you don't.
I don't. I know. It's actually a dirty word for me.
It's not a stock that I would imagine you being talking about all the time. I know that you've traded it kind of in a tough one.
It's been a tough trade. Just to get back to Oracle real quick, just to get to the chat room, somebody was mentioning in Oracle that it has earnings.
The chat room?
Yes.
I go away for 1 week and the man is a man of the people again. This is great.
Yeah, you're a multifaceted gentleman. My eyes, like Santa Claus, are everywhere. I am always watching. I might not tell you I'm there, but I'm a voyeur. And they're talking about Oracle, like what kind of trade could you make if you were risk adverse and you want to take advantage of this 82% IV rank and you don't worry about earnings coming December 8th. Here's a nice, somebody actually pointed out to me, I don't have it. Here's a iron condor in January that's around, I know the stock is going to be up $3 or $4. Maybe you can move this 50, 60 to the 60, 70 and still get that 280, 285, $3 number that you might look for. But here's an iron condor where you're outside the expected move to the upside. Got a little bit of more move to the downside, but Oracle's already had that kind of move down. If you were slightly omnidirectional to slightly bullish in Oracle, there might be a play you can put on there in January.
You want to do something in the bonds?
Something in the bonds now? Sure, you can put /ZB.
Yeah, you want to sell puts. I know IV rank is so low, but I'd rather not be like super directional here. And just kind of sell 115s.
In January with 52 days?
I was looking at December, 24 days.
You can go in any month you want here because see here on the futures when this is something that I love about Tasty Trade. It shows you which future represent each month. So you can go all the way out to January and you're still trading the H futures. That's the code right there, H6. You're still trading the same future. So I would go any month you want to. If you go into December with 24 days, that's the monthly options. Yeah, sure. One tick wide markets here, pretty much one tick wide. You can get filled in anything. So sure, I have no problem with
16 handle has kind of been where we've kind of stopped out on the downside.
Sure. Go right ahead. So you're looking to sell those at like 42 going between the market? Yeah, I would 40. Wait. Yeah. The market was 41, 43. You improved it to 42. You can sit.
I did 40.
Or you can just get filled and eat up the one tick move. You don't care about the 8. What do you care about the 8? What's wrong with you?
Come on.
All right, confirm and send Tuesday.
You want the penny or the position? You got to put it on. I want the ding. I haven't heard the ding in a while. It's been a little while.
Well, it's more than a penny. It's 15.62. I said an eighth, which is a little bit less than 15.62. But
okay,
yeah. I mean, if I had your money, I'd burn mine for worthless. This Tuesday, December 2nd, confirm and send.
Whoa. When I place a butterfly trade, the platform says maximum profit. Is the width between the middle and the strike price less than the premium paid? So you're talking about, yes, so with a butterfly, it's whatever you pay, the width of the spread minus whatever you pay. However, if I have made more than the maximum profit by breaking up the butterfly and trading the individual legs, so if you're scalping out of this position, so I'm questioning why the term maximum profit is used. Yes, if you do nothing and ride it out to expiration, there is a maximum, but not if you work on it. Okay, can you discuss this? So yeah,
it's taking a lot of liberties here with first of all, you're breaking up here.
Well, but that's different trades. Like it's really as simple as when you put on a spread trade, it's binary. It's based on at expiration. That position at expiration. If you sell a put spread, you buy a butterfly, you do an iron condor. Those are defined risk, defined reward at expiration. If you start trading them,
becomes a different trade.
Those are those trades have happened. Like, if you're legging out of positions or adding to positions, like we get that question all the time of like,
how about it could tell the future and it's going to show that you're going to leg out of this, you're going to leg out it wrong, you're going to lose $125. I mean, like,
of course you're changing the risk profile of this position as you're trading around it, but your positions are synthetically there. So you put on that butterfly and you scalp out of one side of that position. You're still, that trade is on. I mean, we get that question all the time of like, I sold an extra spread, but I'm missing a leg because the long and the short offset each other. That trade is there. That risk is there.
That's correct.
So it's the same.
And if you would go on the curve view and take a look at it, you would see that risk too. Yes. But remember what you're doing here. You're talking about a butterfly trade. Butterfly trade is a very buying them is a very low amount of capital to be used. Which means low risk, right? You're usually paying around 10 cents, by 8 cents a dollar. So if you did a $10 wide, you'd be paying, 80, 90 cents for something that could make $1,000. You're paying $80, $90 for something that can make $1,000. And then when you split it up, meaning take one side off, all of a sudden your buying power and everything changes. Now I know you're long it, but now you have a vertical spread on it. You're playing with fire here. Yeah. You put on a very low risk, high reward, low risk trade. Just leave it as it is. If you break up the legs, that's your own business, but you can't look at it any other way. You got to show you the max at expiration. There's no other way to look at it. Yeah. I don't think. Next question, please. What is the purpose of a pairs trade? Does that add risk since you're buying one underling and selling another? Underlying.
I mean, so you're the trade like with the gold silver pairs trade that I did yesterday. Those two assets are separate, but they tend to move in similar directions with different magnitudes. And that's really what you're trading. You're trading, like if you say Apple and Microsoft are similar stocks and they're going to move in the same direction, and one is outperforming the other by 20%, that you're trading that pair. either for the one that's underperforming to catch up or the one that's overperforming to come down. And so that's really what a pairs trade is. Technically, with the two products, they can both go in the same direction for a long period of time. I mean, the gold-silver ratio can get even lower than where it is. It doesn't, just because it's at 73 and that's a low point, it can go to 60. I mean, like, that's not out of the realm of possibilities. But the idea is that you're offsetting risk via these two assets being long one and short the other. It's the same thing we do dynamically with our positions where you're, long delta in some stocks, short delta in other stocks. The market tends to move in one direction or.
Well, there are two. Let's start out with the opening of the trade, because that's the only thing that you can control. So they're two highly correlated assets. Yeah. And they've been highly correlated for some time, years even.
Yeah.
Gold and silver, the one you mentioned, has been highly correlated forever. And you have one that's outperforming the other. Now, you can think that one's going to continue to outperform, and you would buy that one and sell the other one. Or you can do what we usually do, think that the two, or the relationship between the two, is going to come more in line, and sell the one that's overperformed and buy the one that's underperformed, buying low and selling high. That's the way we look to do it. Yeah. But you got two highly correlated products that typically run in the same pool together at the same time, moving in different directions. Mm-hmm. Maybe there's something interesting to do. So you're not taking on more risk. You could lose in both of them. This one can continue going higher, and that one could continue going lower. That's what you alluded to.
Yeah.
But we play and feel that it's going to come back in line.
Yeah.
And that's why we say take off about 85% of the risk. Next question, please.
Why would you choose a ratio spread over selling naked put or naked call?
It's a great question, because it is, when you're selling a ratio spread, you're buying one and selling two. That's how we usually do it. We're buying one closer to the money and selling two further out of the money. So there is more commissions to it. I mean, commissions have pretty much been commoditized at a buck a piece or something like that, at least on tastytrade. They are. So the commissions aren't that big of a factor. But what you're doing is you're embedding a long spread in the direction you don't want the stock to go, especially if you're doing it over 45 days. Now, I've used them on 0 days and other places where you're just kind of making two long spreads on each side and selling a naked product here to finance those two, and you get a little bit of a kicker if the product goes up two or down two, your two embedded long spreads. For 0 day and smaller time frame trades, I love a ratio spread to put it on, because it moves a lot slower, uses the same amount of buying power, and if you look on the Analyze tab, you'll see that like kind of butterfly tent that people get, where you get to make a lot more money than just selling the naked options. Now, you do give up a little bit of credit. You could sell those two naked options if you were doing a strangle, or one naked option if you're just doing a naked put, than the ratio spread. But I like the higher probability of success of the ratio spread. The ratio spread moves it out from your naked put by a couple of dollars, and you'll give up around 20, 30 cents on the naked option. I think it's pretty good give up for the extra higher probability of success on the trade. I like ratio spreads a lot. They're a high probability trade.
Yep.
You want to go? You want me to go?
Sure. What would be a good way to get long either Bitcoin or Ethereum in a smaller size account? I have about $4,000 to trade with at the moment.
I mean, I guess, and ETHA would be the two for Ethereum that I would look to trade. I would stay away from BITO. I got some positions in there. They stink. Very hard product to trade. I know a lot of people talk about the big dividend that BITO pays and the long-term hold on it. I think it's a tough product to trade. I think IBIT and ETHA would be the two that I would trade. Do you have any others that you can add? Any other ETFs or anything?
Those would be
you get a little bit more into the weeds on this than I do.
Those would be the two, and I would trade them
smaller than you trade everything else, right?
Yeah, I mean, at this point, you could sell put spreads, or I think like call diagonal spreads if you're playing the upside are very, very cheap right now. That's the sort of setup. You want to do butterflies. Butterflies are an interesting way to play this too, because there's tons of call skew in both these. So if you want to do, a little bit longer duration, wide, cheap butterflies, I think those make sense here too. So.
All right, let's take a quick 90-second break and come back. We got an option jive next. This is Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Step into the futures arena with tastytrade's Active Trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
It's option jive. That's right, Nikki. It is time for an option jive. Are you ready for this?
I am. I will put two things out there. My Taiwanese sources said that lots of people trading the bonds this morning. 2,000 of those puts have traded. So
we're not alone, right?
We're not alone. And then I also saw somebody in the YouTube chat. Where are you? Let me find you. Steven alerted me to Tilray having a reverse split. It's now at 7 again.
They are 100% correct, and that's why you'll have the non-standard options. They're correct. It's a hard to borrow stock. I would run if I don't have a position.
Yes.
Tilray, from Tilray. Look for something else to do.
Yes.
You ready?
I'm ready. Let's do it.
Mastering Delta, neutrality, and strategic roles.
A very basic one. A refresher.
Awesome.
Let's do it. All right, so Delta represents a position's directional exposure. Delta neutral position is one that has no immediate directional exposure, so we typically put these on as Delta neutral positions. As the stock moves, you'll gain Delta. You'll be getting long Delta into down moves, short Delta into up moves. While a position can be Delta neutral in the beginning, this may change after the price swings in the underlying. This is known as dynamic Delta. With options, your Delta is going to change up to minute by minute, depending on the move in the stock, but definitely day to day, you'll see small changes in your Delta. Two common strategies that we use when we are Delta neutral are strangles and iron condors. So we'll kind of just walk through these two very basic setups here.
Okie dokie.
What's that? A short premium Delta neutral strategy is structured so that the net Delta exposure is close to zero. So one example of this is just a strangle. If we do a 16 Delta strangle, that's 16 delta on the put side, 16 delta on the call side. A lot of times you'll see that in equities like a Tesla or iBid or something like that. It's not necessarily. Oh, is that some? I think I've.
Oh,
That's not me.
That was a mistake.
A lot of times you'll see with underlyings and ETFs, skew comes into play here. So when you're looking at the 16 delta, do I have somebody else's account up in here?
That must be somebody else's account. It must be. I'll see if it's if you have it clicked.
Yeah. So when you have a 16 delta strangle, a lot of times, this will incorporate the skew. With equities, a lot of the times you'll see upside skew. So like a Tesla or an iBid or something like that, the call will be further out of the money, even though it's the same 16 delta as the put. On an ETF like a SPY or QQQ, you might see downside skew, which is put skew, where the put is further out of the money. So when you're going equal distance, it's not necessarily the same delta on either side. When you're using delta, you are truly delta neutral, despite the option being further out of the money on one side or the other. So if you're looking for the zero delta and totally neutral, you have to look at deltas themselves and not just the distance away from the stock price.
Good.
So time and volatility are primary drivers of a delta neutral strategy. So this is what you're looking for when you're delta neutral. You're neutral to movements in the market as a whole. You're really playing for that positive time decay, that theta decay, which is what you're playing for here. Gamma and Vega also come into play. You're going to be short those via short premium, which is something that you definitely have to be aware of. But overall, when you're flat delta, you're playing for kind of a choppy market and just time to pass, which we know obviously will happen at some point.
This is true.
Next slide, please. So delta neutral strategies are ideal for assumptions that aren't speculating on the direction of the stock's price, but instead that the magnitude of the future movements will be smaller and slower than expected. So you're really playing for that short volatility. You're selling volatility. You're selling that gamma, meaning you don't want whatever you're trading to move all that much. And you're long the time premium, so you are long that decay of that expectation of these big movements in the stock price. You're playing for sideways action when you're trading delta neutral.
Correct, and I think this is something that we've gone over a lot of times. Like you said, this is a refresher.
Probably hundreds of thousands of times.
Hundreds of times.
We do 8 hours of content every single day for.
And then trades that you talk about, yes.
And
yes.
we're not the only ones that talk about delta neutral positions. So
That's correct.
I would venture to say we are in a 6 to maybe even 7 figure.
For sure. Amount of time,
here. So the next slide here, while delta neutral strategies start with no immediate directional exposure, it will become directional if the stock price approaches one side of the trade. And this is totally natural. You start with, zero or close to zero net delta. As the stock rallies, you get short delta. As the stock goes down, you get long delta. This is what you want to do in markets. When things go down, you buy low, you sell high. This is
the only way I know how to do it. Some people think they can buy high and sell higher, or sell low and buy lower to get it back. I can't do it.
I mean, this is in every textbook: is buy low, sell high. So this is when rolling comes into play. So stock goes up. You have a short call that's now a 30 delta. Your put loses delta. So you not only do you gain delta on the short option, you're losing delta on the long option, the option that has long delta. And so this will affect your net delta on the position. So you get this short 20 deltas. This might even be the case and in this example, the stock is still in between your strikes. So a lot of people get hung up on the idea that, it's still between my strikes. Why would I do anything here? Well, if you don't want to hold any short delta, you'd have to manage this position. And at this point, this is when rolling comes into play. So when we roll, we try to reduce overall delta by somewhere between 25 and 50%. So on this trade, you've got 20 short delta. We would look to reduce this by somewhere between 5 and 10 deltas. We'd be rolling up that short put from 10 to 20 to a 20 delta option, 10 to a 15 delta put, something like that, where you're cutting your overall exposure by 25 to 50%. That's just
the mechanical kind of adjustment that we would look for in this trade. You can certainly be less aggressive. Like you can sit with this position, keep a little bit of short delta. That's totally fine too. This is just kind of our basic mechanics.
Very good.
So
I mean, delta's your own assumption on what you think the stock is going to do.
For sure, and you have to be comfortable with your own delta. Like we might take
be comfortable in your own delta skin.
That's right. A common question we get is what we mean by managing a trade. That's exactly what we mean. One way is just by managing the trade and by rolling it. Rolling is just a fancy term that means simultaneously closing our existing position and opening a new position. So when you are rolling a trade, we look at it as a continuation, but it's technically closing one option and opening a new option. We can change the strike, duration, or both. You can roll out in time. You can roll up and out. You can adjust the strikes. You can roll to a delta neutral position. You can buy the guts, sell the wings. All those things are just examples of managing a trade that you have on. So we look at rolling as a defensive tactic and a roll for duration to keep the dream alive and to adjust our deltas. We will only roll if our assumption is still the same. So, a lot of people get a little bit dogmatic with positions.
Mm-hmm.
If you don't want to be short, change the delta. Like you might have to eat a little bit of a loss on a position. But overall, make your trades the assumption that you want. And it's not what you want. It's not what I want. It's whatever you out there wants.
Correct. I don't know where the ding's coming from.
I don't know. Next slide, please. Yeah, so the new delta, directional exposure of the delta neutral trade is the opposite of the stock market. So the impact of the stock's movement is going to change your delta. So an increase in the stock's price, you will get, if you're trading on both sides of the market, you will get more short delta. Stock goes down, you will get more long delta. And when you're managing the trade, you're doing the opposite of whatever's happening in that stock. This is why we're rolling down calls, ideally, into an up move in the stock. It's probably had a pretty decent down move if we're looking to reduce delta. So you're doing this into the opposite move in the stock. That is the optimal time from an extrinsic value standpoint to make those adjustments. That's why we say, when you get a little bit of a move higher, we're looking to roll down calls into that move because you're getting paid the most to do that because the stock price is higher, you're getting more short delta.
That's correct.
Last slide here. So strategies that are delta neutral can profit from time decay and or decreases in option prices, and this comes into play with volatility and to some extent gamma as well. Delta neutral positions will become directional if the stock trends in one direction, in which case the position's directional exposure can be adjusted by rolling. This is what we mean by managing a trade. We're just reducing the overall directional exposure that we have in that underlying. And typically our management point, or at least what we're looking to do, is 25 to 50% of the overall delta of that position.
Well said, well done, good refresher on looking at delta neutrality and strategic roles. I mean, something that I think we've done ad nauseum, but something that always needs some refreshing. So good job out of you, good job out of the team. Market's refreshing itself too, getting back to its winning ways, up 21. We'll talk about that in the opening bell. Really found these messages from our sponsors, which are really just us. We'll be back in 90 seconds, Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Grow a strong community with Tasty Trade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live. That's right, with the opening bell imminent. But first, let's take a look at the market. Even the S&P's up 21, just a skosh, couple of handles off of their highs. You can see here we've been flirting with highs. Really kind of a tight move lower yesterday. Surprise with Bitcoin going all the way down to around, 84 and change. It's now 89, $5,000 move off its lows. Up 3,200, up almost 4%. Ethereum, which was down almost 10% yesterday, is now up almost 4%, up $100 or so. Oil down by 37 cents. Bonds continue to go lower. They traded just under 116 a moment ago to 115.28, back to 116.02. Volatility collapsing, down 34 cents. You can see here biblical portions here over last week from around 22-ish. Incredible move. I mean, really, when you think about the market, I mean, the market's moved higher, and it's gone higher in a nice fashion, but the way volatility contracts and being mean reverting is just unbelievable. Gold, which was down almost $50 at one point, only down 13, catching itself a bid. Silver, which was trading down to 57.2, is almost up to 50. That's a $2,000 move, 1,800.
It just rallied $1 in the last 15 minutes while we did
$1,000
yeah.
in notional, $1,000 for the future. Big one if you use the / SI. So yeah, markets moving, and we're here to take care.
10,000 in the silver futures.
Sorry, a point is 10. A point is 1,000.
Or is it 1,000 in the
$1,000 a point / SI?
Well, the multiplier is 100 on the SIL.
I'm looking at / SI. No, it's it's $10,000, right? I'm looking
per dollar.
Per dollar.
1,000 on the SIL
SIL that we've been
which
using.
is 1,000 ounces versus
10,000. Yes, you're right.
Yeah.
Great catch.
The silver futures,
huge.
That's a huge. The $10,000 in 15 minutes.
Even I trade / SIL. I don't I rarely trade silver. Gold, been trading some shorter dated trades in gold. Volatility's been okay. Pardon me.
Okay. Do we have a do not resuscitate, or would you like me to resuscitate?
No, resuscitate me. I want to stay around. I want to stay around. I want to stay around. Resuscitate me. I don't have a do not resuscitate.
Okay,
I want to go on record. It's forever here. resuscitate me. If you're pushing people back, saying he has a DNR, don't. That is wrong. That is false. That is not true.
You already acknowledged that that the nest egg will be gone by the time it passes.
Praise be.
So I might as well keep you around for a little bit longer. Yeah, I got no upside to let you bleed out.
Thank you, man. I appreciate that. I appreciate that.
Never.
And if you have a friend, maybe you want to refer a friend here to Tasty. We have about 30 seconds, maybe 20 seconds. We have a refer a friend bonus here for you. So please, you get 100, they get 100, earn up to 2,400 total when you refer friends. You can take that. What are those things called? Those black boxes? What are they? The QR code? Is that what that? What is it?
Yeah. That's
yeah. Beautiful. Beautiful.
Yeah.
All right. There's your
Keep
opening.
us employed.
There's your opening bell. Thank you so much for that. Even the S&P's up 18 and change. NASDAQ up 105 and Russell up 15. Dow up 133. PLTR is a trade that I'm looking to close out for a small profit here. Needed a little bit of a rally. Got a rally. It's up $3. I need another dime to close that trade. What do you want, the dime or the position?
Ooh.
I want the dime.
You want the dime? Leave it. You leave them in. Like
I do.
If you're a GTC person, you gotta stick to the GTC.
Yeah, I think so.
You can't.
I think so.
You can't massage it. I will point out Boeing.
BA, yes.
Up $11 right now. The call diagonal spread. I think this was this something you?
Yes, it was something.
For an option trades.
Yes. Go for it.
You're making back a bunch of.
I've been waiting for this for quite some time.
So do you scratch it or you leave it on? You let it go. You got 200 right there. Keep a little long delta there. What are you thinking?
Well, I got us in. You can get us out. There you go. How about that?
I like it. I think you keep it.
Okay, good.
Let it see.
You're short the 17-day option, and you're long the Jan 45. Now, you could take that 17-day option if you want to. I mean, what is it? The 210s, right?
Yeah.
It's only trading for like $1 and change. Maybe you can close those and take it from, December and move it into January and just have yourself a long call spread on. You'd be rolling from December if you wanted to take the December 210 calls. Markets aren't the greatest in there, and selling the January 210, which you could, maybe pick up another $2 in credit. Then you'd have a long 200, 210, basically an at-the-money 50-50 shot to the upside in Boeing, or close the whole trade right now. It's entirely up to you.
I rolled this circle position. I think this is a close.
Did you get filled? I don't think you got filled.
No, I rolled this yesterday. I didn't do anything in Boeing. I'm letting you do that. That's you.
Oh, okay. You want me to do it? Got it. That's your circle.
Yeah, vol has come in pretty significantly there. You got a little bit of an up move too. I rolled this yesterday. It nets out to be about a $200 loser, but we sold this, the 80 strike put for $2 on the 21st. The 21st, the stock was trading, or I'm sorry, that was when I sold the call. The put, the 80 strike put, we sold on the 11th. Into earnings, the stock was trading at, let's call it 100.
Okay.
You took about a 25% move to the downside, $25, $30. I mean, this got as low as 65, 66-ish. Got a nice little bounce here. I figure we close this position and move on from that one.
Beautiful. Why not?
So that one's out. CoreWeave is another one that I have in that realm as well. We have the 80-90 strangle on here. In December, do you take this and roll this out or just close it? I don't have a lot of positions.
You don't have a lot of positions on, so we might want to roll it.
All
right. I mean, that's what I'm thinking. If you don't have a lot of positions on,
you got some trade ideas too. Throw them in the chat for us, because
sure.
Some. I know we got what's your assumption tomorrow?
Let's take a look at what is moving. Some of the buckers. You got Costco down around $6, Adobe down around $3, Lilly down around $3, Baba down $2 and change. Some of the Chinese stocks, PDD, down around $1.40 or so. Tesla unchanged, down 80 cents. On the upside, you got MDB, Mondo, which Vanetta talked about, up $79, untradable.
That's your Boeing.
Yeah, I rolled it for $2.35. It was around $2.40 mid-price when I started. Not the greatest markets there. APP up $31. Boeing, as we just talked about, up $10.90 and change. MSTR up $7.90. That's a big 4.5% move in MSTR. Coin up $7. Palantir up $4.50.
This move in silver, I was excited. I was like, oh, I caught it. I top ticked it. Now we're back to
right back. It's unbelievable.
I mean, it's a huge, huge move. And I got shorted via SLV as well.
Mm-hmm.
I mean, I'm wrapped around here. I guess I'm taking some heat on the futures, but man, it looked like it was going to be perfect.
It did look like it was going to be perfect.
And if you while I was on the plane, silver was down.
If I was taking care of your position,
I know I should have texted you. I was gonna do it, but I didn't want to. You're on the phone.
You thought you had them. Let's be honest.
I thought I had them. I thought I was like,
it.
because I did get gold. I got that gold move. I had a couple contracts there. That was a good one. But last night, silver was down like 3 or 4% at one point, and gold was only down like 0.5%. That spread, which is you're trading that difference between the move in gold and silver when you weight them 2 to 1 because you vol adjust it. I was like, man, this has been as good as it. I was like, can this just hold until the morning? And it didn't, obviously.
Can I please?
Come on.
Even the S&P is holding steady, up 19. Let's take a look at Apple just for a quick second because we talked about Apple making new highs, trading just under 284. Apple's high is 284.25.
Mm-hmm.
Apple going higher, Nvidia going higher by $5. I don't see how the market can kind of sell off. You've got those two moving. You've got now Bitcoin taking a little bit of a move to the upside too.
1670, unbelievable.
It really
All
is.
futures are in 35. They're almost below 18.
Down by another 2%. Big move in volatility.
Does that spook you? The velocity of that, or the magnitude of that vol crush?
No, what spooked me was the magnitude when you look at it from a weekly point of view. The way that Thanksgiving week was such a bullish.
It was just a quiet 4% face ripper to the
yes. I mean, big move to the upside. That was the one that kind of took me by surprise.
But so now with
we
that,
talk about. I'm sorry to interrupt you.
Yeah.
We talk about how Thanksgiving can be that week can be a quiet week. It was nothing but there was plenty of movement on both sides, and you had plenty of opportunity. And the face ripper to the upside. Holiday season is definitely here.
But does that spook you now with where volatility is, given that we've had that, kind of nobody even knew that the market. I mean, my mom was not talking about the market being up 4% last week. She had no idea. She was still thinking that it was.
Now I'm scared. I wasn't scared until right now. Now I'm scared.
Does it scare you that you get
It's reaching the mountains of Arizona. I am scared.
Well, no, it didn't reach the mountains.
She wasn't talking about it.
That's what I'm saying.
Then I'm not scared. Then we're good.
Okay,
then we're good. I thought she was talking about it. I was like, oh my God. Stepping out of the lane.
But with vol this low and us just bouncing straight back to highs.
I think there's enough noise, and some of these stocks have gotten beaten up. I mean,
there's a lot of noise.
Yeah, there's a lot of noise. I think market climbs the wall of worry, and that's what it's been doing.
I kind of agree with you.
All right, just listen. I can't keep this man waiting. He's from the CME. We have to bring him in here.
Closed out of just the put side of the iron condor that we did with Craig last time. So I'm leaning a little bit with a little bit of short delta.
Oh, going against the
Remember we
Grand
did
Kuba.
this.
All right,
the 7,000, 6,200 was our iron condor. You had a little bit of a rally, just took off the put spread.
Beautiful. Now that's taking a little bit of a leg, right? I mean, that's your directional bias.
Legging out a little bit, but the premium that we sold there, it's gone to basically zero. I bought that back at $50. To hold that risk, you've realized that value on the way up.
Sure.
Now you got to kind of. Sure. I mean, the trade hasn't. The position as a whole hasn't moved.
Very good. Very good. All right, listen. It's time to take a quick 90-second break. You done talking yet?
Yeah, I'm done.
You sure?
Sorry. Right.
We'll take a quick 90-second break. We're going to come back. We're going to talk about futures in focus. The CME. We'll be back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Niggy, we are back, son, and we are joined by a celebrity. I'm talking about Craig. He sponsors this from the CME. How are you, my friend?
Awesome. Thanks, Tony.
It's a beautiful quarter zip, man.
I'm getting
with patches?
Yeah, I'm getting a lot of comments on this
You
one.
know what?
That kind of looks like it's like suede.
It is kind of
ultra suede. Leon Stellings, is right. Dear friend of mine from the CBOE. I know we're not allowed to talk about them when it's your segment, CME, number one. But hey, he always wore an ultra suede jacket, and when I see that, I think of him. So Leon, wherever you are.
Yeah, I'm getting a lot of comments on it. So I'm glad to be back. I feel like my
makes you smarter. Right? yes. If you have patches, that was always
smarter, right?
That was always.
Yeah. No, I'm glad to be back. I feel like my pilot got picked up. You know, I was a little
It was
nervous.
sweet weeks. Your pilot got picked up. We got two more segments for you. That's very good. That's very good. Did you work on that all weekend?
No,
it was just off the cuff. You're learning, man. You're learning. I love this. We're gonna be good friends. We're gonna be friends.
We did get some good feedback on it too. I mean, futures. We don't do a ton of segments on futures, and so it's nice to have this kind of like introductory segment on futures specifically. So a lot of people have been trading the micro contracts, which, we're getting into MES versus ES today.
Yeah.
But a lot of people trade the micro NASDAQ, even like some of the silver and gold products, like right now, obviously with silver and gold kind of in the spotlight.
Right.
These have been, some of my favorite things to trade. So
Yeah, it's great for us because, like you said, a lot of people are, but this gives us a chance to kind of demystify it a little bit, right? And, because it's not rocket science, I think we said last time, but there's some things you just have to know.
Sure.
You talk to Pete Mobat, he is a rocket scientist of futures, though, I will tell you that.
He is.
He gets into the weeds of platinum futures.
Right.
And those are fun ones.
I always say some things are good to know and some things will make you money. This is one of the rare things that we're going to go over here. That
A little bit
this
of
is
both.
a little bit of both. Like you need to know this to make money.
Right.
I mean, some of it gets a little bit into the weeds, but a lot of it you need to know to make money. So get your pen and paper out or take a look at these slides because they're going to be very beneficial to you.
Yeah.
There you go.
So good job. All right, Nikki, bring us home.
Let's do it. Everything you need to know about ES and MES. This is the S&P 500 futures contracts here. So the E-minis, a big contract, obviously, 50-point multiplier. MES is the one that we've been trading a lot of, scalping a lot of this. We didn't today. We might have to do that. 68.50 right now. This might be our spot. Get a little bit of short delta, maybe.
Up 68.54 is the high, 68.54.75.
Yeah, I mean, that multiplier, Nick, right there, to me, is one of the biggest hurdles that people have to get over that have never looked at futures, right? That maybe are stock traders or stock options traders, because that's one of the fundamental differences, right? And if you're used to trading equities, you're used to trading per share.
Yeah.
Or if you're trading options, right, obviously it's 100 shares on an option. With futures, it's different. It's that multiplier that you just talked about, which on the ES is 50, right? Well, so what does that mean? Well, that means that the amount of exposure that you're getting in the S&P is simply 50 times the 68.50 that we're trading at. So call it $340-ish thousand. So on the E-mini, one futures contract is going to give you $340,000 worth of exposure, and then the micro obviously is 1/10 of that.
But the great thing about this is obviously the leverage that you get here and the margin requirements on the ES and MES are super capital efficient. So, one of the questions we get all the time of like, I got a little bit too much short delta here.
Sure.
What do I do to manage those positions? These are the cleanest ways to manage delta exposure from a portfolio, especially if you're trading individual equities. Getting, trading an MES that's 50 shares notional versus an ES contract, which is 500. That's your multiplier. It's a quick way to get some capital efficient delta at only $12,000 to $15,000 for an ES contract. That's a lot. You get a lot of bang for your buck on that position.
Yeah, I think it's typically in that 5 to 6% range. So you're only putting up about 6% of the exposure you're getting. And that's true of both the mini and the micro, right? So if you're getting $34,000 worth of exposure on the micro, you're only putting up, let's call it $1,500 to $2,000 or whatever the margin might be. And it does change, with volatility. As volatility goes up, sometimes margin will go up a little bit. But it's usually in that sort of 5 to 6% range, compared to, the securities Reg T requirement, for example, which is 50% minimum, right?
Yeah, a lot more capital efficient and the 24-hour trading.
Yeah.
23-hour, I guess you get the one low.
What do you consider? What is it?
23 by 5,
23
right?
by 5.
So we open on Sunday evening at 5 p.m. and we're essentially open until Friday afternoon at 4 p.m. This is Chicago time. We're in Chicago.
Central.
Central. With that, as Nick just alluded to, with a break between 4 and 5 Central time, a maintenance break essentially. So yeah, call it 23 by 5.
So is it maintenance so that people know this? Is it maintenance or is it marking of the futures? Do the futures need a mark to them?
It's more of a legacy thing where we recycle, and the servers and stuff like that. It's really a technology maintenance thing.
Sure. Cool. Good to know. I didn't know.
So getting into just the margin of these products, so we obviously talked about the $50 versus $5 for a point in the E-minis versus the micro E-mini contracts here. This gives you an idea of the typical margin that you have here and just how much you can expect to swing. The margin requirement and the size of these products being so small allows you to hold these positions too, because you can kind of withstand some of these moves. The margin doesn't explode on you on these positions. They kind of stay in that same range here. So a lot of people that I talk to trade these as kind of long E-minis and then scalp around it with MES. You do get that span margin relief between the two, which is another awesome feature of futures, is that it's all kind of bucketed into one margin requirement, whereas with just equity options, they're all separate. They're all margined individually. So here you do get that kind of margin relief across the two.
Yeah, totally. The futures are going to, obviously, if you've got micros on with a mini, that's going to be a reduction. Then we're going to get into options, I know, but options are also going to get thrown into that bucket as well. If you're long deltas in options and short deltas in the future, that's also going to come into play in that margin requirement. So, Nick, the thing is, too, it's not just for individuals. That's, one of the reasons that institutions all over the world trade futures is for that capital efficient nature of them, right? And it's certainly one of the big reasons that we see, what we call retail traders trading the futures.
Yep. I got to throw a little shout out to the Tasty Trade platform here. On your upper level there, when you're looking at all your beta weighted deltas, if you have futures and options, just a big position across the board, it will beta weight your delta for you to the ETF it represents, so that you can look at, you have 50 positions on and you have 5 or 10 futures on. It'll take all those futures and match them to the ETF that they equate to, and then give you one number that could be in futures if you want it, or it could be in shares of the
right, because it's regardless of whether it's the Spider or the E-mini, it's the S&P 500.
There's a share equivalent to it.
Yeah.
Yep, very, very cool.
We got the active trader tab that we got to mess around with too. A little bit more on the show here.
Yep.
Cool little ladder.
The ladder now,
that you can trade on. That's one click, and you can move your orders. You could trade pretty fast with that thing. So it's a good time on that. In terms of just like trading workflows here, so we obviously mentioned these are open 23/5, which gives you that access at all times, which is great too, because if you're a little bit smarter and quicker than I am, you could have closed your short silver position last night when it was down 3%. But that's one of the benefits of futures, is that these trade 23/5. You get a lot of liquidity throughout throughout the whole session, just because it's one of the most, if not the most, liquid product out there with the mini futures.
Yeah, I think one of the sort of more valuable inadvertent commercials that CME got happened back in November of 2016 during the presidential election, because Carl Icahn came out in the press the next day and said, I'm sure everybody remembers this, that was the election where the polls said that Hillary was going to win. Results started coming in for Trump, and the market initially broke, right? Yes. It broke hard on that. And Carl Icahn came out the next day and said he left an election party and went out and put on a bunch of E-mini S&P futures. And he said the amount of money he made, I can't remember what it was, but that was because that was the market that was open. When that volatility was happening. So he gave us a nice little commercial for our E-minis that night. But you're right, though. Like, that can happen at any time. You never know, when an economic report overseas or a geopolitical event could happen overseas, and the market moves at night, right?
Yeah, and now you're looking at from taking advantage of a move. There are others that could take advantage of existing positions, right?
Exactly.
Go back to that beta weighted. You have a position beta weighted. Even if you don't have any futures on, equity markets aren't open. There's nothing you can do there. Market moves in a direction. You could then take your micro or your mini and use that to neutralize your overall position, basically locking in that profit or locking in taking some of the loss that you don't want to have occur if it moves in the same direction more than you want it to. Again, something that's open. And the markets are one tick wide.
All night.
Yeah.
Right, all night. And
we're
that's
talking about MES at least. Yeah.
Yeah, exactly. And that's a great point, Tony, because if the market moves and you don't have access to your position, then you're basically relegated to hope.
Sure.
Hope
and nobody wants
never
to
been a good strategy.
Never,
right?
ever.
And we have a spread up here on the image that you see on the right side there of a 100-point wide spread in the E-mini futures, but spreads as well, you get that margin relief too. So, one of the things with equity options is that it's your risk, however small the probability is on a spread trade, is margined to the full risk. It doesn't really incorporate any of kind of the dynamic risk parameters that are built into options. I mean, we know that a 5 delta option has a 5% probability of being in the money, but the probability of losing the full loss on that is very, very small of a spread trade. And so with spreads, you get that margin relief as well. And that incorporates volatility, time, how close it is to at the money. Yep. So like all those things kind of are dynamic with that position. It's another great feature of futures.
Yeah, we call it SPAN. I believe it stands for Standard Portfolio Analysis of Risk, and it goes back decades, right? But it's the margining system that CME uses, and we're on to SPAN 2 for most of our products. We've recently rolled out a more advanced version, or the next generation rather. But you're right. It takes into all of that stuff, vol. It kind of creates like a delta of your position. So, like I was saying before, if you're short here or long there, it's gonna take all of that into account. So we call it very efficient. Now, the one thing that we haven't said, and I don't talk about the leverage or the capital efficiency of futures without pointing out that it can work both ways, right? And I think it's only fair to point that out when it can be a powerful tool, but you've got to use it responsibly.
Position sizing is a huge...
Use it for good, not evil.
Yes.
Exactly, Tony.
But it's something to keep in mind that, when you are looking at futures, you have to account for potential volatility and changes in the asset prices as well. So, sizing comes into play in all facets of trading, anything that you're doing. It's always about size. It's why we always talk about trading small and trading often.
Yep.
Just a little bit about futures here, just some of the things that you can do here. I know a lot of people are scalping this. We scalp it from time to time as well. With futures, you can trade along the curves. There's a lot of dynamic things you can do with a lot of the other products, like when you're looking at some of the ags, there's a curve there. Natty gas right now going nuts to the upside. Even if you're looking at like gold and silver, pairs trading, two highly correlated products. Those are things that you can do with futures, and they have the same sort of weekly, quarterly, even daily expirations for a lot of those options as well.
On the options side, right, and we're talking about options now, and a lot of people don't realize that you can get very similar exposure using options on the two products we were just talking about, the E-mini and the micro E-mini S&P, as you could with like Spiders or SPX. Mm-hmm. You get that same margin efficiency with options on futures. They trade overnight. There's a couple fundamental differences, but I do a presentation called An Option is an Option. Mm-hmm. And the whole point of that presentation is to show, like, if you already know your deltas and gammas and vegas and thetas and what vol is, which, tasty traders do, then you're 95 to 99% of the way there to being able to trade.
Yeah, there's only a small number of nuances between the two of them,
Right, exactly. And, one of them I think is fair to point out, and some people actually like it. An option, if we're talking about, let's say, a daily option on a future on the ES, and you're in the money, it will be delivered, right? So then you'll have a future that you'll have to be able to manage, whether that's holding it or sell, if you're long, you sell, whatever.
You can wheel it. It's the same mechanics apply. I mean, if you're long the futures and you sell a call, it's a cover call type.
Exactly, right.
So rose by any other name.
Yes.
Right.
Just as sweet.
It's the same.
A call spread's a call spread, right?
Yes.
And a butterfly's a butterfly.
You want the same thing in the market to happen.
Exactly, right.
So some of the use cases here, obviously for futures, reducing portfolio risk, and this is separate from stock positions. So using the E-minis or the micro E-minis as kind of a way to hedge your risk. Really easy, really accessible way, and the sizing is obviously variable here with the MES a little bit smaller if you need to get a little less delta exposure. Of course, overnight risk, so you can manage your exposure in the overnight session. You mentioned the election. You weren't able to trade any Apple shares while the market was, lock limited. down 7%. I think we had 2. Did we have 2 limits?
And that night, there may have been.
I think there was like 2 or 3 to the downside, and then one or 2 to the upside. And by the time we opened, we were up like 5%. It was like
all the way back. Yeah,
unbelievable. And that's the event volatility. You can also trade around all those sort of things. So a lot of those events that happen pre-market, a lot of the CPI, PPI numbers that come out. Right. A lot of people trade those, scalp them. You can use the active trader tab as well for that. But that's one way that you can trade them here. Of course, you got like directional exposure. So if you want to get kind of a leverage up or downside exposure, you can do that. And then, of course, you can define risk. So you've got options there. You can sell calls against futures. You could do call spreads. You could do iron condors, just like you can do with any other equity stock or options there.
Totally. And that's exactly what we were saying, is a vertical call spread is the same in a future as it is in a securities world. So, and a lot of people don't realize that. And they don't realize that they can actually trade options on these things.
Good point. Hey, to put you on a spot before we get to the next slide real quick, you don't know, and that's okay. Over the years,
Craig knows everything. Come on.
Oh, geez. Now you did it, Nick.
Retail investors, like futures were always, and you mentioned it in the beginning, we were talking more of a institutional dominated product. How much has it grown on the individual investors side now over the last decade, last year, last 5 years? If you have any kind of
we've had double-digit growth in the number of futures traders for. Let's not quote me, but for years now, right? So it's really exploded. If you go back to COVID and we saw this explosion in retail trading, right? And obviously there were, we all know kind of some of the impetus behind that and everything. But we also saw a step function up in futures too. So we, kind of that rising tide thing. So we did see, explosion in our futures business that year. But really since then, it's continued to grow, and now we're getting into these new markets and things like that, with prediction markets and all of that stuff. So, and all of that is at some level is the same wallet share, right? And kind of like, to me, if you go back to 2020, that's when crypto, retail trading or investing in crypto was kind of exploding. Yeah. We've obviously seen an explosion in options trading, right? Yeah. I mean, that's been well documented, I think, in the securities options trading, quote, zero DTs. I've never loved that term, but options that expire on the day that you trade them. Because zero DTs have been around since they invented options, but back then there was only 4 times a year that it could happen.
That's correct. Yeah.
Now it can happen every day, right? So zero DT is not necessarily new, but all of that stuff has really, is contributed to the growth, and we've seen similar growth in our markets, Tony.
Very good.
I think that's also a function of just the retail trader getting a little bit more capital efficient and looking for that leverage as well, is why they're looking at these products. I mean, I can't remember a time pre-COVID where my mom or my sister would text me about markets, and I think that's kind of what we're seeing now, is that people are looking at markets in a lot of different ways now.
Become more sophisticated and tools
worldwide now.
Look at your platform, right? Yeah. Look at the tools that are available to traders now are so much greater than they were 20 years ago, right? Like, you have institutional grade software for trading, for retail traders now. So, and it's younger and younger, and the younger generations become more sophisticated in what they're trading. So I think all of that, points to, I think a lot of opportunity for both of us.
Very good.
For sure. Getting on to the next slide here. So just a couple things that you can, a couple things that you could do around trading E-minis as well as the micros. We talk about some of those things on the previous slide, but data releases are important. FOMC meetings. You have some of these kind of binary events like elections and overnight tweets you can trade around as well. All these things are kind of accessible with futures. That's unique versus equity options that close. So
futures are like, just because we do a lot of equities here, we always dabble in futures too. But futures for news are like equities moving pre-market for earnings. You know what I mean? Try to equate it to
like
an
indicator almost.
Yes, like an indicator of what's going to happen. Now, obviously, anything can happen on the opening, but that first jolt of news really does affect the futures. Now, it might be quick and fast, but it really does affect the future. So you really do have to need to know it.
Yeah, totally. And, this is a great slide because it kind of points out some of the things. Like, you have to know all of this stuff is coming out. You shouldn't say have to. You should know.
Right. Some things are good to know.
It's predictable. Good to know, right? And it's different, right? Because you mentioned gold and silver. Well, different things are going to affect that market than might affect equities. Or, if you're trading crude oil futures, you want to know if there's an OPEC meeting coming up, right? And these kind of things. So, this slide is good because it points out some of the stuff that could impact the equity markets, but there's different things that affect all of these markets.
Sure.
It's funny because we have, high impact on like a CPI or non-farm payroll. Prior to COVID, I don't think I even thought about any of those. Like, I don't think, did you ever trade a CPI report?
Well, I traded bonds back in the day in 2000, 99, 98, 99, 2000, something like that. So then I would know of them.
Like CPI, something that you put on your calendar, like, oh, I got to...
Yeah,
At that point it was?
Yeah, when I traded bonds, for sure.
The electronic.
Well, did you trade through 2008 and 2009, right? Because that, we had an interest rate.
Yes.
And then all of a sudden, after we didn't have an interest rate, and it wasn't that we didn't have an interest rate. It felt like we were never going to have an interest rate again after the what they called the financial crisis in 2009. So it didn't. Right? It was at zero and they were stuck at zero.
Yep.
So now we actually have an interest rate and these things matter.
Yes, because interest rates move.
Yeah.
And interest rates are interesting.
Right.
Next slide, please.
So just talking about some of the efficiency here and just kind of the risk management. So obviously you have leverage, and that goes both ways. You have overnight trading, so a lot of events that happen in the after hours or before the market opens are tradable with futures. You have changes in volatility. That's obviously a big part of futures and the margin that you have there. Settlement. So some of these futures settle to cash. Some of them settle to the futures contract. The options do. So you have to keep that in mind as well. And then just margin requirements can and will change. That's one of the biggest differences between equity options and futures is that you have that dynamic buying power usage on those positions that'll change based on movements in the futures themselves. And so you got to keep that in mind. Always comes into play with any trading is position sizing there.
Yeah, we talked about the option settlement, how they settle into futures if it's in the money. It is worth pointing out because one of the sort of common misperceptions of futures with people, like I'll hear at events, retail events, I don't want to trade futures because I don't want an oil tanker showing up in my front yard, right? Since we're talking about the S&P now, it's worth pointing out that if you are trading the micro or the E-mini S&P, that if you hold that till it expires, it just cash settles and goes away. There's no delivery of any sort of S&P certificate or anything like that, though there are some futures that if you're trading them, you want to know when they expire because they are deliverable. Now, the reality is tastytrade's not going to let a retail customer go to delivery in one of these things, but you should be aware of that.
Yeah. Tom did take delivery on a silver.
Years ago.
Years
and years ago, going back into the 1980, 90s.
I did an interview with Tom a couple months ago, and he told that story, and he sent a clerk out to go pick
it up with the shopping cart, right?
I think it was like 300, 400 pounds worth of silver because it's 1,000-ounce silver, I think he said, and five cars. So.
Which, by the way, /SI is $5,000 a point. I think I said $10,000 a point earlier. I made a mistake, and we've been corrected by not only our internal people, but the viewers, too, so thank you. Yes.
Yeah, so it was a great story that Tom told.
The last one here, so just talking about the E-minis and the micro E-minis here, just talking about just a little bit of the liquidity. Obviously, these products are both very, very liquid to trade around. ES being kind of the premier product here as the biggest one, most liquid of the two. But MES, from a future standpoint, super tradable. One tick wide,
Both are trading over $1.5 million a day, I think now. Both the micro and the E-mini. Notionally, you're getting upwards of $100 million worth of S&P traded a day. But I've actually never really liked talking to retail traders like, this is so liquid that it trades this many. I think what you said at the end is more important to they're a quarter tick wide. And that's really, to me, that's more important than something trading 1.75 million versus 1.25 versus 3.
Right, because all I want to do is get out of my 1 or 2 lot that I have, right?
And the fact is they're a quarter tick wide, or quarter point wide, 1 tick wide.
Yeah.
And I think that's what's really important with these.
Couple takeaways here. So ES and MES, they deliver the same S&P exposure with just 1/10 the size being in MES versus the ES contracts. And liquidity is just off the charts there.
So we launched those in 2019. We launched the micro.
The micros? 2000.
Tell me what the S&P's, 68.50 today? Tell me what it was trading in May 6, 2019.
Oh my God, 2019, was it 37?
I was going to say 3,500.
It's 2,900.
Wow.
2,900.
So just in those 6 years, and NASDAQ's even more pronounced. If you look at what the NASDAQ is. My point is that, like, even the micro is a substantial contract now. I mean, it's $30-some thousand worth of S&P, whereas when we launched it, it was essentially less than half of that.
Right.
You know, and that's why I bring
That's a good point.
It's unbelievable.
So when do you think they split again?
Yeah.
We're always looking, you know.
Mm-hmm.
We're always looking.
Yeah.
Good.
Very good. Margin and volatility, obviously, those are the things that you got to keep in mind with these products. They can move. Especially with the margin requirements, you got to keep that in mind.
So the margin requirement was half that too. Then I mean, when you think about it back in the day,
right? Because it really hasn't changed from that 5 or 6%. Right. So yeah, margins essentially probably doubled as well.
Interesting.
The NASDAQ was trading at 7,700 when we launched the micro.
Wow, and now it's almost 26, right? 25.6.
Yeah.
Go ahead. Sorry.
24-hour liquidity, deep options make these contracts ideal for hedging, trading events, and taking precise tactical positions. I mean, we trade these pretty much every day.
Yeah.
Today, though, so we're going to have to trade something. But we did sell puts in the bonds. We did the gold-silver pairs trade, which we got the right one from Craig.
Yes, that is. You were a little early last time you were on the show 2 weeks ago.
Yeah.
Now I'm early.
But we held out. You're lucky we don't have paper hands. We held out. We had a couple bucks on it. But anybody who put on after they watched the show did better than us.
And we sold puts in CL, which has moved.
That's right. That's right.
So these are all options on futures that you're talking about. And all of these are liquid options markets that you're talking about, again, that work the same way as the stock options. You know, the one thing that I would say about margin too that we didn't bring up is that it's not a loan, right? So a lot of people might think of margin in the securities world as a loan from your broker on which you pay interest, right? Margin in futures, I think it's more accurately described as a performance bond, right? So it's an amount of money that you have to put up that says basically I'm good for this position, but it's not a loan, you're not paying interest on it. So I just wanted to point out the difference when we say margin here versus margin,
That's true.
other
That's true.
contexts.
It doesn't have the same meaning. And it's something we didn't touch on, which we could touch on another one in another 2 weeks or 4 weeks or whenever you come back. And you come back every 2 weeks, we don't have to do it the next time. Margin will change, or that bond, as you called it, will change on options the closer you get to at the money and the closer you get towards expiration, because like you just explained it, it's not really margin, it's a bond, and that movement of that volatility expanse will also change on that. So it's a dynamic kind of bond that can increase. So when you're looking at how much buying power you're using, we always talk on the Tasty side to keep your buying power in check. If you're keeping it in check and you're saying, hey, I can use, just to use the ES, $2,500 is a good amount of buying power for me, but the higher end of it, if I'm doing an option strategy with $2,500 worth of buying power, that could change exponentially. It can almost, double or move by 25 to 50% pretty easily.
It's a great point.
Right? So we should talk about that too someday, another little nuance. On the option side, not really on the future side. The future side stays pretty consistent.
It stays pretty consistent. Like I said, if we have like a volatility spike, you could see a marginal increase in it.
A couple $100, nothing.
Generally
speaking, going to change.
right.
Generally speaking, right?
Yeah.
Right. Everything's generally speaking. Good job out of you. And as we talked, even the S&Ps actually made a new high for the day, but they are
up like 35 at one point.
Yeah, and they're up 26 right now. NASDAQ up 239. That's your leader in the clubhouse, up almost 1%. Everything else up around 0.5% or so. Craig, thank you so much for your time. We love having you on. Really do appreciate it. Appreciate your support. We're going to take a quick 90-second break and come back. We got more Tasty Live with a market measure next. We're back in 90 seconds. Thank you and the CME.
Thank you.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume. And both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the Market Measure sponsored by the CBOE. Before we do, let's take a quick look at the market. You want to? Even the S&Ps back near their highs. They're up 30 handles. They were up a little bit. No, they're right here. 30 handles and change. Bitcoin going absolutely nuts again today, up around 6%, down around 6 or 7% yesterday. Ethereum was down around 10% yesterday. It's up around 8% today. 218 and change. Oil down 24. Gold it's catching a little bit of a bid. It sold off down near its lows for the day, about $20 off of its lows. IV rank of 43, still good in there. You've got a couple of movers across the market too. MDB, I guess AI is alive and ready, up 81. APP up 52. Boeing up 15 now. MSTR up 12. Coin up 11. Goldman Sachs up 8 or 9. Your beloved OKLO with almost 9% move, up 7 and change. And let's see what some of the buckers are. It's really China. BABA down 4. You were going to say something?
No, I closed out I think you had a put or a call ratio
in
yesterday. Oklo, I closed up.
Oh, beautiful. Yes. Did a call ratio.
Yeah. It was past your, it was when you're done for the day. So I didn't want to disturb
your
you.
account. It's your obligation.
Hey, it's
we can't have two people watching one account. Either you own it or you don't own it. Now I lead you to the promised land.
You've been
dabbling
for.
Well, sometimes you need help.
Years.
So sometimes I got to help you.
Oh my God.
Closed my Palantir for a nice $3 profit from my option.
That is the first time you've ever heard him say $3 profit.
It's hard to be on top of the mountain. Everybody's trying to knock you off all the time. The only losing trade I have for my option trades today, every Tuesday and Thursday, lucky for you, today is Tuesday, is my Oracle trade, which I'm keeping there. I looked at Oracle. It was interesting with earnings coming on the 8th. What would you think to roll an option from on the 200 strike from 1 month to the next? Oracle IV implied volatility is 78 in December. That's what I'm short, coming with the December 8th options. January has an IV rank of an IV of 62. That's a big 16 vol differential. You can only get around $2.5 for rolling for almost 30 days, 28 days from on the 200 level. So here, I'm short the 200 puts, much lower prices. So if I bought the 200 put and sold the Jan put 200, you can roll for $3 now. Does that seem like enough credit for you for another 28 days in risk?
No.
No, it really doesn't, does it? And that's that vol differential between the two.
Yeah, and with vol futures and volatility in the market as a whole, super, super low right now. All the volatility is kind of in the shorter duration, just via the shorter time frame.
Yes.
When you're looking at these rolls, they are not juicy. The time to roll was before even though you had the rally, but before the rally was really the time to roll because you still had volatility high. If you were rolling long delta positions, like you had a short put, that would have been the time because then you would have caught the up move. But really the volatility.
So you're saying I'm too late?
You're a little too late, but the volatility aspect is really what I'm keying on.
So let's look at it from a delta point of view, because usually when you roll, you can reduce delta by 25 to 50%, even staying in the same strike. When you look at the roll here, your delta doesn't change at all. So your delta risk remains the same. It doesn't seem like it's enough credit to receive. So I'm going to stay through earnings, it looks like, in Oracle.
I like it.
Now, you could sell a call if you wanted to on the other side, but I'm going to play the directional bias in Oracle to the upside.
I close out a CoreWeave. Stock has had about a $4 move this morning.
Which one? Coin?
CoreWeave, CRWV.
Oh, CoreWeave, yeah.
Stock is up $5 now at 82 and change, IV rank of 18. I close out that strangle. It nets out to be like maybe, because I scalped calls out of it, like maybe like $200 loser or something. This was another one that we did. I think it had earnings the same day as Circle, and we did puts in both of them, and we talked about it. They were both trading like in the mid like 100 to 120-ish range. We're like, how could you not sell these 80 strike puts at like $3 or $4?
Yep.
And the stock opens down, $20 and proceeds to go down another 20 from there. It's down 50% in 2 weeks. You're like, they looked like free money.
What did I do here?
What did I do here? You've gotten a little bit of a bounce and a vol contraction. These are stocks, and we kind of mentioned this with the confirm and send.
Yep. It's
not a profit on these trades, but I've gotten back, $1,000 from the loss that we had at one point.
Yeah.
And it's a position that I'm not married to. I don't want to sit here and battle this forever. You know, you get paid, you get some money back, and
you can get out. You can get back in with a different strategy at another time when you see something else.
Next week or a month from now, you know, do something else.
That's right.
Yeah. So I close out that one. Coinbase is another one that I just managed. I rolled that put out to January. I actually rolled it down as well. So I rolled it down to the 240 strike. I did that at $3 and change. That put the 250.
And you were able to roll it for $3.45 and roll it $10 out. That's the difference between Oracle with the big vol differential from 1 month to the next because of earnings.
Yes.
Because of earnings. I mean, maybe you shouldn't have made the trade to begin with because earnings were looming. That's neither here nor there. That's water under the bridge. But you can change it by $3.45 and move it $10.
Yes. Reduce a little bit of delta exposure as well. So,
Good job.
Just managing some positions here. And I sold some calls against iBit. I scalped out of the ones that you did when I was gone. Good job out of you.
Thank you.
Bucks out of that.
Thank you. Thank you.
So I just sold some out in the shorter duration.
Really too pleasurable here. We have to start getting angry with each other. Go ahead.
We're family. Okay?
Yes, we are
Go
family.
against
Family, that's right. Blood is thicker than water.
Yeah. Oh. Yeah, we're nice to each other. Come on. Team. The bats, baby.
That's right. Solidarity.
Market measure. Let's
do it. Gold down 50.
Ooh.
One of the bigger movers to the downside. I know silver is even a bigger mover, down 2%.
Silver down more.
Yeah.
Volatility to come in there.
Yeah, gold volatility is hanging in there. Still a IB rank of 48. It was in the 50s. Mm-hmm.
Do I sort of
double up to catch up?
Yeah, did not
sir.
quite a double up, but I was just saying, should I buy like maybe a gold, micro gold, make it a little bit?
Not yet. No, not yet. Mm-mm.
Does higher buying power lead to greater risk? What do you think, Dad? Sponsored by the CBOE.
Yes, I mean, buying power is risk. So measured by the exchange, measured by the brokerage firm that's taking $1 in commission to take that risk above and beyond the buying power. So yes, would be my answer.
Do you think the buying power is a good reflection of the max risk?
Probably an overstatement of how much risk you have. Because for $1, how much risk are you going to take?
Very true.
I mean, you know, look at an insurance company, how much they charge you per month on a vehicle when you haven't had, an accident in years. It's overstated.
Well, let's see. First slide, please. So buying power reduction is the capital a broker sets aside when you open a trade to cover potential losses. It's simply another way to measure a position's risk. For naked trades like strangles, buying power is roughly 20% of the stock price or the risk of a 2 standard deviation move. The risk-defined trades like an iron condor, buying power is much smaller, usually about 5 to 30% depending on the wing width. So when you're trading spreads, those are going to be cash secured versus strangles, which will have some sort of buying power relief. And that buying power can change based on a number of factors. It can be the status of the stock. So if it's a hard to borrow stock, you might see an increased buying power requirement on a naked position. Volatility in that stock, when you see stocks that get above like 100% implied volatility, you'll see margin requirements expand as well there. It can also change broker to broker. So these can be internal risk parameters from broker to broker. So all those things kind of go into the buying power, but as a rough metric, about 20% of the notional value of that option is a rough estimate for the buying power requirement.
Good.
So currently, the buying power for a 20 delta strangle is 5 times that of a $5 wide iron condor. Historically, the long-term average has been 4 times in the past 20 years. Does this mean that strangles carry at least 4 to 5 times more risk compared to similarly wide iron condors? And so what they're looking at here is the amount of risk you can put on in an iron condor versus just a single strangle here. So you're using the same amount of capital is basically what we're looking at here. And we're going to kind of look at the amount of realized risk that you have on these positions. These positions are using the same amount of capital. So it's going to be an example of how much risk is realized on both these. So to examine this, we tested selling 45-day options in 2 underlying. So we did SPY and Amazon. We compared 2 strategies. So we did the 20 Delta Strangle versus the 20-10 Delta Iron Condor. So 20 Delta short option, 10 Delta for the long option on the Iron Condors. That'll take into account skew as well. And the 2 positions we managed holding to expiration versus closing at 21 days. We wanted to determine as a percentage of all losing trades, how many trades lost given fractions of their buying power. So we're looking at the buying power relative to the loss here.
Right, the buying power is going to be significantly less in the Iron Condor because it's the credit received minus the width. So let's say you're getting, $2.50 on this on a credit, you're going to get $7.50 in a risk on the Iron Condor.
Very good. Next slide here. So when examining SPY options held to expiration, we saw that Iron Condors were more likely to have same level of losses compared to Strangles. Also, the win rate for Iron Condors was lower. So when you're looking at obviously probabilities, you're going to have higher probability trades with just a Strangle because you're not buying those wings. So your break even is going to be further away from the money. And you can see that here. SPY holding it to expiration of the losses as a percentage of the buying power. And when you weight these together, this is really where it comes into play, because if you're using a 1 contract Strangle versus a 4 or 5 contract Iron Condor, and your percentage of the time that your losses are greater than 25% is 60%, you're taking some big losses on that versus the naked position, which theoretically has more risk to it. Like everybody gets caught up on the undefined.
Right.
It is technically undefined risk. We're kind of quantifying what undefined really means here.
Very good. Yeah. We knew these percentages were going to be much greater on the Iron Condor. But look at the win rate. Win rate's pretty similar. I know 6 points is significant in a statistical world, but the win rate's pretty good for the amount of buying power if we're doing these 1-to-1 and not in your example 5, 7, 8, or 10-to-1.
Yes.
Very good.
Next one here
is up 14, by the way. Even the S&P is up 14. Sold off about 10 handles.
Silver moving too. Good.
Silver lower by a little over 2% now. $1.28 move, and gold down 54.
All futures still at 18. They've popped up about 10.
Market don't care right now.
Market say, who cares about this little dip? Managing positions at 21 days improves the performance of both strategies. However, Iron Condor still had a higher probability of losing the same level of P&L as a percentage of the buying power. So even when you're managing Iron Condor trades or managing any trades, anytime you're defining the risk, you're going to have a higher percentage of losing trades just because you're buying that risk. You're buying some sort of premium to define the risk, which is going to lower the probability and lower the speed of the trades. You're not, the winning trades don't move as fast as naked positions. There's always a gimme and a gotcha to quote our very own Dr. Jim, which has his last stop in Florida coming up this weekend. If you want
That's right. That's right. Last of the live shows for the year.
Yes. So now looking at Amazon, so we found a similar pattern in Amazon when holding positions to expiration in terms of both loss percentages and win rates. So Amazon, we're looking at this just holding to expiration. The losses as a percentage of the buying power, 20 Delta Strangle versus the Iron Condors. Again, you see the win rate basically the same, but the percentage of time that you see losses are going to be a lot higher with Iron Condors, and that's just the nature of the trade here. And you can see that across the board when you're seeing, losses on both these trades, you're going to have them more frequently with Iron Condors.
Of course, that makes sense. It's interesting that the win rate's the same 6 vol differential between the two. I think it's just a coincidence, but probably works out to be like that if you were to do many stocks with good liquid markets to them.
Over time, the win rates and the probabilities tend to play out. So that's just the 6 points is the cost of buying the wings.
Correct.
That's the the difference in the win rates. Next one here. So by managing at 21 days, the results improve significantly in both cases, and the gap between these two strategies becomes smaller. So when you're looking at individual equities that have kind of a binary nature to them, it might make sense to define the risk when you're looking at positions and managing them. Specifically, when you're managing them, when you're managing the trades, you're improving the iron condor positions there. After comparing these four, we can see that the risk is not actually lower for strangles. The higher buying power doesn't translate into higher risk in terms of the percentage of losses. So you can't just look at capital requirement, like saying I'm risking $1,000 on this trade and risking $1,000 on this trade. They must be the same amount of risk. You have to keep in mind the probabilities, and with iron condors, you're cutting that down a little bit because you're buying some.
Even the S&P's up 8, getting a little soft here. Volatility down 18 cents.
Should have sold them at 68.50.
What was stopping you?
My paper hands.
Go to the takeaways.
Buying power can be an alternative measure for position risk. However, higher buying power does not necessarily equate to greater risks, especially regarding downside losses. While undefined risk trades have a much larger buying power than defined risk trades, many losing trades only lost a small fraction of their buying power, with more variance between underlyings than between strikes. Exiting at 21 days can reduce exposure to large losses across various strategies. Not a shock. We've been talking about this for quite some time. Managing positions greatly reduces your P&L volatility. That's really the key here, is managing those positions.
Good job. Good job out of you. We're going to take a quick 90-second break. Market's trying to hang in there. Even the S&Ps are up $8. NASDAQ up 152. Russell flirting with unchanged, as is the Dow, up 43. Volatility still down 18 cents. Bonds are down 4. Not really catching a bid, but middle of the pack for the day. Bitcoin's definitely caught a bid. It's just about $1,000 off its highs, up $4,700, which is a 5.5% move. Ethereum up a little bit more, up almost 8%. Only $20 off of its highs. Oil only down 11, back mid-range for oil. Gold taking it.
Scoopy?
What's that?
Do I scoopy $80 out of that put?
You should.
I try for 100.
Why not? Just put a bid in and sit.
Yes, I'll put in at 82.
Okay. Gold down 59 as Bitcoin catches a bid. Maybe gold getting a little bit softer here, down almost 1 1/3%. Silver down bigger, down almost 2%. Again, 1 point is a $5,000 move. Thank you, everybody, for correcting me. I appreciate that. That's all we have for right now. We're going to take a quick 90-second break. Volatility continues to be soft. Maybe we'll catch a little bit of a bid here. We got more Tasty Live with Quentin and Glenn next. We'll be back in 90 seconds. It's Tasty Live.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this man. Quentin, my man, from the trade desk. How are you?
Fellas, how's it going? I'm doing well, thank you.
Did you have a happy Thanksgiving?
I did. Jason's was great.
I know.
It was good. And his brother's got some kids. You know, I was messing around with the kids. They're having fun.
Sweet.
And then, his mom is a phenomenal cook, made some great food.
Jason's mom cooked for you?
Yes, yeah. Jason's
Wow.
mom, yeah.
Oh,
yeah,
wow.
yeah.
Was it an Asian? Jason is Asian. Was it Asian-inspired?
So, no, the night before, we had, an Asian dinner, beef noodle soup. Phenomenal. And then the next day we had
over?
Yeah. Well, I was like, I don't want to intrude. Well, I was like, I don't want to intrude, whatever. And then Jason's like,
I don't want to intrude, but I brought my pajamas with me.
Well, Jason forced me to sleep over.
He forced you?
He says, if you don't sleep over, you're fired. Okay, that's what he told me. And I was like, okay, I'm sleeping over.
Come on. That's
like,
that's
right,
brothers. That's a trade desk, man.
We can take this offline because I don't want to embarrass you any more than I already did.
We're a family on the trade desk.
Yeah.
We're a family. And then for Thursday, we had
Don't sleep in the
normal
same bed.
Thanksgiving.
I get it.
Yeah. All right, and so,
let's see how much he liked
Yeah.
you. Did you have your own room? Did you have a blow up?
I had
Did you
my
guys make breakfast
own
together?
room. I had my own room. We didn't make breakfast together. He did make breakfast. So
You
an
didn't
Asian
wake
breakfast.
up early and make breakfast for the family?
We had an Asian breakfast. It was cool. It
Wait a
was
minute, you didn't wake up early and at least help?
I texted Jason. I'm like, what time do you want me to
Texted
be
him from
up?
the same bedroom?
The night before, because he had to go pick up his brother at the airport. I texted him the night before. I'm like, what time do you want to be up? He's like, don't worry about it, Sleeping Beauty. Wake up whenever you want. And I'm like, okay. And so then he made some gyoza and eggs, which was really good for breakfast. Gyoza, like dumplings,
Yeah.
And then for lunch, we had sushi, Asian lunch.
You stayed for lunch too?
I stayed the whole day.
Did you stay the whole week?
Wow. I mean, when people say, no, you want to sleep
like a
over,
squatter.
they really don't mean it. Okay?
No, I told him, I'm like, I can
oh,
take
the
the
weather's
train up
bad.
the
You
next
want to
day.
stay over? They really don't mean it. They're just saying it because they're nice people. And then, like, when you say, oh, yeah, I'll sleep over, and like, all right,
No.
we'll
So
make
here-
breakfast.
okay.
Like, they'll
He
go
doesn't
in.
even let me sleep.
Yeah.
If I stay over, I'm out before breakfast.
Right.
I get out.
Yeah.
Right.
No,
Yeah.
So,
And if you stay
Lunch.
for breakfast,
Well, no.
you must stay with your shoes on, that you are leaving immediately after breakfast.
okay, let me tell you what happened. So we leave Thursday.
There's
right
nothing
after
you
work.
could tell me that happened
Well, we
that,
leave Thursday. I sleep
that
over
would
and then
allow you to
for
stay for
Thanksgiving.
lunch and sleep over a second night.
Well, no. So I slept over Wednesday night, and then Thursday we had Thanksgiving. But I told him, I was like, no, I'll take the train up Thursday. He's like, no, you're coming with me. We're leaving right after work on Wednesday, and you're sleeping over. We're gonna hang out in the morning, watch football.
He's going to
like
W-2 you or something like that. He's going to take you as a dependent if you stay any longer. I mean, seriously.
Yeah, well, so we had a great Thanksgiving, though. Phenomenal food. Turkey was great. We had some ham. We had some prime rib as well. It was all very, very good. And I had a great time with
I'm
Jason.
sure it was excellent. I mean,
You didn't invite him for.
Well, and you know who also came over?
I
David
did.
as well, who used
did?
to be on the trade desk. David came over as well, which was really nice.
Sweet.
So, yeah,
But David didn't sleep over, right?
David did not sleep
See?
over.
Because David knows the etiquette.
But
Like,
so
you
I
don't think
told
they said,
Jason
David,
I
you should
wasn't gonna
sleep over too? We got Quentin here. What's the difference? We got one, might as well do two.
Here,
I told him I wasn't going to sleep over. I'll take the train. He's like, no, who are you kidding? You're sleeping over, blah.
Please tell me Glenn didn't sleep over too.
Glenn was not there. I think Glenn visited his sister.
Okay. Oof. At least Glenn knows.
Okay.
All right, well, give us what you have to.
Let-
We can get rid of you here.
All right. Let's get to some business,
Even the
fellas.
S&P's up 25, by the way. Nice
Another
call back.
Tuesday,
Go ahead.
another demo. So we've got the curve analysis mode. This is one of our most asked about features, and we're going over all the components, how to use it for like an earnings volatility shock, how to forecast your trade, how to visualize the trade. We're going to be going over a lot today. We'll take any live questions that you have on the demo as well. So if you want to sign up for Nikki, we've got tastytrade.com/demo, tastytrade.com/demos with an S. And then if you want to use the real link, tastytrade.com/webinars.
I love it. And this is a feature I've used it a couple times on the show. I know this is a new part of the morning session to use the analysis mode, but this is something I use all day long. I mean, this is my favorite feature. I love the order chains, using the analysis mode when I'm putting on positions to existing positions. This is a great way to kind of visualize your risk and see what will happen based on changes in implied volatility, changes in time, spot price, all those things you can do with the analysis mode. It's an awesome feature.
Yeah,
I know
super
valuable. You've got a
feature.
sweet spot for it now.
I do. Of course I do.
You didn't like it before. You thought it was,
You're right.
Now
You're right.
he grabbed me the other day, before I left, and he was like,
You want to
hey,
fight?
What?
You want to start a
Oh,
fight?
you started with the Thanksgiving. Go in, Nikki.
No, he
Go
said
in.
he was like, hey, you got like 30 minutes? I was like, for you, I got no problem. He's like, can you show me that analysis mode, like that thing you use? I was like, no problem. So I gave him a little. You should sign up for this one though. You should go. I want you there.
I should. I could use it.
Yeah, it's a great
A lot of
feature.
features in here that you guys have
And
built.
Sully, if you want to forecast a trade, add it to existing positions. Like if you're a person that's got, a bunch of option on the spoos or something like that, and you want to see how adding a position will affect the existing position, it's great for that. Can tell you like forecasting positions, forecasting profit and losses, also going over like trade management, how you want to manage the trade, depending on where the price goes and things like that. And then also just to visualize the trade, even if you don't want to forecast it, just see like your P&L graph that you can have on the position. And so super, super valuable. We're going to be going over every single thing on the analysis tab today.
Good.
And no holds barred questions, everything you got will stay as long as you guys need. And so tastytrade.com/demos if you want to sign up.
Beautiful.
It's what I use when I'm showing the like diagonal spreads or the crab trades, stuff where you have like a different duration between the two options.
Multiple expirations.
It's a cool way to visualize because it's those trades are dynamic. They don't have like, you sell a put spread in one expiration. It's binary. It's looks like that image there. But when you start diagonalizing stuff and adding to positions, you have a more dynamic risk profile, and
yeah, and maybe like breaking up the management as well. If you
Yeah.
only want to manage one part of the trade versus all of the trade. And so that's something super useful that we have on the platform, and we'll be going over all of that today. And then let's go over the top 20 symbols and their IVRs. At number 1, we've got Nvidia 10, Tesla 7, Palantir 4, IBIT 57, AMD 25, MSTR 40, Apple 6, TQQQ 24, Intel 36, Oracle 84, SoFi 17, SLV 72, Meta 5, Boeing 9, GLD 44, Robinhood 18, MDB 14, Google 21, Amazon 14, and CoreWeave 16.
Good job out of you. And don't overstay your welcome. You could stay if you want to and listen to my next guy who's coming on.
All right, we're a little busy on the desk, so I gotta go.
Awesome. That's the right answer. You're learning.
All right. See you
Give me
fellas
some
tomorrow.
diddy diddy. We'll get rid of Quentin. Band who never leaves. Diddy 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 diddy.
Oh.
Glenn,
How
welcome
we
to the
doing?
show. Now
that was a little much.
Thanks.
That was a little much from me.
That's all right. It was pretty funny.
Glenn, even you know.
I was cracking up.
If somebody says, "Do you want to sleep over?" It's just being nice, right? Your ass hits the door. Okay.
In his defense, Jason is a very welcoming person.
He is.
And very persistent with his
What are you doing
kindness.
over there? Excuse me.
What are you doing?
So a little hoodie in Lululemon.
Oh, okay.
I don't know. I'm looking for something that's got high implied volatility. Ivy rank is 74. You do have earnings coming up in next 10 days. What is today? The 2nd?
Mm-hmm.
So I just sold the 55 strike puts. I mean, the 52-week low is at 159. I sold them at $5. That puts you $10 below the lows. I don't know.
Okay. You're
Just a little
allowed.
something.
A little something.
Yeah, I did it in
get
January, so you got some time. It's famous last words, like I said, with Circle and CoreWeave, and then I had to hold those for 30, 40 days, but those ended up okay.
Very good.
Sorry to interrupt.
That's all right. Exciting stuff. And he was trying to get away with it. He's trying to do that without even telling you.
I know. Nothing gets past me.
Nothing.
Glenn, did you have a good Thanksgiving? I know we're a little behind on that, but it's the first time I've seen you since then. Everything well with you?
That's right.
Great
Yeah,
haircut.
fantastic. Thank you very much.
See, he didn't see your haircut. We talked about that the other day. Yeah, you look good.
Yeah.
Frank
Clean
said
up nice.
I look like a senior in high school, but that's fine.
No. You got good flow. You got good flow. You got good hair.
I got rid of the lettuce back there though.
The cheddar. Yeah, the lettuce and the cheddar.
That's
Yeah,
all right.
yeah. Mm-hmm.
Maybe more professional. Thanksgiving was good. Sister has a little child, so I was holding a little child.
Sweet. Congratulations.
Thank you. Bears won.
That makes you an uncle.
It does, yes.
Right.
Uncle
So you were
Glenn.
holding your nephew.
Glenn.
It's like babysitting your child. It's not babysitting when it's your child. You're not holding a little baby. You're holding your nephew.
Okay. Yeah. Yes.
Get used to it, Uncle.
New to this.
Uncle.
But it is. Yeah, Glenn Uncle.
Yeah, no.
Uncle
He's
Glenn.
not Unk status. He's
Not yet?
And as soon as it starts crying, you just give it away. That's
yes.
It's
Or
awesome.
or if it
That's what we always do.
takes a little special thing in the pants or something.
Oh, yep.
you can
Time to go.
pass that.
Or if I do that, then I have to give it up.
Careful.
Take care of it. But yeah, it was good. Went to United Center. Ended up with courtside tickets to Northwestern Oklahoma State, which sounds really cool. Courtside of the United Center. By the end of that game, it was 12:30 a.m. on Thanksgiving night. There were maybe 150 people there.
Really?
In the whole stadium.
Mm-hmm.
It was tough.
What is Northwestern any good? They probably not.
It was just it was a double header though. So Duke game was first. That was a lot of fun.
Oh,
a lot of the crowd was there to see that game at 7.
Yeah.
And then by the last game, people tapping out. But I had a great time. My mom and my dad went.
Very nice.
Great time with family.
Family event. I love it.
Yeah, there you go. But now we're back. December is rolling, and FX markets are jumping.
Yes.
I'm excited. It's been hard to keep track of even just the past hour. This morning coming in, a little boring looking at the popular European currencies, euro, British pound, Swiss franc. Those were all a little muted. All the price action was in these commodity currencies, looking at the US dollar, Canadian dollar, and more notably the Australian dollar, as we had some risk sentiment, lifting a little bit. That Australian dollar, US dollar, most interesting to me right now from a price action perspective, from a price level perspective, now getting back to month-long highs above 65.50 there. So if you're trading the range, you're looking back at the past 2 months, it's been in a pretty tight range there. I think that's these markets right now really favor the active trader. I think just looking at the past few hours, you can't really ask for much in terms of price swings, but there is some good back and forth there if you're only looking for 20, 30 pips. Most recently, just in the past hour alone, we had a little fake out in that euro dollar dipping under 116 on some Putin headlines. Putin not very happy with Europeans right now.
Okay.
But that was shaken off a little bit, and then had some slight dip in sentiment. Dollar Swiss franc. Swiss franc caught a bid for maybe 5 minutes. I'm tightening up my charts on this side to 5 minutes just to see what's going on, what's moving in tandem. So a lot of back and forth, not too many big headlines, but some organic price action there. And then the main story of the week so far has been this dollar-yen coming into the week. We had some talks of a possible December rate hike for Japan. That sent the US dollar Japanese yen to lows under 155. That didn't last long at all. That was when we started here Monday morning. We hit those lows in the US session. That's come all the way back just about. Now we're trading back at 156. So, over 100 pip move in about 24 hours to the upside for US dollar there. But
is this yen carry trade unwind V2?
It could be. That's what it was looking like yesterday morning when we were dropping and the yen was picking up some momentum there. But now it looks like the range is going to hold, at least for the near future. Now we've got picked up off the floor off 155. Now we're just trading in the middle of its recent range, dating back to last week. But yeah, who knows? That's the story right now. Not sure how that'll go because now market's pricing in the possibility that the Bank of Japan is just talking once again. They use their powers of verbal intervention very wisely and perhaps too often. Market's not exactly taking them seriously. So this morning, if you're looking for more ranges not involving the US dollar, that Australian dollar Japanese yen, most interesting to me. That right back at its highs above 102. That's been on a tear recently with the yen weakness, but we've found this level a couple times in the past 2 weeks. So if you think the bottom's in for the yen against that pair as well, then that's some nice next level diversification. But the week ahead, we've got a couple Fed speakers, got ADP employment change tomorrow. Nothing as exciting in the rate landscape, just for the actual Fed decision next week. Now that cut pretty priced in, but still some interesting price action like yesterday with the move in bonds. US dollar got a bid. Now we're just chopping around.
Bonds 116.01. They haven't moved too much.
Yeah, not today.
On the low end of the range for bonds.
Yeah, and so some chop in the near future wouldn't surprise me at all for these US dollar pairs. But for active participants, we are getting some ranges that are interesting right around some interesting inflection points. That's what I got for you today.
Good job. Very good job out of you.
The Aussie dollar, I added a couple positions. So I sold the Aussie dollar against the Japanese yen.
Nice.
Sold the Aussie dollar against the US dollar. So I got long dollar there. I got long the dollar Swiss franc and the dollar against the Canadian dollar. And these are ones we had on... I was long Aussie dollar into Thanksgiving. We had a nice little move higher there. I was also short the Canadian dollar into that move, which I ended up getting out of a decent time. But I like all those at kind of extremes. Like those are nice little trade ideas.
Yeah, should be good. I mean, December, if you're playing any seasonality, December historically not good for the US dollar, as it is good for US equities. But we'll see. This isn't feeling like every other year so far.
Yeah.
Very good. Well, it's a good thing at this time to do. We're going to take a break. You want to know why? Because we got Liz and Jenny on the floor of the CBOE.
Beautiful.
There you go.
Right after these messages. Even the S&P is up 33. Peace.
Tasty Trade's Money Match event, unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
And welcome to the Tuesday edition of the Liz and Jenny Show. I'm Jenny Andrews. This beautiful blonde is Liz Deerking. We are live from the SIBO, sitting in the SPX pit.
We are back. We love our SIBO days. We love our SIBO crew. We love our Tasty crew too. There's a little bit. You can tell as soon as we say live, they start to perk up a little bit.
A little bit. We've got Spoo's up 34, so that's good. It's good to have a green day. I'll take it.
Hey, what else is up is Bitcoin. Now, we're not in the Bitcoin pit, but Bitcoin is finally staging a little bit of a rally after yesterday's 5% slide, which is crazy.
Oh, I think it was the biggest one-day loss that it's had. I think I heard that. I thought I heard the move from 90, because Friday it was 91 down to 84, the biggest one-day loss.
Well, we'll fact check you later, and I'm sure our viewers will keep you in line. Maybe it was, maybe it wasn't. I don't know.
I don't know, but yesterday, we've had. And it might not look like it when you look at the market, but I feel like we've had a rough few weeks in the market, kind of choppy days. We had a big down week, and yesterday I was getting my hair colored, and she loves to ask me about the market. She's the one who wanted to get long gold, and she said, Jenny, I know people are saying the market's rallying and back up, but my account's not back up. What the hell's going on? And I said,
is it just gold? What is she?
I said, no, you know what? A lot of people feel the same way. And she just has her money in some kind of fund that someone else is managing. So she said, even though people are saying like, oh, S&P is getting back up there and all these underlyings are getting back up there, what she's seeing in her P&L has not gotten back up to where it was a month or two ago.
Now, a month or two ago was all-time highs, right? So they fell from all-time highs. And if we want to take a look here,
I was going to say we're getting close.
Let me do this for you, Jenny.
Go to the go to SPY and go to the chart. We're almost back up there. We are darn close to where we were when people's accounts had more money than they have right now.
All-time highs was right before October 29th. Yeah, no, I get it.
And so that was her question to me, like, what the heck is going on? What she watches on TV says we're almost back up to where we were, but her account's not back up to where it was.
And what was your answer, Jenny Andrews? I love when you tell people what to do.
What would you say? What would you say if someone said, like, why? What's going on? The SPY's almost back up to where it was, but my account's not
Well, my
back.
guess is she doesn't have SPY, because if she had SPY, it would be back.
It's got to be just a mix of things.
Yes. Yeah. If you do have SPY, then you are. Like, if you are just a buy and hold investor and you just have SPY and you're just long SPY, which is actually not a bad investment strategy, right? SPYs are even triple Qs. Like, let me go to NASDAQ. But that's not what anybody has. And even funds have. So NASDAQ is the one I don't think it's up as high.
Right, that's not up as much.
So if you take a look at that.
I just found it interesting that, going to get my hair colored, that was, she couldn't wait for me to come in to ask me that. So, and I doubt she has crypto.
Well, yeah, I mean, crypto isn't even that bad.
No, but I mean, that's the one thing that hasn't come back.
So but this is let me zoom in a little bit. But this isn't a long-term chart because this is only Bitcoin futures, so it'll only give us a little bit.
Yeah, but that's the high.
That's 128 is the high.
That's the high. And
so that's down about 30%.
Yeah, that hasn't come back.
But talking to Ryan Grace yesterday, the Bitcoin volatility, and I liked having him on. The Bitcoin volatility is supposed to be a 30% move because the volatility is so high. Isn't that crazy?
Yeah.
So when something's got an implied volatility.
If someone's trading something with a large volatility, you've got to expect movement, right?
I'm trying to think, what has a big volatility?
Well, I feel it in Oklo. I felt it in Oklo. Oklo has had big moves, but that has a big volatility. When you're getting a lot of premium in a product, that's a product that has big volatility, right?
Yeah, so what we're referring to right here. Now, you have your IV rank, which is the 35, but Oklo, OKLO, is very volatile on this side. If you look over here, it's got 100% implied volatility. So when you're looking at that, that means it's going to move. And so you see bigger fluctuations when there's a higher volatility.
And that's telling you that in a 12-month period of time, this volatility is pricing in, it could be double or it could be zero. That's what 100% implied volatility is. It could be up 100% or down 100%. That's what that volatility says in a year's time.
But Oklo is fun to trade.
Well,
so take a look at that. Now, once again, and I'm not saying your hairdresser has this in her account, but maybe she doesn't because she is your hairdresser.
She doesn't.
But so this went from, so if you have a basket of stocks like the SPY, it is back up there. But Oklo or certain other things
certain
like this
things are not back
went
up
from
there.
190 to 92. It lost 100. It's cut in half.
Yeah, the AI stocks are not back up there.
Yeah.
Like a lot of stocks are not back up there.
Yeah.
No, I know. You know what I wanted to take a look at? Because we haven't been in this account in a while. I know we had our show yesterday, but
we
had the morning show. We
did get on. We closed a few things. We traded a few things yesterday.
We haven't had our show since before the holiday week.
Since before the holiday.
Yeah.
We got some activity, but this is what we did yesterday, Jenny. We closed our 6J, we adjusted our IBIT, we put on a new ZB trade, and this morning our CoreWeave GTC got hit.
Oh, you know what? Yeah, CoreWeave is up quite a bit. I got out of my CoreWeave too today. So, you know what? That makes sense because we put the CoreWeave on the show. I put it on in my account. I got out of mine this morning on the train, and we got out of ours today. CoreWeave is finally catching a bid because
what did we have?
We had just a short put, just a short put. So December short put,
72.5 put. Yeah, that's good.
Nice. Okay.
And we got out for 50%, so that's good.
All right, well, did we really get 50% on it?
I think because we sold it for $6. I'm actually going to go to CoreWeave and take a look.
I honestly was kind of happy to get out of my CoreWeave. No, what do we have?
No, we rolled it. That's why, because we put an order in for 50%. We rolled it, got $6. That's why. Okay. So yeah, we're out of our CoreWeave, which is great.
So I was kind of happy to get out of my CoreWeave because I don't know. It's one of those where it was a new IPO this year. It was good to us early on in the year, but I did take some heat on my recent position.
And we did actually speak to Kai.
I'm not.
I know, I got it. So we did actually speak to Kai, and he's going to put together, because we asked him live on air, the list of IPOs from this year. I want this year.
This year's IPOs and what they've done between IPO date and now, and the end of the year.
Because I do think this was the year of the IPO.
Finally, I feel like finally they're back. We had a few years where we didn't have a lot of IPOs that we were trading.
And that's what Tony kept being like. Tony was like, it doesn't matter. I've been in IPOs, and I was like, there was in 2000. Like, what
like this year we did have a lot. We did have a lot, and they've been and a lot that had options with decent markets that were easy to trade.
Yeah. For
so
sure.
that was good. It got silent here on the floor really fast.
And you know what? Hopefully they can all hear me, because they're also, I've collectively decided to put together some type of caroling behind us at some point during this cycle.
Liz was asking a trader if he would come carol. Oh no, it all started because there were carolers in the building downstairs today. And he were telling us about the caroling, and Liz said, geez, wouldn't it be nice if traders would carol behind our show?
I don't speak like that. That's what you would have said. But I think they're going to write their own songs, so it could be pretty creative.
Now, did you know him from the past as someone who would enjoy singing?
No, but I do know him from the past.
Okay.
But I just
I didn't know if he was in a church choir or.
No. No, maybe. I don't know. I don't know him that well.
But he seemed keen on the idea.
Yeah, he seemed keen on the idea. So we'll see if we can get him to walk by. But yes, they are very, very quiet today.
They are. But okay, we've got some exciting news. Exciting news next week when we're here at the SIBO.
Why'd you get real quiet?
We might not be. I don't want them to get upset. I don't want to offend them when we say we might not be here. We might be sitting in front of the Mag 10 pit,
which is also the Russell.
Yeah, the Russell trade's in there. So the Russell pit's getting Mag 10. How did they decide?
I think it's. I'm going to tell you how I think they decided. I don't know what's actually factually accurate. So here, this is the biggest pit. VIX is the second biggest pit. Russell's the third.
Okay, well, they're getting Mag 10.
And that's how they got it.
So Mag 10, the new Mag 10 SIBO product, super excited for it to come out. It's the Mag 7 plus AMD, Palantir, and what was the third?
AMD, Palantir. I can't remember what the third one was.
I think that I'm right on those.
Well, that's funny because here, I'm going to show you this. If it is AMD, watch this.
Well,
AMD is the one, if I'm remembering correctly, that has not caught. It can't get back up.
Well,
AMD
take a look at Oracle. I think Oracle's even uglier.
Then it's probably AMD and Oracle.
No, look at this. Look at this one. Now, if Kathy has this in her account, this is why her account's not coming back.
Correct. I know Tony Batista does. He was so angry every time Vanetta would mention Oracle. It's pretty funny.
Okay, and Palantir has Palantir.
She's like, I have all this Oracle. I don't understand why it's not coming back.
My account's not coming back. And Palantir, that one has. How's that one looking? Palantir.
So that it's. I mean,
yeah,
it's not bad.
It's not terrible.
But a lot of these AI stocks are the same way. You know, the other thing too that lost a lot of its value, which is in the Mag 7 and 10, is Meta. Take a look at Meta.
I know. Now Meta has, in the last week or so, had quite a rally, honestly, from 580 to 644.
They all have in the last week or so come up a little bit.
You're really thirsty today, Liz. Usually I'm the one drinking and in trouble for dropping my drink.
We have the exact same amount left.
No, but I always drink my drink. You never do.
I don't know.
Yours sits here and is full at the end of the show.
That's why I don't spill.
Okay, well, so that was. So I knew we had some breaking news. That was the Mag 10 pit. That was the exciting news.
That was the exciting news.
Also exciting news today. You never asked why I was wearing my state champion
did they
medallion.
Win?
Today, the game's today. So never before in history has the state championship football games been canceled until now.
Because of the snow that was this weekend. They were supposed to be played on what, Saturday?
Saturday. Our state championship football games were supposed to be played on Saturday. Well, there was so much snow here in Illinois, they canceled the football championship games. So they got like 3 games in. They got the
1As or whatever.
1A, 2A, 3A, 4A. They got like 4 games in, but the bigger teams, bigger schools, games were all canceled. So today, my daughter's already out of school. Like they're out of school. Kids are getting on the fan bus, heading down. The game is this afternoon.
When is the Fenwick game?
Today.
After yours?
After ours.
Because they're the big school, right? Game?
No, so we're 5A, there's 6A, then there's 7A and 8A. Those are tomorrow.
Like Carl
Those are
Sandburg.
tomorrow.
Yeah. Those are bigger.
So anyway, I've got my Providence State Championship medal on. I've got my green on. I'm happy that you're in a shade of green.
I would not be wearing this had I known Providence was going to be
And
playing.
today is the state championship game. I hope they win. I hope they win.
I hope they win for your sake. Who are they playing?
And you know what? I was looking in the pit. So we have a couple dads in the pit whose kids are.
Are they missing?
Yeah, the guy. I was trying to see if they're here. They're not here because.
Who are they playing?
St. Francis from Wheaton.
Oh, I don't know who that is.
Anyway, it's this afternoon.
Well, then I'm rooting for Providence over that.
Yeah, and then Fenwick plays. Now, there's a lot of these schools are from the Chicago Catholic League, which is a huge. This is the Illinois State tournament, but most of the schools in it are still from the Chicago Catholic League. Like Mount Carmel's in it. But Fenwick's playing East St. Louis, which is one of the best teams in the country.
I have things that I could say, but I'm keeping my mouth shut.
So
if you don't have anything nice to say, don't say anything at all.
It's a big day here in Illinois for anyone that's into high school football, which is
it really is, and I hope Providence wins.
I hope
really
so.
Do. Yeah. So wait, who are they playing? St. Francis from Wheaton.
St. Francis from Wheaton.
So it's all Catholic schools that are in the league, minus East St. Louis.
Well, all except one or
except East St. Louis.
Yeah,
that's what I thought.
Yeah, because Mount Carmel's in it. We've got a lot of big teams in it. And it's kind of crazy that it's during the week. And I feel bad because some of our players, my daughter was saying, some of the players' families were really upset because parents had to take off work.
Yeah.
Well, parents had to take off work, and there are plenty of parents who, if you don't go to work, you're not getting paid.
Yeah.
So parents had to take off work today, and it's in the middle of the day.
Yeah, that is tricky. But I mean, it was snowing. This is the first time ever the weatherman got it right, where the snow was heavy.
It was bad. It was.
Yeah.
It was bad. So today's the game. I'm in my green, and the other Providence dads are
Missing.
They're
down there. Yeah. They have the dancers and the
dancers.
Yeah. Oh, yeah, because they're dancing at it. I didn't even think about that.
I know. My husband said, "I'm so glad Lily quit the dance team because we'd have to be there. I wouldn't be here right now. I'd be down there in 20 degrees."
It is fun though. It is fun to support your
It's
school.
just very cold today.
Yeah,
It's very cold.
It is cold.
Very cold. Yeah, 20 degrees. It's going to be a cold game. Cold game, cold day for the cheerleaders. For the
what time do they play? 2 o'clock?
Right after last call. It'll start during last call.
Okay.
It's starting during last call, and then I'll be.
I know what we're doing last call. We're going to press play on the Providence game. Tune in live to see the two of us watch Providence.
Anyway, that
is exciting.
Yeah, it's gonna be fun.
Yeah.
And I'm glad you're in your green.
I did it for you.
Thank you. Thank you.
For some odd reason, I thought they were playing Fenwick. That's why I was like, I wouldn't have been in green.
Oh, no.
Because we know players on the Fenwick team. That's the only reason. I'm not saying I'm anti-Providence or pro-Fenwick.
Yeah.
But I, in my little heart of hearts, thought they were playing each other, and they're not.
No, they're the next game. They follow each other. Anywho, back to the show.
And I do like Providence. I'm just saying that I don't know any players on the Providence
team. I just
team.
had to give let you know why I. It's not often that I wear my state championship medallion. And now I didn't win it. My daughter did, but I got one.
Do you know what? You know what you just did? You just did the most interesting woman in the world. Have you ever seen those commercials? It's not often when I wear my state championship ring, but when I do.
It's only on special occasions I bust this out. It's a little heavy. It's kind of. This is why I'm like hunched over like this.
It's pretty funny.
I should have worn the medal today.
You should have.
I know. I could have.
Tomorrow, if they win again, you got to wear it tomorrow.
I'm going to wear the medal tomorrow.
Yeah,
okay.
Exactly.
All right.
And we are going to be live on Benzinga tomorrow too. These are facts.
Okay, but yeah, now that's different. So we're going to.
That's going to be before our show.
It's kind of interesting. We're going to be on Benzinga tomorrow at 9:30, but we're going to be on Benzinga. So
yes.
like tastylive will be airing their programming.
Correct.
And we'll be on Benzinga.
Correct. Tomorrow between 9:30 and 9:45.
Yeah.
So yeah, it's exciting. All exciting stuff.
All right. Let's see what's going on in the market.
So I'm going to, spoons are only up 15 now, so that's been a real slide. So I'm going to pop into, we haven't done this in a very long time, so I'm going to pop into Twitter. So if you have if you want to talk to us, communicate through us live, hashtag LIZJNY, we will answer all this stuff. It's been a while because last week Jenny was gone. I had TP on I was on the morning show on Monday, and then I had TP on for 2 days, and so we never got to Twitter. We did a little bit, but didn't really.
So at least we're back to normal for a few days, today and tomorrow. And then tomorrow you get on a jet plane, head to Vegas.
Wednesday, yes.
Yeah, tomorrow.
Actually, Thursday.
Well, I wasn't going for high five, but I'll take it.
What was this then? Just stop talking to me?
You're getting on a jet plane. You're leaving and getting on a jet plane.
Okay, I surrender.
And I'll have TP on Thursday, which is going to be a lot of fun. A lot of fun.
TP's
Can't wait to
best.
hear about his holiday.
He's so funny. He's hilarious.
He always has a Yule log party. Remember what his Yule log party?
No, what does that mean? What is a Yule log?
So TP.
What is a Yule log?
I believe it's some form of a cake. And I almost think it's a cake where you make like a real flat, thin cake, put some kind of middle in, and roll it.
And that's a Yule log?
I believe so. I'm making this up, but I think it sounds right.
And they just have a party for a cake?
And they have a Yule log party.
Do you have a party for a cake, or is it a tasting?
No, I think like everyone brings their own Yule log.
Oh, that makes sense, because then, TP would love that, because then he gets to try all the cakes.
All the cakes. So when he comes on Thursday with me, I'll ask him about his Yule log party.
I can't wait.
I'll let you know what the details are.
Oh, I'm also going to, Frank, and I hope you're watching, and Frank and Johnny, this is for you. TP has also put it to bed again. He is not a
Oh my God,
redhead.
you can't let it go. You can't let it go.
When someone says there's not a redhead, so if I was like, if you kept calling me a redhead, and I would be like, but I'm not. You're like, but you are. And I would be like, but I'm not. And you're like, but you are.
Well, I'm not going to ask him. I'm not going to ask him if he's a redhead.
I'm going to text him and tell him to defend himself to you. And he said on air, he's like, I don't want Liz and Johnny to be fighting over this. I was like, we've been fighting for years over this.
I accept that he has brown hair. I accept it. I accept it. I accept it. All right, back to the Twitter.
So yeah, here we go. This is today, and I appreciate this. Bob on Fire is giving us our earnings. This is the one that's really that I'm a little bit.
I know.
Marvell.
So Marvell is almost at all-time highs again.
Is it GetLab? GTLB?
Yeah, I don't know.
It's GetLab.
And then we have American Eagle, which has also been really rallying. Dollar Tree, Macy's.
Yeah, I mean,
tap on the platform and take a look at Marvell. Do we have a position? No, we don't.
No, we do not.
It's tough. If you're not in it already, it's already. Oh, it's not near. No, I was thinking it's back to all-time highs, but it's back to recent highs.
These highs were in the beginning of the year.
Yeah, so it's back to recent highs. So.
Correct. Marvell is one of these too, so it's got a decent high implied volatility, especially in these front months, which means it's going to move, right? It is back to it's back to recent highs, not decent highs, recent highs.
Now I had stock in Marvell, threw a collar around it, or did the whole buy a put spread and sell a call to pay for the put spread, but it's recently blown through my call.
So I'm just, for intensive purposes, even if you didn't have the stock, and this is just for earnings, I'm just going to do something like this.
You could do the same thing. It would be buy a put spread, and then it's the buffer. It's the buffer.
It's the buffer. It's the buffer without the stock.
Yeah, it's the buffer. That's the position. This is the position, and what does that get your break even to?
So now, here's what I will do sometimes when I'm doing this. So I have the stock. I'm long the stock.
Yeah.
And so I will buy the buffer, and I will make it as wide as possible. So here I'm paying $387 for it, right? But I'll go out, I'm sorry, $378. But I will go out and I will pay a little bit for the buffer because I have the protection of a very wide put spread.
Right.
I'm using some of it to sell a call, but I want to be outside the expected move.
There goes Hollywood. Hold on, step back.
Hold on.
Don't spill any water today.
I have to not knock anything over today. I apologize.
But that is something that I will do is if I know I have the stock, which I do, and this is probably what I will do because I've been waiting. I've been sitting on my hands waiting until
and I wish I was waiting. So to pay a little bit, I get it if you have the stock and I've been riding it from wherever it's been. I get that, paying a little bit. And it moves your call further. If I would have paid a little bit further, because I did the same thing around my stock, bought the put spread and sold the call, but I did it maybe a week or so ago, and now my call is the 87 call. Now I'm stuck with either leave the 87 call and take the...
Meaning she's short this 87 call.
Yeah, and if you look at the 87 level, there's still 273 in extrinsic value, but I'm tempted to roll it out to January, because if I roll it out to January, I could still...
Up and out.
I can roll up and out, even though it's in the money. It can roll up and out to January and move it to the 90.
You can move it, for sure. So no, that's what I was going to say. But a lot of times that's why we're waiting until the eve of earnings to place a trade, because I'm sure you placed it last week thinking, okay, this is fine for my earnings trade.
Well,
right?
I don't think I thought they have earnings. I was protecting some of my stock positions with the long put spread, sell a call to cover that put spread, and said to myself, if it goes up and goes through that call spread, I'll be happy. And guess what?
You're not happy.
No. You're never happy. You always think when the market's falling and you sell a call to buy a put spread or buy a put or buy some protection against your stock, you always think, I'll be happy if it gets to that call. Because in that time, the market's falling and you're in protection mode. And you say, I'll be happy if it goes through that call.
Yeah.
And it 9 times out of 10, it goes through that call. And 100% of the time,
I'm unhappy.
Yeah.
I hear you. I wanted to look at something else. Do we have CrowdStrike in here? CRWD? No.
That's what. CRWV is what.
No, CrowdStrike.
Close.
CRWD.
So we do not have that.
So CrowdStrike has earnings, right? Let me see, Bob. Yeah, CrowdStrike. Yeah. So is there anything we want to do? That's a $513 product, and this is one of those things that would be in the IPOs. This wasn't this year. This was
no. This was long ago.
This was long ago.
Because I'll never forget during COVID when my neighborhood they all bought like the 280 calls.
Oh yeah.
Yeah. I mean, that was a long time ago.
Hopefully they're still long, though.
Yeah. So look at American Eagle. That is another one that's been on a little bit of a tear.
Down a little bit today.
Yeah, but look.
Yeah.
Why are you not getting the edge of this chart?
I don't know.
Let's fix this.
How?
Go to the settings. Go to the chart settings. See that little gear?
This one?
Yeah, go to that. And then on the chart, hit chart, yes. And you could hit, do you see it there?
No.
I don't know. There's a way somehow. Layout? Try layout.
Well, I mean, this is exhilarating.
Hey, people, you know what? People might need to know how to do this. Oh, right margin. So you've got the right margin checked, but you have 0 days. Increase the days. And keep going. There we go.
Look at her.
I don't know how that happened.
I don't know.
I'd like having a little bit of margin day, like
just
right
so you can
margin.
see where it is. So this is all-time highs. Now it's down a little bit today. It's got a 78 rank.
But they have earnings.
But all of the, not all, I shouldn't say that all is a very relative term, but a lot of the retailers have gone up on earnings.
Okay.
Now,
and look at, did you see A&F?
A&F, and that's
38%.
Yes, that's what I'm saying. So, and I do believe that AEO got a little bit of a rise. I think it was the other day, wasn't it like one of these where it got a rise from
That was from
A&F.
A&F. So let's do this game. Go to A&F. And show me what is the market.
So take a look at this. This is a very different tale than this was earnings right here, right? And so when you're looking at this, it's real easy to sell puts because it's at the bottom of its range. AEO is already up a lot.
I know, but what's the market cap of A&F? I'm just curious. Now they have Abercrombie, they have Hollister overview.
Do you know who's going to love being on with you for market caps? TP loves this.
Okay, so market cap 4.49 billion. Let's see what the market cap of American Eagle is. 3.45 billion. I'm tapping out. I'm tapping out of AEO.
Because of market cap?
Yeah. I mean, it's getting close to. I'm going to just say thank you for the good year, American Eagle, and tap out.
So I wouldn't jump into this either, but I wouldn't do it because it's at the top of its range and it's harder for me. It's because AEO, it was notoriously, and it's a cheap stock and it's already up so high.
Well, if you go back in time, you can go back. Look, it's in the 40s. You can go.
You're at 17, 16, 18.
No, you were just in 40 territory.
But it only hit there for like a small amount of time.
Yeah.
I mean, it was literally in the 40s for a brief moment in time.
They have Travis Kelce.
When you were buying everything out.
They have Travis Kelce, and they have, who's the other girl?
Sydney Sweeney.
I don't know. And I have been, I've been a fan of Abercrombie for a long time.
You mean AEO?
Oh, AEO. I've been a fan of AEO for a long time, that stock. But at some point...
you know what I'm going to do? I want to see what the diagonal is if we wanted to make a little bit of money on it going up.
At some point...
We can spend 75 cents on a $2 wide.
Sure. Yeah.
We're going to spend 95 cents just to make money if it goes up.
Okay. It's in. And honestly, and sometimes it's not a bad idea. If people have bigger positions, change it to something defined risk or small. That way, if it goes down, you think, well, I'm glad I changed my position, didn't have too much at risk.
Yeah, for sure. Okay, well, we're working that. We'll see. I'm going to go to Twitter and see if we can get to everybody, too, and go down this way. Eric, Blue Wackadoo. Okay, so Ivy ranked down to 15.6, done for the day. Wait, what? Still doing different today. Legging in and out on a 4-lot Iron Condor 16 Delta, but primarily the long side, with 2 shorts, MES Insurance contracts, and a long VX, exited for all 555.
Thank you, Mr. Market. Now on the so good, yeah, 555.
Yeah.
I'd be happy with that.
I like it. So when we were on the other day, when I was on with TP, we popped in and show Blue Wackadoo. And he's like, I worked my butt off and I made $22. And then he showed but I was like, that's realistic. And I really like that he posted that.
No, I've had days like that before. I've had days like that.
At least it was positive 22. And he's like, I'm green. I'm green.
Hey, you know what? I've got a new. Speaking of how hard we work on the SPX, take a look at this, because I was doing this while I was not on air, not at home, or not on the show, but at home, sitting there with my computer over the holiday. I was doing, if you go to the trade page, and I don't know how they're going to price out now.
0DT?
Yeah, go to 0DT. Just like sell the 6810 put.
Okay.
And go to the 1 day and buy the 6810 call put. Like just to the calendar. Just a 1 day calendar.
$8.
So I was doing calendars and I kind of liked them. I do calendars. They were about $9,000, and then they'd come off
$100. They were $800.
Yeah.
You just said $9,000.
Oh, $1,000. I think it's $1,000. So somewhere between $800, $900, $1,000, 1 day calendars, and they would come off pretty quickly. You can take them off pretty quickly.
It's kind of it's
similar
to the butterfly. Calendars and butterflies have a time and a place.
Yeah.
And when you are
I'm gonna put this on right now and just watch it.
You want the put one on, not the call one?
Well, it doesn't matter. It doesn't matter, right?
Well, it does matter because you want it to go in one direction or the other.
Well, I think if you're taking them off for the day, if you're not leaving it on, if you're taking it off, because I know I put one on. I was like, I'm gonna put on this call calendar and hope the call rolls off and I keep this long call. But then it made so much money in a short amount of time, I just took it off.
So take a look at this. I'm just in the 0DT right now, Jenny. Look at what I'm doing. I went into the 0DTE, and you can look at that 6810 put. It is $1,300 in extrinsic value. So that has to come out today.
Yes, today.
So to Jenny's point, it's just that will all decay today. Now you will lose some from your 1 day, but it will still have value.
But like even if we go up, even if we go back up and SPOOs are up 20, you're gonna have that. So look at like stay on the 0 day. Stay on the 0 day and go $20 lower. $20 lower. That 0 day is still worth.
So this would
something.
be 90.
So like even if SPOOs go up 20 and you've got that 1 day put. That you paid $9 something for this calendar, there's still going to be premium in that unless we're up 100, right?
I'm sensing a Jacob study.
Yeah, I kind of like these. I was doing these over the break. I'm trying to get filled on.
Well, it's kind of interesting too. So if I'm just going to kind of put it in real quick. Hold on. So if you are looking at this from this perspective, you're risking $900 here. A lot of times, if you're doing the $10 wide or $15 wide, you're risking $900, and I think your profit potential is going to be wrapped around the same. Calendars and calendar, every version. These are all. We only have 4 things to play with. You can buy a call, sell a call.
Yeah.
Buy a put, sell a put. That's it. And you can layer them to whatever risk you want. This is a defined risk situation.
And the question I would have would be, what would be the profit target? Because
10% on a calendar.
So
which is $90. That's pretty good.
I put one on. The first time I put one on, I put it on with the intention of I'm leaving this because I want to get this.
You wanted the
next
call.
day call.
You wanted the call or the put.
But then I came back into my account a few hours later and it was up like $400. So it was like I wanted that call, but do I want this $400? And so that's how. A spread where I'm risking $900, I'm taking in $1 or $2, can't make $400, but this can.
Yeah, they can.
I feel like this can have more profit potential than a spread where you're risking the same amount. If I want to risk $1,000 on a spread, I can do a $10 wide and take in $1 and do 2 of them.
Well, let's just call a spade a spade. So I've been doing like a $10. I've been doing a $10 wide. So, but it's the same concept. If I went up a little bit, so I'm just going to do a little bit higher. I'm going to go to the 68.25 in the 0DT. I'm getting $7 in extrinsic value, and I'm going to go to the 68.25 here. I'm risking $940, but this will benefit from a little pop.
A little pop.
And that's all I'm looking for is a little pop.
But I don't know. The at the money calendar and the put I just bought was $915. I paid $915.
No, they're all going to be around the same price.
So
they will all be around the same price.
So like a little pop isn't going to change the price because they're all the same price right now. It needs time. It needs time passing.
It needs time passing.
These need time passing
and a little pop. Well, you can go farther out if you want to get the pop, because that's all you're doing. But to your point, they are all going to be wrapped around the same.
Yeah, like
even if you went to the expected move, let's go to the 68.35.
Now, would this be cheaper? Because if you,
yeah, I mean, it's a little cheaper, but not much.
So here, you can see the at the monies are trading for around $9.15. and this is 8:45. So you get a pop up here. It'll be trading around 9:15. But I think you need the time. You need a couple hours to pass. If you had a couple hours pass and we're still trading around
couple hours and the pop.
I don't know. We'll see. So I threw one in, and I paid $9.15 for it. Now it's trading $9.80. So it's up like 50, 60 bucks.
It's pretty good.
I don't know. I'm going to watch it. I'm going to leave it. I'm going to let time
And you have
pass.
the put spread in, so the down move is going to help you.
I just have the calendar.
The
but
calendar.
a
No, you
put
have the put-
calendar or a call calendar, they will, if the same strike, they'll act the same.
Because you're waiting for that decay to go. And mine is a massive movement.
If we're down 50 points, I'm out.
Yeah.
I'm out what I paid for this. Yeah.
Okay, so I'm going to make sure we get to the... Okay, now Florida 7. I wanted to get to this. This is 1 hour ago. With all due respect, most brokers, including tastytrade, treat an iron condor open and closed the same day as a single day trade, not 4 trades. Contrary to what was presented last week, just saying. Okay.
Who presented this?
Me and TP were talking about this because he said, we were talking about the pattern day trading rule. And he said, if I'm trading an iron condor, is it 1 trade or 4 trades? And TP and I said 4.
I think it's 4 legs.
It is 4 legs.
It's 4 legs.
It's 1 trade, 4 legs. And when you're talking about your day trading counter, it's legs, not trades.
It's legs. But
it comes in as day trades. So I just, like I said, please contact the Tasty brokerage firm. Contact anybody. I don't want to misspeak Florida 7, but I did have TP, and the best of my knowledge is that pattern day trading rule, which is why my son can't close it, is because if he opens an SPX iron condor and then closes it, that's 4 round trips.
Right. So that's why people will often do a butterfly.
That's why you've been butterflying it off.
Butterflied off. It's like 2 different trades. You're not closing the same trade. You just open.
So you can have a day trade counter. It's just you can't have more than, I think, 5 round trips. So I just wanted to make sure we got to this one because TP and I were talking about it, and it's 4 round trips, and each one of those is a round trip.
So I'm just trying to look at where it says like today's trades or day trade. Like, is there?
There's a day counter. I don't know where.
I don't know. I don't know if I have it on. I don't. There's got to be a way, and maybe I'll do this in my son's account. Take a look and see like. If I go in and out of a trade in the same, if I do a spread, if I do like 1 spread in and out in one day, what the count is on the day trade counter.
Well, no, and they will.
And it's rolling for 5 days. It's
you
can
have as many. So I want to be very clear about this. You can have a $5,000 account, and you can have 20 trades in a day. You just can't have more than like 5 round trips, meaning open and closed.
Of the same strike.
Yes,
of the
open
same
and closed. That's
can't
what
be
you
like,
can't have.
I'm going to sell the 68.10 put, and then I'm going to buy it back. So
and then I'm selling it again, and I'm going to buy it back. That's 4. And
that
so the iron condor.
2, that would be.
Well, if you did it, I did it twice. I said you sold it, you bought it back.
No,
you
but
sold
if
it, you bought
I
it back.
sold it and bought it back, that's 1. Sold and buy back, that's 2. Yeah, that's 2.
Yes, that's round trips.
2 round trips. So that's why I think for an iron condor, if you've got
1, 2, 3, 4, they're different
4
legs.
I think it's 4.
Open and closed.
But Florida 7 says no. I would just contact the brokerage firm, and I would say again, can't wait till this is reduced. The account size is reduced for this pattern day trading.
Here, you know what? Hold on 1 second.
What are you making a phone call?
No, I'm going to go to pattern day trading rule because I mean we could.
So,
I mean, we could make a phone call. We know a guy. Okay,
that poor guy. We call him constantly.
Yeah, we do. We called him twice today. Okay, the pattern day trading rule defines as a trader or someone who makes 4 or more day trades. Day trades are day trade. So it's not trade counter. It's day trades. Day trades are open and closed. There's a big difference between trading. Like you can have 50 trades in your account, but you just can't close them.
Strike.
In a margin account within 5 business day period, provided day trades constitute more than 6% of total trades. The rule requires account is flagged as PDT to maintain a minimum of $25,000. And day trades are in and out. It's a pattern day trading rule. Not trading rule, day trading rule.
But, and again, his question is an iron condor 1 trade or is an iron condor 4 trades? I always thought an iron condor was 4 trades.
No, it is 4. Like, accounts have been locked.
Yeah.
Things might be changing, but accounts have been locked. It's in and out. It's the in and out. You can trade 100 trades in your account.
Yeah.
But call the brokerage.
Okay. So now that we have that resolved.
Okay. And then Frank says.
Frank always has some insight.
Oh, no, it isn't. He's just saying that he also said that margin was charged on both sides of an iron condor until he got it fixed. But that has nothing to do with pattern day
Frank
trading.
the Great. Frank the Great. He's never ceases to amaze us.
No, but Florida 7, I really appreciate you circling back and do your due diligence. This is just to the best of our knowledge, right? And I had TP, and that was to the best of his knowledge.
Right. Yeah, I'm not a PDT expert.
No, and we're hoping the PDT goes away, but you can trade. Like in my son's account, he can trade 40 times a day. He just can't open and close more than round trips.
Okay, so I know we have a lot going on. Ajit. Happy to see Ajit.
I know. Because I know he's been having trouble with it getting onto Twitter, so I want to make sure he got to this.
So look at this position. Call ratio spread, MDB, MongoDB. Did you see MongoDB on earnings? Go take a look.
Oh, what happened?
I think it's like up like insane. $75. Ooh. See that? MongoDB. Who knew? Did you see the little dot up there?
Wow.
Whoa. What does MongoDB do?
They're a transponsor firm.
There's a what?
I'm just kidding. That's what they asked. That's what Chandler Bing does, and they were like, he's a transponsor.
So when they were talking about MongoDB this morning, and like, oh my gosh, MongoDB up 22%, MongoDB. All I kept thinking of was
Mongo in the trader.
No, Mondelez. Remember we used to trade Mondelez?
Yes, the snack company.
Yes,
this is a tech company.
And so in my mind, I was like, geez, why didn't Liz and I hold on to that Mondelez stock when so long ago when she used to love the Mondelez snacks on the Southwest the flight. They used to give us the Mondelez snack.
Not that. I always think of the trader named, remember Mongo on the floor?
Yeah.
And every time, like I went to a wedding one time and I didn't know his first name, and I'd be like, Dan, this is Mongo. Mongo, this is Dan.
So it looks like he's putting on an upside. Hopefully he's putting on today, upside call ratio spread in MongoDB.
So let's look. Upside call ratio spread. So expiration 116. Earnings are passed. Expected move is up or down $45.
480, 490.
Yes.
1 by 2.
This is pretty good. Let's
collecting $5. That's not bad.
So let's take a look. Trade. He's
480, 490 in Jan. Right?
Yeah, it was Jan.
Buy 1, sell 2. Yeah.
There we go.
Wait, he was collecting $5.
It was also an hour ago. I don't know if that matters.
Yeah, it might have been higher. It might have been higher.
Yeah, it's come down quite a bit.
Oh, yeah, look, it got us. So, hey, you're already at 50%.
Its high was 419. Yeah.
Ajit, take it off.
Yeah.
Lock in that
But here's what I love about it. I like that Ajit lays everything out. It's kind of nice.
So now we have. See, these calendars don't move much. Like, SPOOs were down 6 when I put it on. Now we're up 5 or 6, and it's the same price.
Yeah, but it's also hold on. This is a very expensive product, so a $10 move in SPX is nothing.
Yeah, so it's not. It needs time to pass.
Yeah.
Yeah.
For sure, but I don't mind that. I actually kind of like it.
I don't know. I just feel like there's more profit potential in that.
Well, we've kind of exhausted. I'm not saying exhausted because there's always things to research, but I would like to kind of go on to calendars, and I think it'd be kind of fun.
Yeah, looking
at times to put them on, when to take them off.
0-day calendar.
0-day, 1-day calendars. Because the risk is going to be about the same, $900.
Jacob's on vacation right now, so he's not working on anything for us this week, but he'll be back. Did he say when he was coming back?
He said he won't be here this week. He'll be back for next week.
Okay.
Yeah. Okay, so let's, now I did want to, we went over this a little bit yesterday, but I wanted to assess it today too. So this is Kai's option drive. We usually look at it on Tuesdays on the trading floor. It is bigger, and we went through this whole process yesterday in their morning show, but I wanted to look at this. So the SPX, the expected move up or down, the 1124 was very, very high because of the move before. Mm-hmm. Now, this week, it's an $83 expected move as of Friday.
That was for the whole week. Now we're at Tuesday, and it's still almost 70.
So that's what I'm saying. This was Friday, and so when we were looking at it yesterday, so Kai puts this together on Friday night, looks for the expected move of the week. When we opened SPX yesterday, it went up to like 89.
I know. And
because the volatility was higher.
But now we've got VIX back in the 16 handle. Can you believe that?
What?
Yeah.
Well, it was 16 last week.
Crash. We've got VIX back in the 16, I guess. Yeah. So VIX is 1689.
Oh. Wow.
Yeah, 1689 for the VIX. And
wow, look at that.
But, that's how the VIX chart looks. You get that pop up, and it comes down very quickly. Yep. Usually the down moves don't last too long.
I mean, this was a big month of high implied volatility
because
from April to May.
was the reason you have that giant spike in April is because you had that spike in March. So you had the down move in March and barely a week or two of settling down, and then a big down move again.
Yeah.
So it was like a double whammy, which could happen.
I mean, look at this right here. It's the same thing. It's as if VIX just spikes back up. So we're going to keep an eye on that, but it's 16. That's pretty crazy. And then I wanted to look at a couple other things. Oh, this is the one I was laughing at. Okay,
tell me. Liz has got some big information for me.
So the first time we looked at this, we thought that they were up 25% or down like 25%.
Oh, yeah.
And then the next time we did, we're like, the IVR is down 15%. That's a lot. Just look at SPX. Like, just look at S&P 500 all the way down.
It says major assets IVR.
Correct.
So we would think the IVR is down 15%.
No, I know, but the IVR is 15. It's just down.
What?
Down from last week.
Oh,
it's not down.
So just telling us what it is?
Yes. So that's why I was dying. So we would be like, natural gas is down 54%.
We got to look at this one. This IVR is up 38%. We better go make a trade in there.
That's why I was.
What?
I almost fell off my chair. I was doing the morning show with Tony, and I was like, wait a minute, what did you just say?
Thank God you were on with Kai.
But I didn't say anything then because I was like, I got to save this for Jenny. Because we would be like, Bitcoin's up 94%. Its IVR is 94. It's just up.
No, but we would say natural gas IVR is down to 54%. Geez, maybe those puts we sold can come up. Like, anyway, looking at this now, I look at it with a whole new perspective.
That's what I said.
Now I wouldn't mind taking a look at, we put in our IBIT Jade Lizard, which is probably through the call. So let's take a look at that. We may want to move that out to next week, because with the big move in Bitcoin, with Bitcoin going from like 84 to 90 overnight.
So I think we will take this up. I mean, let's assess that. Let's take it to the tape. Okay, I'm going to open this up. We put it in the 4-day. We have a Jade Lizard type position.
And how much is it up?
It's up 24%. But here we have the 51.52 call spread. That's our what's in suspect. If it goes above 52, we didn't even collect $1.
Yeah, take it off and put a new one on in the next week's cycle.
I kind of agree. We'll take our $24. If you have a Jade Lizard and it's going through the call spread.
This is what happens. People say, what happens with the Jade Lizard if it goes through? It's usually about a $25 to $30 winner.
Yeah.
25 to 30% winner. So I've been failing. I haven't pushed one trade out yet.
It's okay. You're all right. Okay, so then I don't think we've gotten filled on much. So here, I'm going to go through that exact same principle that we do. We're going to go back into IBIT. It's got a 56 IV rank. I'm going to sell the 54, 55 call spread. And I know I'm collecting $23 for that. So what I'm going to do is go down and find something for $23. It's this 45 put. I'm going to purchase that. Then I've got my risk definition locked up. So now I'm going to find a put that is wrapped around $1. So right here, this 49.5 is 99 cents. So we've got what looks like this. Let me go to the curve mode for you. Johnny likes to see things visually, otherwise I get yelled at.
The only thing we've gotten filled on so far was that buying back that core we've put. That's it.
That's what I'm saying. I don't think
I really didn't miss much. I didn't even have to tell you.
But take a look at this. This is what the Jade Lizard looks like. So in 9 days in IBIT, if it stays right within this range, we're going to keep all 99 cents. If it meanders up, we can't lose. But you'll notice it's very similar here. We're not collecting over $1. We're collecting 99 cents. So anywhere in here, if it goes through this threshold, I would rather take it off for a $20 win than a nothing.
Than nothing.
Yeah,
than nothing. That's the problem with the Jade Lizard. If something goes up too far too fast, you might not make anything.
But it's got a high rank, so it's a premium selling strategy.
Yeah.
I kind of like it.
Well, the reason we do it, honestly, in IBIT, we would just be selling those puts if it didn't use so much buying power. The reason we sell that call spread is to give us a little extra credit to buy another put, because IBIT uses a lot of...
I'm just going to go in and sell a put for $1.
Put for $1. I would just be selling puts for $1.
$1,700. We're using $99.
Yeah. We used more than $99.
What did we use?
Probably $300 or $400. How wide is it? $300.
Yeah, like $200, $300. Yeah.
Okay. All right. Did you get filled on that new one?
I did.
Okay.
Let me make sure.
Send that out.
Activity today.
You won't believe this, Liz, but it's already 10:46.
What?
Yeah.
So we have CoreWeave, IBIT, and IBIT are the only things that we've gotten filled on today. I want to go back to that to that list.
Where's booze? Up 2. Up 1.
So, and let's take a look at our natural gas position, which we were talking about yesterday. Natural gas, we are getting into territory. It's got 24 days left. It's a broken wing butterfly. They typically don't open up until the end. What we need is natural gas around 5. This looks good. We don't have a broken. It's regular butterfly. We've got it butterflied off, don't we?
Oh, did we?
No.
4.95, 5.1. No, it's a broken wing.
It's a broken wing. It just looks like it is here.
Yeah, natural gas it's tough. We still can't get in with those downsides. Not up at 5. Not up at like close to the 5 handle natural gas.
No.
Oh, I wanted to put on the gold silver pair today.
Oh yeah, let's take a look at it.
Also, I want to see. I'm just looking at what is the yen doing today because we got out of our yen. It's down a little bit. But I did want to look at the gold silver pair.
What is the gold silver ratio?
So
it's SLV to GLD.
Now
SLV is 52.
Let's slowly walk through this so someone could figure it out on their own if they wanted to. Now I know Tony and Nick, they put this on a week ago and it's gotten worse for them. So when I hear of someone complaining about a bad trade, it's when I look at it for myself thinking, well, if they put it on a week ago and they thought it was good, now it's even better.
And they have Craig from the CME, who I love, by the way, on their show live, and he was the gold silver ratio on the live show.
Oh, yeah.
Remember?
Right.
Don't you think we should take that off? It's very profitable right now.
Right.
Okay, so the ratio of this, if you're going to go notional to notional, I'm looking at 52.28. Jenny's going to use her calculator.
I'm going to use my calculator because we'll figure it out.
So do 385 divided by 52.28. It's going to be...
Hold on.
You're looking at a 4 to 1. 4 would bring it...
So gold is 385?
Yeah.
Divided by 52?
Yeah.
All right, 7.7 to 1. So 7 SLV to 1 GLD. So we're pulling up this ratio to look at the chart to see.
Riddle me that.
What the heck? Flip it, because we'd be buying gold. We'd be buying gold and selling silver.
I know, I was just looking at the chart.
Why does it look so goofy like that?
I have no idea.
That doesn't look right.
So if you're flipping it, you're saying that gold has gone up faster than silver. I think it's the opposite. I think silver's
gone up more.
I think silver's gone up faster than gold.
Yeah, that's why we'd be buying gold and selling silver.
That's why they're sucking gas on it because.
No, right.
Yes.
But that's why now, because it's at a level that it hasn't been at. It's at some crazy level. But I want to see this. I want to see this on the chart. Go to a year instead of a month. There.
That's a day.
There. Well, that's a day. Now hit month. There we go.
Was it a year ahead? Oh, we had it on a year.
Yeah. Okay. There we go. That makes a lot more sense. So, if we are buying gold, selling silver, we want this. We think this is going to bounce back up. So you see this low level on the chart, or if you flip it,
you're selling gold, buying silver. Or you're buying silver, selling gold.
But if you're buying silver, selling gold, you think it's going to keep going in that same direction.
Yes.
You think it's going to keep going in that direction. But what I want to do is buy gold, sell silver, and think that this chart's going to reverse.
I've switched to silver instead of gold bug, and I think silver's got room to run. But that's okay. But what we're talking about is a ratio, because what we're doing here is saying that gold isn't going to go
well,
up
silver's
as much.
been going up. Silver's been going up more than gold. We just think they're going to catch up with each other. Maybe gold will have a little bit of a run, or silver will have a little bit of pullback. Now, I don't know that we could do. Maybe can we do more than 1 by 7?
It's 375. I just want to see what it was.
So let's do like 2 by 14.
Okay, so let's go. Hold on.
Like if we buy 2 shares of gold and sell 14 shares of silver, that is using how much buying power? $750. Now,
that's not bad.
Hold on. I don't know if we use the micros, like the micro silver or the micro gold, because those should have better margining.
I don't know that they do. So let's go through this process. We have a minute, right?
Yeah, we have 10 minutes.
Okay, so, we have 5 minutes. Okay.
So just click on like the micro gold MGC on top to see the notional value, because that's how I would set up my ratio, by checking the notional value. So if you look at MGC and try to buy one, then that buying power is 2,700.
Yeah, this is expensive.
Yeah, we can't afford it.
We'd have to do it. We have
to do gold silver.
We have to do gold silver. So we're using GLD, SLV. We went notional to notional, as close as we could get to 1 to 1.
Now, if we didn't have those high ranks, if we didn't have a very high rank, we could just use options in place of stock. We could buy, one in the money call in GLD, and then what we would have to do is sell 7 in the money puts, or buy seven in the money puts in the SLV to replicate like stock versus stock, and that could give us a bigger position and probably not use too much capital. But there's such a high rank, we don't want to give up so much.
And you can do zebra to zebra too, but that would be expensive as well. You could do a put zebra versus amount of put zebras versus the amount of call zebras. But I'm going to ship this. We've got it in.
Okay.
And
there we go.
Okay.
I'll push that out.
But yeah, the MGC, even though it's micro, it's still big. And then
it's too much for us.
Micro silver. Is there a micro silver? What is micro silver?
MSI.
There
is
isn't.
that it?
I don't know. Because SI is big. It looks like it's little, but it's big.
No, there'd have to be a micro, or we couldn't even consider it.
Yeah, that's $22,000 for the silver. I'm gonna cancel replace this to make sure we get filled.
Okay, so everything should be pushed.
The only thing that I'm not getting filled on is AEO, and I'm going to let that go because I pennied it up to 97, and I'm going to let that one go. I'm going to go back into Twitter, make sure we got to everybody. I'm going to go top down.
Why don't you guys just verify this with the trade desk and report back tomorrow?
You know what? I'll call
Florida 7.
We'll call Quinton on the way home.
We've got an inside line. We'll call.
Yeah, we do.
There's
a Yule log.
Oh, yeah, there's a Yule log. That looks like TP's cake. And see, it actually looks like a log. They made it look like a piece of wood.
I thought it was a Packers sign originally when I looked at it.
When you whip.
Like I went down, I thought it was a Packers cake.
That looked like a G for the Green Bay.
Like a Green Bay Packers cake.
Funny.
Florida 7, I agree. Now, once again, I know they're all changing, so we will. Okay. But we don't. Once again, Florida 7, we will verify with what they tell us, but I still think everybody should do their own due diligence.
Oh, but see, Dave says like he had 4 total legs, 2 total trades, but 1 day trade per the Tasty Trade day trade counter. And honestly, I don't know the rules, and maybe the rules have changed, and maybe those were the rules way back when long ago, but we have not kept up with them.
No, this is right. This is the put spread. So he's correct. Dave is saying what we said.
No, but he's saying only 1 day trade.
No, it's 4. So he did a put spread this morning.
Mm-hmm.
So that's just 2
total trades, but he only had 1 day trade on his counter. Where it should have had 2. We thought in what we were saying would have 2, and he only had 1. Well, we'll make a phone call.
Yeah, we'll get to the bottom of this. We got a guy.
Yeah.
I love this. And
SIL. Frank is saying SIL.
Oh, that's the
micro. Let's see how much that is.
Wait, hold on. I just want to get to the Great Gatsby. Hello again. I was wondering, could you guys show us your vertical spread 0 TD strategy you did in the market measures and the back tester on the platform? Should be a fun challenge. Wait, what?
You know what? Let me find that, and we can bring it to the show tomorrow.
Okay, yeah, because that's going to take a second.
Yeah, I'll find that. We'll bring it to the show tomorrow.
And then what were we going to look at? SIL?
SIL. I'm just curious how much buying power that's using.
That's good. Micro silver, and it is 4,400.
So it's double of the GC.
Mm-hmm. Micro silver,
the MGC.
No, this just went to SIL. What did he say it was?
Yeah, he said SIL. Micro silver. It is. It says it up there. Micro silver.
Is it just
okay?
SI?
So now I'll tell you that SPX calendar, and we're 12 points higher. SPX calendar I put on at 10:30. It's 10:54, so 25 minutes later, we're 7 points higher, and it's up $100.
That's not bad.
That's what I'm wondering. What's the price? Like, they're 25 minutes, and we're 12 booze away from, 12 handles away from. We were down 6 when I put it on. It's been 25 minutes, and we're 12 handles away, and it's up $100. So what would be the price target on this? If we stay around here all day, I'm going to go for the 1,300. Wasn't that the extrinsic value in the 0 day?
Yes. She's going for full profit, ladies and gentlemen.
I don't know.
No, but I think that's good. I think that's our next series. Yeah. Our next series is calendars, and when we put them on and when we take them off. All right, Jenny, out of time for today?
Yes, Liz, have a wonderful day. Everybody out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you back here tomorrow morning.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tanta paciencia, contigo quiero una indecencia, por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. dale, baby, que hoy te sale. Tú y yo estamos en falla, vamos pa' los matorrales. Si tú eres una bici, yo te voy a dar pedales. Pero con cuidado que no estoy en comprar pañales. Yo quisiera que me dé un piquito. Dale de comerte huerfanito, no me dejen visto. Por eso te quiero desacatar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Te estoy esperando en la fila. Yo que tengo tanta paciencia. Contigo quiero una indecencia. Por eso te quiero desacatar.
What's going on, everybody? Welcome to Option Trading Concepts Live. I'm your host, Jamal Chandler, joined by Thomas Westwater, otherwise known as Tuesday Tommy. What's going on, man? How you doing?
Doing good. You know, we doing good except the drive into work this morning. The snow, the roads were crazy. So, you know, just an inch or two is all it takes to mess everything up.
It really does. Yeah, people somehow forget how to drive when there's just a little bit of snow on the ground. I mean, it's the wildest thing.
Yeah, I think it's a problem. Everyone has four-wheel drive now, and they think they're invincible or something. And, you know, when I see a car in the ditch or something, it's always an SUV that's four-wheel drive. And I think it's someone that was a little overconfident, you know, so.
100%. I want to get your thoughts on your Thanksgiving, but it takes me back to mine because we went to Wisconsin for Thanksgiving. And on that, we left on Wednesday. And on that Wednesday, it started snowing. We were heading to basically the Appleton area. And between Milwaukee and basically the rest of the drive, I mean, it was like it's a 3-hour drive, but it takes, an hour and a half to get to Milwaukee. That last hour and a half probably took about 2 hours because there was a lot of dusting on the ground. So we're smart. We're in no rush. We took our time. But to your point, there was definitely a lot of bigger trucks that were in the ditches because, again, they feel like they're invincible. And that is definitely not the case. I mean, you got to be smart.
Yeah, I mean, the four-wheel drive, it helps you go, but it doesn't help you stop that much. So, I mean, yeah, it's something psychological about that, I think. But there's also almost every car now is four-wheel drive. SUV trucks are the majority of American drivers. So maybe it's some bias there.
Definitely. It seems to be a thing. How was your Thanksgiving? Did you basically just make Thanksgiving with all the things that you have at your disposal at your things that you have at your farm, essentially? I mean, what did you do?
No. I would process one of our chickens if I could. I don't think that would be allowed in my house. My wife, I don't think, would allow that. But you know, it was good.
Why not? Do you guys treat the chickens like family? I mean, essentially, do you have names for them?
They're pretty much like family at this point, you know. I left the barn door open the other day, and my wife is like, "It's cold out," and I'm like, "They're chickens. They have feathers, you know. They're outside anyways. Like, they're fine, you know." But yeah, no, it was good. We did all this stuff, you know. I'm not too big into turkey because I find that people overcook it. It's easy to overcook. It's a lean meat, so I like chicken more. I like the ham, you know, stuff like that. But I'll do everything: mac and cheese, stuffing, you know, sweet potatoes, all that. So I feel like Thanksgiving is the one meal where, you know, if my jaw was broken or something, that's what you could put in a blender and it all comes together, you know, so you could drink that as a shake maybe. I don't know. It's just my thoughts.
You know, that might be a thing, Thanksgiving shake. I wouldn't be surprised if somebody creates it.
Yeah.
I don't know if I want it, but I could see that happening. You're a true Renaissance man, Tuesday, Tommy. True Renaissance man. How about these markets, man? I mean, I think, you know, it bears starting with late last week. It seemed like we just continued to drift higher in the markets. And of course, we came in yesterday, a little bit of give back. Today, they're not really sure what they want to do. But what are you paying attention to these days?
Yeah, Bitcoin's rebounding. That's helping risk sentiment a little bit. S&P 500 futures having a little bit of trouble at this November 30th high. We have the 4-hour candle. We got right up to it. Where do we go to? 68.63. And now we're bouncing right back down. So about almost unchanged on the day. We were up about a good 0.5%. I had a one-day call spread I put on yesterday in the ES. It was up about 60% of max profit about just an hour and a half ago. Should have taken it off there. I was going to let it ride, and now it's down 50% of max profit. So, I'm hoping for a late-day rally. Tech is holding up a little bit better. NQ up about 0.55% right now. Some of the chip names, doing pretty well. SMH was up about 1.4% a little bit. It's still holding about 1% up. So names like Oracle, Nvidia coming back there. Perhaps, the first signs of sentiment coming back into this market. So that is a little bit optimistic there. I think we need to see, what shakes out the rest of this week. There's really not too much in the way of economic data, but this is where we ride on the sentiment, on the vibes, so to say. So I think in the afternoon, if we rally into it, that could be a green light to move higher for the rest of the week. If we fail and reverse here, I think it might be some pain ahead. We'll have to see what happens. I mean, the VIX down a little bit today, so volatility contraction. Bitcoin up. We even got the corn and the wheat finally doing something. So
finally doing something. I know it's been a while in there. Folks, of course, we are streaming on YouTube here. Just go to the tastylive page on YouTube and you will see us pop right up. We're going to answer any different questions you got in the chat, so please don't be shy. Jump in and put some questions in there, and we'll certainly take a look at them when we can a little later on. Let's pull up the platform here, guys, and let's take a look around markets. As we can see, S&P 500 sort of clinging to life here. I was and as I mentioned to you, I was doing a little webinar earlier with the Mad Hedge Fund trading people. They are marketing partners of ours, been good friends of ours. And as I was sitting doing the webinar, I mean, it seemed like, we were up 30 at one point, and then we literally faded, went to 0, and then now we bounced back up 4. So markets do seem to have sort of a listless feeling to them today. They're the only ones that went red, though, I believe. I think Russell 2000 might have gone red a little bit, too. I can't remember. But NASDAQ seemed to have stayed positive, and now it's up 128 points. Dow has been, at times, the leader in the clubhouse, but NASDAQ has supplanted it. But Dow seems to have been fairly strong today. You mentioned vol, and you're right. I mean, yesterday, they were somewhat bid, but today seems like volatility is kind of coming in here. I would say strong contango in the front 2 months when you look at it, about $1.60 difference between the Z contract and the F contract. So, again, it's still 18. Which is, it's not 20, but it's also not 15 to 16. So I think that kind of speaks to the kind of market we've had this year, Thomas. Like, this market has really never really had a let up. I mean, there was not, like a solid month of boringness, whether it was summertime or even, to start even right before earnings season. Like the typical times where you expect to be quiet have not been quiet in the market. And there's always been something going on, whether it was tariffs early in the year or, what are the chances of the rate cut, more recently. Like, there just seems to have been something going on all year. And I feel like VIX has kind of kept a constant bid of at least 17 to 18. It really hasn't gone much below 16 that often throughout the year. It's kind of weird. But it's been good because there's been a lot to do, I would say. Bonds here sort of, but these 30-year bonds really gave it up yesterday, and they're still sitting at those lower levels. And then you mentioned, gold and silver sort of reversing the moves from yesterday. So these are kind of faded hard. But again, I will say the bigger theme for me is looking at the S&P 500, looking at gold, and looking at Bitcoin. Now, typically, there's really not much correlation between any of them, but what we've seen over the last couple of months is they were pretty highly correlated, and it seems that a decoupling is taking place. I'm not sure if you've noticed that, but it's definitely something I'm paying attention to.
Yeah, I mean, Bitcoin has really dived lately, and the market has, comparatively held up versus that. At the same time, we got this big silver move now pulling back a little bit. Gold is pulling back a little bit. So today, NASDAQ up, gold and silver down, kind of your risk on environment. And we're in the second day of December here. I'm sure Vecchio has mentioned this a couple times by now, but December, you usually get some good seasonality where stocks drift higher to end the year and volatility drifts lower. So, that usually happens in December. Doesn't mean it's going to happen again, but so far, it looks like that's, and only 2 trading days so far this month, but it looks like that is kind of starting to play out a little bit. We'll have to, wait and see how as time goes on if this develops. But if you're going to take a shot on, some equity long exposure and assuming that volatility will continue to come in a bit, that view would line up with what historically happens in the market at this time of year.
I mean, look, it wasn't that long ago, honestly, where things were looking kind of ugly. I mean, we were sitting on the 100-day moving average. We had breached that 50-day moving average, and it was not looking good. And then last week sort of really repaired this chart here and how the market looks. And now we're sitting, near recent highs. Of course, all-time highs were, and this is the futures, but all-time highs were just below 7,000 here, which I think a lot of people are looking to see if we're going to return back. But we clearly have to clear this area. We have to clear this breakdown from 1113, which the high was 68.92. And I think that's what the market has been flirting with more recently over these last sort of 3 trading sessions here. So we'll see if that ends up happening.
Yeah, I mean, if we do break that level, it looks like there's some more strength ahead. But you're right, there's a reversal. That this most recent downturn, it was kind of fueled by some skepticism in a few of the AI names, some hesitancy over if AI spending is going to continue to accelerate, and more so if it's going to turn into profits. What point do investors need to see returns to continue fueling this? And there's some, I think you've talked about this, but a lot of the investment is a little bit circular in nature. Companies investing in companies, they invest back. It's a really fragmented market now, as most markets are in the early days. And then as consolidation takes place, a little bit more focus comes into the picture. But, right now, are we getting out of this hype phase of the AI trade? And, if we do get out of the hype phase, I don't think it means that these stocks collapse. I don't think it means a loss of faith in them. I think it just means that, the gains won't be as acute. They won't be as strong, but will still drift higher on the premise that AI spending, will increase productivity in the labor market. And that's actually one of the things a lot of Fed members have talked about is AI boosting productivity and how it's going to influence that neutral rate that the Fed is always talking about. But speaking of the Fed, we have a decision coming up soon. And I don't think the market is as focused on this decision as what happens next year, especially with the announcement that Kevin Hassett has the Fed chair spot. That puts Powell in kind of this lame duck position where what he says becomes less and less influential as time goes on.
Yeah, and it does seem like the decision is all but made, but you're right. It's going to be interesting to see what they end up coming up with. Bonds I mentioned yesterday. And again, obviously these bonds aren't really that much affected by whatever decisions coming down the pipe in December, but big move in bonds. I don't know how much you were paying attention to this. What do you make of this from yesterday? It's kind of a really big move.
Yeah, this I don't like because I was long ZN, I was long ZB. Those positions, they were doing just fine. And now they're obviously not doing fine, but My ZB, I still have 52 days left. The ZN, I have 24 days left. I might just abandon that because this is a big shift of where we were going. We've broken down into new lows here going back since September-ish, I think early September there in ZB.
Yep.
You know, this came after the White House announced Kevin Hassett as the chair, and I think it kind of is confusing the outlook on the Fed. And the outlook was already confused. You know, the dot plot had the widest dispersion in the rate path, meaning the members forecasting where they think rates are going to be are not aligning as much as they have in the past. So, you know, Fed members are confused on where the rates are going to go. You know, there's the hawks, there's the doves, but we are going to shift into a more dovish Fed because obviously, you know, Trump has been pushing and pushing for lower rates, and now he is putting in place a Fed chair who is probably more receptive to his calls for lower rates. So I think the market right now, what it is seeing is, you know, maybe we get more aggressive in the front end, that is cuts over the next 6, 8, 9 months. But those cuts, if they're done when they really shouldn't be done, if it's going to accelerate demand to the degree that it, you know, probably will when the economy is still doing fine, we could get a reignition in inflation. So maybe we're looking at higher inflation from lower rates coming in the back half of 2026. And what would have to be done if that's happening? Of course, if inflation starts rising faster than it has been, you know, pretty much the only way to cool that would be to raise rates, get the demand back down, so these prices fall. Because in the current political atmosphere, inflation reigniting would not be acceptable to most Americans. We've just gone over a very long period of higher prices. It's not received well at all by the American public. And if that happens, you know, we do have midterms coming up. And, you know, this administration that's been calling for more dovish rates could be forced into a position where, you know, they have to let the Fed hike rates. I mean, that's very speculative right now. But, you know, that could be one thing that's pushing rates higher is, you know, bond traders are focused more farther out now instead of what's going to happen closer in and having a more clear guide on the rate path.
Yeah, I mean, that would be something if all of a sudden we have to raise rates, I tell you. And right on cue, as you mentioned, you know, inflation. I mean, we're supposed to get an inflation number this Friday, it would seem. As you can see, there's a little bump in volatility here, about a 14.5 IVX right now. And it looks like we'll get an inflation number, but it's going to be from September, I think. So who knows? I don't know how much bearing that's going to have on the market. I'm not sure how they're going to take it. I'm sure it can be, you know, it can be taken a whole lot of different ways. Doesn't matter whether inflation was higher then. What is it really now? And who knows? We'll see how it plays out.
Yeah, I'm not sure the PCE data matters that much because it is so backwards looking. Unless it's a number that's way outside of expectations, I think the market stays focused on you know, the future. And you know, the Fed is next. Is it Wednesday? I think they're always Wednesday.
Yeah, next Wednesday, the 10th, right? Yep.
I think that is now going to be the focus for the market and seeing what these policymakers say, what they do. So perhaps, you know, next Wednesday is going to be the signal if we get a rally into the end of the year or not.
Yeah, I saw something, and not only just because I saw it, but it kind of comported with the idea that I felt. I mean, there's been plenty of times where you have a week like last week, shortened week, and the market just kind of continues to drift. And it did, and it continues to drift in one direction. In this case, it was higher than it basically did. And I felt like, okay, well, if it's doing that, for sure Monday we're going to pull back, or maybe sometime next week. And so as a result, that's kind of how I walked myself into basically a negative delta buster trade, selling the 68.75, 68.85 call spread to buy this 6,800, 67.90 put spread. I just figured it also worked well with basically my long be around the 6,800 strike. I think I collected $1 for this. I can't remember exactly. What did I collect for this? I collected $1.50 for it. And you know what? It's funny. I mean, these aren't trades that this strategy, I get sort of attached to strategies at times. And I start to put them on in a bunch of different places. I've been mostly doing bullish ones of these, but this was the first one I was like, well, I still have a bunch of these bullish ones. I have them in SPYs and Qs, Microsoft, Tesla. Most of them are in January and or February. And I was like, well, let me just put one on because, again, the market drifted higher for multiple days in a row. Maybe we pull back. Now, I don't even know if this CPI report was scheduled initially, but they just moved it to this Friday. So maybe that works out for me and I end up getting a little money out of this thing. We'll see. Yeah, we'll see.
Yeah, I hear you on getting stuck on strategies, but when something's working, if you do a strategy, it works. I think you're more likely to do it again. And, you do it until it stops working or until the market, it changes so much where you're like, hey, this will not work anymore. For instance, been doing iron condors on crude oil for probably 6 months now. And it continues to work. So I continue to do it. Why not?
Yeah, because essentially you have very few times like this where maybe it'll disrupt something like that. But even then, if you just hold on through it, a lot of times it kind of comes back to whatever channel it's been in. And yeah, this is the state of oil. This is kind of how it's been this year. Again, flare up or blip every now and again, but for the most part, they don't last longer than the time period that we hold options. So we just kind of hold on through it and it ends up working out for you. I don't blame you.
Yeah, and crude oil has been, really tradable this year. It's like you just showed. It holds to these ranges. When it breaks out into a new level, it comes back before it recalibrates into a new range. So there's a lot of ways to maneuver on it. There's a lot of forgiveness as long as you're giving yourself enough duration. It's been a very forgiving chart pattern going on almost the whole year.
It really has. Folks, we're streaming. You guys can ask any questions and we'll jump in chat, see whatever you got. I as far as trades today, the only thing I've done, and again, I did these actually while I was doing a webinar. I did, you talk about iron condors. I did an iron condor for tomorrow. $2 collected on the $5 wide iron condor. Hopefully this works out. Not a whole lot happening there. I ended up working myself into a iron condor and AMD as well. It's not crazy high vol, but it was actually 25 IVR at the time, $10 wide condor. I was able to do it for 305s, or basically 1/3 the width of the strikes. You don't really see that too often nowadays, especially if it's like 20-something IVR. But we all know that this name has been moving around a lot. Again, different than crude. This has moved around a lot. This, whether it's this or Micron or any one of these names, whether they have high IVRs or not, they move around so much, and you haven't been able to make money on the neutral trades in these because they just move so much. I'm hoping AMD has calmed down some, but who knows? You just can't predict it, especially like you said, with what's going on with all the AI names. And so as a result, outside of this trade, I do have some others. This Microsoft is calendar call spread, but then also, again, like that positive Delta Buster trade that I've talked about, I got that in here. And again, this stock has been decimated for the most part. So I'm trying to, a lot of these, I'm trying to see if they'll get back to sort of these ranges that basically where you're seeing like sort of 50-day moving average and 100-day moving average metas the same way. I want to see if they'll at least reclaim some of this. I want to see if Meta reclaims 700. So that's what I got going on in there. And again, these are January/February because it's going to take some time. There's been some real damage to these names, like you said, as a result of this narrative of is AI going to actually, really bring a profit to a lot of these names, or is there issues there, or what's, how is AI going to be? Is AI overvalued, right? That's really been sort of the thought process. And I don't know if that narrative is going to run crazy, but as a result, outside of those few names, I've sort of raised some capital just in case, because not only has it been with AI, but obviously with crypto, you mentioned Bitcoin as well. We're seeing a bounce here today, but I wouldn't be surprised if this is short-lived because they've just really been hammering crypto recently.
Yeah, and I mean, the crypto, it kind of, especially at this time of year, it brings into question like liquidity. You think maybe people are selling into the holiday season because the economy, while we're not in recession, it's slowed a little bit. Some stagnation in the labor market. Perhaps people are finally dipping into their crypto. And Chris brought up a good point the other day. If you're seeing selling in the most speculative asset or very speculative assets like crypto, once the liquidation is done there and a lot of people who need that immediate capital get out, does it then churn to stocks? Does it then churn, all right, people are out of their crypto, they've raised as much money as they can. Now you have to, if you need more capital, where do you turn next? It's probably stocks. So, I mean, I see it as a cautionary tale right now, the movement in crypto, but I'm staying cautious on that as how it could affect stocks, but not saying that that's going to necessarily translate into selling in stocks. Although I wouldn't be surprised if it does proceed, because earlier this year, big moves up in Bitcoin did precede moves higher in the S&P 500. Excuse me.
Don't die on me, Thomas, please.
Try not to. There's been really dry,
Yeah. I see you guys in the chat now. Sorry, Theta Trader. I don't even know what BSOL is, but the fact that it has not many options here, this thing is very illiquid. Good luck trading it, buddy. I hope you're having fun with it. I can't join you. Brandon, what's up, man? Thanks to giving props to me and Thomas. Appreciate you, buddy. Good to see you as always. I don't know what you guys are talking about. Orca? If the orca is wearing a salmon hat, you're dead already. I don't even know what that means. But somebody does have a question. Bullish on IBIT and Ether. What do you do to not cap the upside? Well, I show you what I'm doing. IBIT, I actually have, I'm actually doing kind of the Mikey thing here as far as this could end up being one of those all year type trades in here. I'm collecting vol in here. I feel like there's we always talk about how options are mostly overstated and volatility. I think a lot of these are, and meaning a lot of these IBIT options. And so I've worked my way into a straddle. That's not my initial position, way into a straddle as of now. And I think this thing is slow moving enough that I could actually win on it. We'll keep this going for a while. I wouldn't say this is a bullish position for me, but I'll show you in ETH. I do have a bullish position. I have a zebra. And so I would say this is definitely one way to not cap your upside. This is not that expensive of a trade. This is like 200 maybe? I don't even remember. No, I paid, okay, looks like I paid 1,000 for it. Well, I've had a couple of different trades, to be quite honest. The current trade I have now, I remember when I did that, it cost, about $600 and change. This is obviously my total trade, which I've lost money for because I've had a couple of zebras in here and I've rolled a couple of them. They really haven't worked out, but obviously the ETH and the stock has been going lower. But this is my way of not capping my upside. I'm long the 1820 zebra, and I'm just going to let this thing ride for a while. I'm out in February. Hopefully we can ride out this wave right now, and maybe ETH will start bouncing back. The other thing I did recently too, yesterday, I bought an MET contract. I mean, these are so cheap. It cost me $110. Right now it's like $99 in requirement. Again, this is a margin account, but these are so simple, and they're 1/10 the size essentially. As you can see, right now ETH is up $274. I'm up to $27.40. So these are fairly simple. And again, you could slap a couple of those on if you want to. Totally up to you. I basically just did one with the idea that ETH was probably going to fall and may still fall, and maybe I'll grab another or two at that point, but I'm just trying to be smart and just layer into it. Hope that helps. No other questions in the meantime. Are you still trading nat gas right now, or what's the deal?
Yeah, I'm still trading nat gas. I'm still in my two positions, both short put spreads. I'm in the F6 contract, which is 24 days out right now. I'm going to get rid of that one Hopefully the next up move in the next day or two here. Currently at 35% of max profit. And then I have the G6 contract, which of course more time on that, 56 days to expiration. And the short put there is at 4.1. We're about 36 cents above that right now. So I'm feeling fine on that as well. Weather modeling, it looks pretty good. One thing that's, cooled sentiment in nat gas lately is these peace talks with Ukraine and Russia. So, a lot probably depends on how that plays out, but ultimately it's going to be the weather this winter. Hopefully we get some of these cold Arctic blasts coming in. But so far the chart, it looks pretty tradable. I mean, to the long side. We are pulling back here in the F6 contract right now, but we are holding that November swing high. If you exclude the end of November, that mid-November swing high, right there at 484. So we're at 485.9 right now on this pullback. If I wasn't long already, I'd probably do another short put spread and just try to play for some at least consolidation or more upside here. But if you look back, going back to mid-October, we've put in a nice series of higher highs, higher lows. So, this does have an upward range that it is trading between. Of course, we've had some wide swings, but we've maintained an uptrend. So we will get the storage report later this week from the EIA. And as long as these weather models don't shift to a very warm tone here, it's going to be fine. The NOAA, the National Weather Service, has this 8 to 14 day temperature outlook. It's really easy to look at. We're showing below average temperatures, the likelihood for them through December 9th to the 15th. So it does look like we're going to have cold weather where most of that demand is concentrated on the East Coast. So that helping keep prices elevated right here, right now. I'm still bullish on it. I'm going to stay bullish on it for now.
Isn't it supposed to be somewhat of a colder winter this year? I feel like we got a little bit, a decent amount of snow fairly early in the season. I did hear that, or am I imagining that?
Yeah, no, I think for at least around here, it was a record-breaking November storm event. But the mid to long-range forecasts, they're usually, you got to put a lot of skepticism on those. Really, it comes down to when weather models are inside 15, 20 days, you usually get more confidence. And trading off that, and if you're doing a trade 45 to 60 days out, you stay above 22 days. If you're going off of those weather models that are 14, 20 days out, that usually gives you enough time to react to moves in the prices. So I think it's always the best to look at the shorter term forecast and trade off of those. But, I'm trying to find some of these longer term ones. The ones I saw actually for January were on the more mild side. But again, I don't think you put too much stock into those when you're trading, but they are interesting to look at.
Yeah, it's an interesting curve here too. Obviously 480 and the F contract drops by 40 cents and then drops by another only 10 cent difference between March and April, which is basically that. No, it's not. Wait, what's the Widowmaker spread? I always forget. March, April, or is it February, March? February, March, right?
The Widowmaker spread.
Yeah, I think it's March. I always forget.
I think it is February, March. It's the back months because you're trying to gauge where supply is going to be at the end of the winter withdrawal season. So yeah. I mean, it looks like people do March, April a lot. But yeah, usually the spreads in the back months for the winter is what you try to look at. It's called the Widowmaker because it is very, very volatile.
Yes, very much so. 6 cents difference between Feb and March right now. So that's decent. Between March and April, not a whole lot. But yeah, I mean, this, net gas is always an interesting trade. I had on an iron condor until late last week, and I closed that out. So no energy positions for me as of now. No nat gas, no imps, no oil as well. Gold is something where I have a position in GLD, and this is the funny. I keep saying this is the funny thing about some of the recent changes up in programming and pairings. I mean, now I'm trading sort of strategies that I typically haven't done, but I really didn't, look at them much. And so that crab trade is one of them, something that I know Mike does quite often. And I've kind of picked up on that one. I've done that in gold. I actually had some on in recent weeks, and they worked out well. I closed them also last Friday, but I put on another one further upside. And so now I am long the 390 call in Feb. And again, these crab trades are essentially like, they're like butterflies, just using across different expirations. And I got this $15 wide. So in January, again, I'm long 390 in Feb, but in January, I'm short 2 of the 405s. And then obviously to cap off my risk, $15 higher, I'm long 1 at the 420 strike. And I think I did that all for about $6. Yeah, $6.50. So still kind of right there for those who are interested in doing that type of trade. I'm actually lucky that this is really not moving, even though gold is moving quite a bit, really not getting beat up on this much at all. So that's working out well for me today.
Yeah, gold, I'm in I got in yesterday to a long call spread, 56 days out. So I have plenty of time, obviously not working out at a great start today, but long the 4,400, 4,410 call spread for January 27th. And I actually have an order right now in for silver. I am going to try to sell a put spread at 56, and I'm going to place that the long side at 55.9, so pretty tight there. But you're looking at max profit at 240, max loss at 260 with a 61% POP. As of right now, it's got about $2.50 protection to the downside with 56 days. So, I feel comfortable putting it on right here. I would have preferred a slightly bigger pullback today. But the way it's been running, I've been long silver all year. I wasn't in the previous 3-day rally, so the biggest rally of the year. Being in silver most of the year, I missed out on that. So having some FOMO and just trying to get back in that trade right now. So we'll see how that works out. But, long precious metals, it's pretty much been working out all year. And as of right now, I don't see a reason to change that. There is some, volatility in the bond market with this Hassett news and things like that. But, if these changes on rate cut outlooks, spur some volatility in the market, perhaps it hurts gold and silver right away. But, when you go through periods of volatility, gold and silver usually come back stronger. And if it is driven by a fear of reflation happening, what is the traditional hedge against inflation? It's gold. So I mentioned yesterday to Chris, 2026, I still see it being a very bullish year for gold and silver. Silver's having a little bit of a supply problem right now. Do note that silver market is much smaller than gold, not only in terms of the contract sizes, but in the actual supply of the metal itself in the world. So, when you do get a supply constraint on something that is already a smaller supply, it could have more force on the prices. And I think, that's partly what the past 3-day rally has reflected a little bit here.
I feel pretty good personally because I bought some physical silver bars like in 2021 and in early 2022. I know, right? Figured it was something to do. Why not? And it was funny because there was this guy. Actually, Ryan is the one who knows, Ryan Gray. So Ryan knew this guy, and it was back when Ryan and Victor used to do a show. And Ryan knew a guy, I think he went to high school with him, who owned one of those dealers or whatever. And so that was actually the one that I ended up hearing about, bought it from there. And again, it's one of those things where you got to factor in delivery costs, of course, in actual physical stuff, but it's kind of interesting to do. And again, I have them upstairs. They're in the safe. It's kind of fun to have some silver bars, pull it out, look at it every now and again.
Yeah. You have a party, show people. Here's where I keep all my silver and gold. Yeah.
Yeah, right.
Just cover the combination when you open it.
Yeah, exactly. Isn't it kind of interesting, though, that it's been an all-year thing with gold and silver? I mean, regardless of the narratives, and the narratives have changed quite a bit at times, whether it's, we have a high inflation or, inflation is leaving, it doesn't really seem to matter. It's been strong for them. I mean, does that strike you as weird, or you're like, nah, that makes sense?
Yeah, I mean, I think what's been driving precious metals and more gold this year is, starting kind of with not even the tariffs themselves, but the expectation of tariffs. Because if you're getting more or less friendly to other nations as the United States, who drives world trade, all these central banks responded by at least partially getting less exposure to the dollar, a little less exposure to bonds, and what do you have to replace it with? One thing that's been replaced is gold, and we saw it with the PBOC a lot earlier this year, especially, is they were buying gold. Russia also started a new silver acquisition program where they're now stockpiling silver as well. And even India, I've heard, traditionally you gift gold and India and gold for all the holidays, weddings, things like that is giving gold. I've heard that silver is actually starting to become more popular in India, which, India drives a huge amount of gold demand, especially through jewelry demand. And, all those factors can confluent together is, I think, helping drive up the price. Also, as confidence in the Federal Reserve gets a little, less steady, and maybe that's due to political interference that we're seeing. Maybe it's due to something else. But I think, one of the things, if you're having a loss of faith in not only the Federal Reserve but government institutions as a whole, I think it lends some credence to buying more gold and silver, especially physical, like you have.
Yeah, you're right. No, India's always kind of driven a lot of demand for gold, but it's just been an interesting year with gold, man. I mean, it's really been able to sort of navigate any narrative, and yeah, I mean, until proven otherwise, I don't see any reason not to try and play to the upside. Again, I think I'm not jumping in with both feet, I would say now, as probably I was earlier, and by both feet, I mean earlier in the year I had like pretty wide gold call spreads, probably like $50 wide. And I was paid well for them because they ended up obviously moving pretty strongly. Though I think that was a trade you could do with regularity. Now I think it's, kind of like you did. It's probably smarter to keep it tighter because you just, who knows how it's going to go. And again, it's been a little bit more sort of the tug and pull, I would say. I mean, obviously, despite the recent couple of days, but like over the last few weeks, it's been a little more tug and pull. It hasn't been sort of the straight up like it was, some months back. So I'm sort of trying to use those crab trades as a way of being patient while it continues to drift higher. Hopefully, we'll see how that plays out. Yeah, outside of that, man, for me, again, a lot of these Delta Buster trades. I got Palantir is one of them. February, I got that going on, selling the put spread to buy the call spread. Meta out in February. We'll see if that bounces back. IBIT's kind of working out for me today. It's been a while. Obviously, higher IVR. Short this straddle in the meantime. We're firmly in that 45-day window now, so that's what January is. And I think a lot of people have either rolled most of their stuff, or if you're not, I'm not sure you're waiting on, you might as well at this point. But I know there's a few things I could probably manage. I could probably risk manage this calendar call spread. I'm not going to do that right now, though. Robinhood is one where I moved out to January. This is really not that high of IVR anymore. So whether or not I'm going to hold on to this, I'll see. I'll probably just wait to see if I can get to positive on that, and then maybe just close it out, because there's no reason to be short this with the 18 IVR right now. But I really haven't seen much that I loved in recent days, and I'm kind of hoping for a little bit of vol pop here, whether it's heading into the Fed meeting or after, and maybe we can get a little bit of vol to sell in some of these names, because there were, these names not too long ago, Nvidia's of the world, without earnings, IV ranks were a little bit on the elevated side, just because, again, of that nervousness we were talking about around the AI names. And it seems like that's kind of calmed down in the meantime.
Yeah, definitely. One kind of interesting thing right now is corn. If you go over to that chart.
Yeah.
We are getting, so the USDA is starting to release all the data that stopped with the government shutdown, particularly export sales. And, it looks like accumulated exports of corn from the start of this year are now almost 60% higher than where they were a year ago. So corn exports really tracking pretty well, and that's after these. It's partly because prices are down, right? Foreign countries, they see, U.S. corn is cheap, might as well start buying some. It's as these trade deals get negotiated, commitments get made to the U.S. government. Of course, one of the big things right now in those trade negotiations is trying to help out farmers, because saying, buy some corn from us, buy some wheat from us. Wheat, the same thing, not as strong as corn, but wheat is up about 22% from the same time last year. The one thing that continues to lag, and this is because of China, is soybeans. Soybeans are still down a lot from the same time last year. So soybeans, they had this nice rise back in October because there's a lot of speculation that the U.S. would secure commitments from China during the trade deal. So they have had a nice run, but I think that is over for now with soybeans. And, there's decent volatility, not great in there if you want to play something like a short call spread. But for me, I'm staying in my positions in corn and wheat. So corn, I have a short put spread at 430, 440. That's 24 days out. So I'm about to roll this, and I'll probably roll the strike price is up to maybe 440, 450, 445, keep it a little tighter there. Wheat, same thing, 24 days out, so I'll have to roll that as well soon, but I'm in a short put spread there at 510, 520, so we're $21 above my short there. I'll probably do the same thing. I'll probably roll up to 520, 530 there and just give myself a little bit more duration. And, if exports are continuing to increase. Right? What's that?
You're in put spreads, right?
Yeah, doing put spreads. Volatility, I think it's a little lower than where I initially put those on. IV rank in wheat right now, it's 10. That's not that great. Corn, definitely a better IV rank, 58.3 in corn. So, I think you can maneuver in corn a little more than you can wheat right now. So, if you're looking at corn, wheat, soybeans, the preferred trading vehicle is probably corn with that IVR to get some premium selling going there, depending on your direction. But things are shaping up with the government coming back online, export sales continuing to be rolled out here, and they're looking strong. Corn prices have been suppressed for quite a while if you look at it compared to, back in 2022. Corn was trading up around 700, 650. We're at 450. You assume that exports, if they continue to increase, maybe we could breach 500, which was the swing high from back earlier this February. The swing high, 504 it was around. So, we breached 500, maybe some more upside, maybe some more bullish speculation coming into the market. But of course, those export numbers have to stay on trend for accumulating.
Yeah, you're right. You look back, a 2-year weekly chart. A lot of these are still lower than they were a year ago at these times. So these are fairly low. And this is the one that has the most vol in it. I think I'm going to try and get a little something off in here. See what happens. They do trade by appointment at times. Volume today. Okay, a little volume on that strike. So we'll try it. We'll try and get that off. We'll see what happens. Yeah, I haven't had a soft trade in a long time. It's been a minute, probably a couple of years.
Yeah, I mean, yeah, corn. It's I'm looking through the trades right now. You could get pretty wide. There's good volume in corn across a lot of the strikes too. So there's not wheat is sometimes a little lighter, sometimes harder to get into the prices you want to. Corn is pretty liquid product, pretty nice to trade. It's usually always pretty nice to trade with good vol.
True that. Only 4 minutes left in the show here as we wind it down. Looking at currencies, you got anything going on in the currency line?
No, I've been out of currencies for quite a while now. A few weeks I haven't really touched anything, and that's because we keep saying the dollar bottom is in. I was thinking about shorting the euro last week when it was testing or about to test those November swing lows, trying to play for an extension, but we've gotten a bounce back higher. Now we are back above the 9 and 21 day EMAs. Today's swing low, yesterday's swing low, and the day before that, the intraday price action, it respected those 9 and 21 day EMAs, and we've stayed above it. So my confidence in going short the euro has pretty much collapsed right now. If we move back below those EMAs, I'll probably take a short stab. The euro, pretty good volatility in there right now, 32.3. That's pretty good for a currency future.
No, for sure it is. Yeah, I've had this short delta trade in here for a while. I actually probably might have to roll this, but I've had this on for a little bit, just the 116 to 113 area, trying to see if it would actually get down to what was I looking at? I think I was actually not on the. I guess I could look at it from the weekly, but I wanted to see if it was going to get down to this sort of level here, this 113 level. That's on the 2-year weekly, but even on a regular, I mean, it's just my way of being long the dollar, essentially, for no other reason than that. I just wanted to do that, and I figured this was the best vehicle to do it. And what's funny is that in the Tasty FX account, I'm doing the opposite. So I'm actually short the dollar in here via multiple different trades, whether it's I am long the pound dollar, or I'm short this obviously US DJPY is a whole nother animal. Speaking of, as we wind the show down, Mikey is in Japan, so he'll be back next week. He's actually off for the week, and it would seem as though while he's been there, let's see what's going on with the yen. It started to move to the upside, but it's still kind of weak here. So I know this was one of the things that was really hitting me hard in the Tasty FX account, because some of the trades that I had are basically long yen, and as a result, I was getting killed on, particularly Euro JPY and USD JPY. But this is my strategy in here, just being long, short the dollar in there, long dollar in this. One of them eventually wins out. We'll see what happens.
Yeah, for spot currency, pound dollar, I think is actually a decent short right now. We're coming back up to this this August swing low here, so on the weekly, I kind of like that right there. But we're also staying above the November range that we carved out the top side, kind of bouncing from there. So maybe I'll wait for us to drop below 131.5 on pound dollar and then take a stab at that. But I need to utilize the spot market more. I've been the only position I have on right now is long dollar franc, and that has pretty much unchanged from when I put it on 2 months ago. I've been waiting forever for it to do something. It hasn't, so I might try another currency pair there to try to get a little long the dollar. I think it is eventually going to happen. It's been, people have been fighting back on it for a while now.
Yeah, I heard if you don't do it soon, they're going to remove the FX from the beginning of your Twitter name. At least that's the rumor.
Yeah, they might. Yeah. Yeah, that's
Guys,
that's all I used to trade as spot.
I know, and then your world open up all of a sudden. You get the tasty. Guys, that's our time. Thanks for watching the show. Of course, anytime you want to reach out to us, you can reach out to us on Twitter. Thomas is at FSS Water. Mikey's at Trader Mikey B, and I'm at Jamal Chandler. Thanks for watching the show, and we'll see you here tomorrow at 11 a.m. Central. Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday. We got another volatile market on our hands. We'll get into all the details of the positions. We got a couple trades that we took today. We're in one right now, too, pretty much around break even, but we'll break all that down. Before we do, how are we doing today, brother?
Doing good. Yeah, very rare first mention from me on the show, but crypto. Shout out to Bitcoin, turning it around a little bit.
Right.
I did get longer and longer.
From you.
Yeah.
Oh, yeah, absolutely.
I got
what you got going on?
Longer and longer. Some IBIT. I have lots of IBIT going right now in different, lots of different ways. I got naked calls. I got verticals. But I did catch IBIT pretty much at the very, very bottom, like Bitcoin at 85,000 and picked up a naked 55 call, which has been pretty much straight profitable since I put that on. That was yesterday, and then, or 2 days ago. And then, I also I got all kinds of stuff. I have. we can pull up my platform here real quick.
let's
Actually,
run it.
probably easier than trying to describe it. Yeah, beautiful. So I have this 54.56 vertical that I've had on for some time. The timing of all of these positions going on has kind of been lost in my brain as there's now so many of them. But I've had this on for a little bit. I maybe put this on at a high bit spot of like 52. So we're getting back towards that level now. I picked up a 60 call as Bitcoin started to drop. I believe I put this on around when Bitcoin broke the 100,000 threshold. I was thinking that might be a solid resistance point. It was not. We continued in free fall. And so I added this 55 call at the very bottom, right around Bitcoin 85,000, and that one's obviously going swimmingly for me. And then additionally, I have this January 15th, 2027 105 call as a bit of a gamma play. That's been in the account for a long, long time. I've been sitting on that.
No, I like it. We're getting a little bit more exposure to some of the crypto markets, though, right?
Yes.
We got a little bit more volatility in the market. Bitcoin bounced over the last 24 hours. It was, right?
Yes. Yeah. And we're back over 90K on Bitcoin now. And just having these ETFs as a vehicle to get options on these products is such a luxury.
That's clutch.
Yeah, that's
coming in the clutch.
Yeah, that's been doing work for me today. But it's that's the king of the port to start out, and I'm feeling good.
Well, it was a great shout out to the crypto bros, right, guys? We got a little bit of a bounce, so our crypto friends, we can rise, right? Come out of the dust.
Yes.
But if we get a hold over 91,000, 92,000, maybe is 100,000 back in the question? I don't know, but we'll get into some of the technicals, some of the weeds, the details over here on the TradingView platform here in a moment. But let's go ahead and jump to my Tasty Trade platform. We'll go ahead and talk about a couple of positions that we got going on right here.
Oh, what's going on? I have to take a sidebar here because look who is in our chat. It's none other than Death Sneeze. Yes.
Brandon.
Just yesterday after
the devil.
Yes, off air yesterday after we got off, we were saying, "Oh man, we haven't seen Death Sneeze in a little while. Like, hope he's doing good." And then we actually had a whole crazy small world moment because Brandon, you followed me on Twitter yesterday at like 6 p.m., like 3 hours after we had just had this conversation. "Oh, we haven't seen Death Sneeze in a while." Suddenly you popped up in my Twitter following. So good to see you. We were thinking about you. We're happy that you're doing well.
Yeah, we just ran.
Yeah,
guys, we're not doing. Don't worry, Death Sneeze.
Yeah.
Don't worry. No,
we're not doing this at all. We were just sitting around, and then Errol was like, "Man, I haven't seen it in a little while."
Brandon.
Yeah.
I haven't seen Brandon in
Yes.
a minute. And I was like, Death Sneeze. And then a few hours later, Gus sends me the screenshot of the Death Sneeze screenshot. So it was kind of just funny. With that being said, glad to see the bounce in Bitcoin and Ethereum today. Yeah, Bitcoin maybe dragging Ethereum back a little bit. It's nice that Bitcoin bounced because it was looking like Ethereum was going to get dunked back down to like 2,000 if Bitcoin wasn't going to bounce. So it's nice that the overall market is up, right? Whether you're trading indices, Bitcoin, crypto, whatever, the morale should be a little bit higher for today because we're all kind of rallying today. So we'll leave it at that.
Indeed.
With that being said, we got a few positions on here. We got Oklo. This one's been coming back in my favor. It was kind of I don't know what the name is. I don't know, maybe a beater. It was kind of just one of those dead ones in the portfolio. So that's coming back into the breadbasket there.
Not to be confused with Okta reporting earnings today. This is Oklo.
Oklo.
I
just said Oklo.
Yeah,
there we go.
It's all very confusing.
My accent. My Jamaican accent. No, we got. We're up.
Yinzer accent. Oklo. All right.
Oklo. We're up a little bit on the overall position, but we got 17 days left till expiration. We had to hold this one a little bit past the 21 days. So because that came back into our favor, kind of like last minute, and we had to hold a little bit longer, we can make the decision to maybe just scoop this one off the table because we're up a little bit in the profit, but if we take this off at break even, that's a dub in my book, right? You ever have any of those trades where they're pretty red in the profit, or maybe your trade thesis isn't as valid as it maybe once was when you put it on, and then you're able to take it off for break even, and it's kind of like a green day in your book.
Yes, absolutely, yeah. And I've said before, I think sometimes those trades feel better than winners. Like when you manage to sustain losses, especially if you manage to sustain some losses that like were kind of irresponsible to sit through, like that'll happen from time to time where it's like, I just want to give this one more day, like I know I should exit. When those things recover, it can often feel better than a win, even if you don't wind up making any actual profit. I was just talking to somebody about this in the Discord yesterday. They were saying they were down big on a meta position that had swung back to break even, and they were feeling this way. And I was like, man, one more good day out of meta, and I'll be feeling that way about meta too, because I've been deep on meta for a little while. So yeah, absolutely.
With that being said, transitioning from Oklo, we got the QQQ position. We're up $50 on the overall position, up a little bit more on the overall day. The bounce in the market is helping this because we do have, we sold an out-of-the-money put spread, and we already had an out-of-the-money call spread that we sold. So we kind of like legged into an iron condor unintentionally. Both have the same expiration, but I mean, they're weeding out to net a little bit of profit right now. So we'll take it. We'll manage those if need be. Maybe we even take the put spread, or I'm sorry, maybe we take the the call off. I'm sorry, not the iron condor. Maybe we take the call off on the QQQs because we were hedging the out-of-the-money call spread that we sold because we got on some short delta. Market ripped against us, took advantage of that, hedged it with the naked call. So is the market going to rally back to another all-time high? If that's the case, if this is the same kind of scenario we've been in all year, I don't want to take this call off. But if things are changing a little bit, maybe I can take it off. And at least we hedged that overall trade a little bit because the out-of-the-money call spread that I sold, that thing went in the money less than 24 hours of putting it on. So,
yeah, worked out really nice for you.
Yeah,
and that's
the most exciting thing going on.
And the call side hedge, a lot of people don't consider the fact that you can do that, especially if you have something that's already defined risk. If you throw on something naked to hedge against that, it can be very effective.
Yeah. So it's nice to get a little bit more aggressive on that one, to hedge that again and scoop back some of the losses on the call spread. But we'll see how this one ends up. Again, I'm eyeing it right now because I'm debating on even taking this off now. But I mean, if we rip to the highs for the day, that's kind of what I'm really banking on because right now we have a position on in micro NASDAQ as well. We have an order in place to sell this or get out of our position near the day's high. So with that being said, I want to take this one off in tandem with the call on QQQ and then leave on the short call spread on QQQ. But anyways, we'll see how we rally within the next 20 minutes. We typically get a lot of volatility during our little segment right here. So other than that, we got Beyond Meat. This one's not going too hot. It was a zebra trade, so we can look to take this one off whenever, redeploy that capital elsewhere. But on my end, that's what's most exciting on my neck of the woods, brother.
Yeah, it's good updates, and yeah, Beyond moving a little bit for me as well. We put on those positions at the same time. I just have shares, 150 of them to be exact. But yeah, happy to finally see this moving back in the right direction. I think we were right around like a $1.50 spot when we put these on. Actually, I can just see it on my chart because it's shares. I'm way off. $2.03 is the spot.
Yeah.
So yeah, still a ways to go.
We popped a little bit yesterday, but we're just really not holding much of the gains. I mean, just not much volume is coming through like it was a month ago now.
Yeah.
So.
In response to a few things in chat here, this Solana conversation has me dying laughing. Theta Trader and Donna. So B-Sol, is that the Solana ETF? Is that a thing? I see. Solana staking ETF. Original comment. B-Sol, Gus, I need you to make a liquidity market for the options in this new Solana ETF. And then he corrected himself to Solana. And then Donna said, I think Solana means salad. This is all a funny thing. Solana is a salad restaurant. I had a lot of them near me in Houston. It's like a sweet green style, like buffet style thing. You go along and build a salad. They have a pretty good steak in Texas, I guess.
You're not talking about the bowl slops again, are you?
I am talking about the bowl slops. Although I guess a salad is a salad slop. Everything else is definitely slop.
You can let that slide
Salad's
for sure.
Yeah. It's good. It's good for you. I've never eaten Solana in my life, but my mom loves it. I can give high praise to Solana. It's just not for me, but I don't enjoy salad in the first place. So, anyway, Stan, in response to you, yes, we do have a tastylive Discord now. Anybody else who is interested as well, there is a tastylive Discord server. I am dropping an invite link in the chat for anybody who's interested right now.
Come say good morning.
Yeah,
just come and say good morning, and Yeah,
come hang out. We have a pretty good deal of viewers in there already, which we've been very pleased with. It's great to get to interact with you guys all on a daily basis, and everybody that's in seems to really be enjoying it. Did that send?
100%.
Am I not allowed to send links in our chat? I'm on the screen. Anyway, somebody will drop a link for you, or I'll figure it out after we get off air. But yes, there is a Discord server.
With that being said, let's quickly check out the volatility index, see what that's been up to before we transition.
Yeah, that's a good segue in here as well into half of my activity for the day.
Okay.
I exited my VIX short, which I put on last week. Somewhere close to the top, it was pretty much.
VIX got clapped.
Yeah, it was pretty much exact thesis came through. I had 4 short call verticals there, 20 and 19 strike. So with 0 DTE today, I took those off with $4 of profit remaining on the table just to get them out.
Nice.
God forbid there's a tweet or something happens today that somehow sends VIX back to 23. I would be so mad that I stood there for $4 and got rinsed.
On it, I love the wording of that and got absolutely just rang. I love that, though. I think a lot of us would agree with your sentiment there for the most part. I mean, we kind of contracted back down here to 16, 17. Of course, we can go lower on VIX. I'm not hoping for it, but things are getting quiet again.
Yeah.
So maybe we get that pop.
Yeah, and if it was a non-VIX product that was $3, or sorry, I guess a better descriptor would be north of 15% away from the money, I would happily hold until the end of the day and collect those remaining $4. I have no opposition to that. But with VIX being the way that it is, and the fact that it just takes one thing to send VIX back over 20, just felt worthwhile to go ahead and peel those off.
Yeah, 100%. With that being said, we can go ahead and jump over to the trading view charts over here. Check out NASDAQ a little bit. Check out this market structure, kind of what we've been up to. We had the first pullback off the highs that we'd seen in a while a few weeks ago. Now we've kind of been rallying over the last few days. And then into today, we took out yesterday's highs. We made a new high into today. And we took a couple trades. So let's break a little bit of those down. Was initially looking for a short, needed to cover that. And then now we're in a long position right now, targeting the highs. So we'll see how some of these play out. And then if we have some time, we can take a quick look at the micro Bitcoin and the micro gold as well, because I know we look at those a little bit more often too.
Yeah, absolutely. Did you guys do a snow calendar for earnings? That is scary to me looking at this chart. Snowflake is a product I haven't touched in a little while.
You traded it in any recency?
I traded it around IPO, actually. This was that was like a year into my trading career when this IPO'd. I remember it being a big IPO.
Popular, right?
It was crazy popular, hyped up IPO, and this was one of the companies that taught me my lesson about trying to trade options or trying to trade anything at IPO. I just don't do it anymore because I lost so much money on Snowflake. But I mean, my short answer is that I think that's a little bit scary just because of these gaps to the downside. We're dealing with some serious downside gaps here on the daily chart. I mean, I'm not looking at 5 minutes or anything, so I don't know. That's sketchy. I feel like there's.
You said its full name
to the downside. What?
You said Snowflake.
Snowflake.
That's how I know.
Yeah.
It's serious business right now.
Yes. Snowflake Incorporated. I don't know if that's what it is or not. They a limited? I don't know.
Limited, incorporated, tomato. With that being said, we're getting some volatility today. We were looking to take a couple short positions. We did take a short position a few minutes right before the market opened. And then we added to the position about a minute or two in the market open, and then we got stopped out less than maybe 30 seconds after that. We had broke out to the highs immediately after the market opened up. So, managed the risk, called it a day there. Then the eyes kind of went to the other side of value. So it's like, all right, we were looking for the rejection of this level of value, maybe a directional move back to the downside. Because at first it was seeming that the market didn't want to accept inside this level of value. It was looking like we might, reject from here. So let's look for a short opportunity. Come to find out, it would have been better if it was a long opportunity. So if you want to join the Discord, you want to take the opposing side of some of these trades, this would have been a pretty great breakout to the upside where I had to manage my stop to the downside. With that being said, that was the first trade. It was just, easy and done after that. Sometimes breaking down these trades is pretty quick. You know what I'm saying, Gus? Like sometimes the trade just moves against you.
Yeah.
There's really nothing more than that. Trade went against me. Anyways, throughout the day, we rallied back up to the highs. We pulled back, made a new high. Price was getting really volatile. Put in a new low, put in a new high, ripped back to the downside. Now, whenever we rip to the downside here, we're thinking, guys, are we going to stay within this level of value? Because we do know we can expect range-bound type behavior inside this level of value. So can we finally get this breakout that we were looking for, or are we going to fake out and trade back within this level of value again? So that's just the thought process. Are we going to leave this range, or are we going to go and seek a new level of value? So with that being said, right before we hopped on here, we had another opportunity to get long down here at this value area low. So we're kind of just sitting in that position right now. Right before we hopped on here again, we sold back off. It almost stopped us out, and we kind of used that value area low as like a level of support right now. So we'll see how this one, plays out. Maybe we take some of the highs for the day. If we don't, we'll stop out. We got the opportunity, and that's all we want here.
Yeah, I think that's well put. This is, it's funny to me how your explanations always make so much sense, but then if you ever stop and just look at the chart at the end, it's just like this giant thing of scribbles. But yeah, no, absolutely. I agree with that line of logic, and that's why stop losses are valuable.
It's just so, man, the market's definitely going to do its thing.
This is micro NASDAQ, Donna, to answer your question, and MNQ in the Tasty platform.
Yeah, MNQ, it's just a little bit smaller, so we can kind of get in and out of there with a few contracts rather than trading the minis, where it's like, I think, $22,000, maybe $25,000 notional. So with the micros, it's going to be about $2,000 to $3,000 per contract, maybe a little bit less than that. You can double check that in the platform, but that's why we like the micros. And it makes us comfortable to hold some of these positions, right? So, we're selling back off right now. You can see the P&L amount over here on the right side. So you can see we're up our entry was 25,522. Right now, we're up about 20 points, and we're up about $37.50. And that's just with one contract. So you can see how it's a little bit easier to manage those micros, scale in and out of the positions. Even over here, when we had gotten stopped out, we had on 2 contracts because I had given that second opportunity to enter for the second time. Because sometimes you won't have as much conviction off the initial entry because as we pulled off of this value area low, right, this gives a little bit more confidence that this directional move is moving in your favor. So after we get that retracement, entering in short or adding to our position here doesn't bring our average entry price too low so that we can now have twice the size of contracts in this position while still managing our risk really well. So being able to use the micros and scale into those, super helpful to do that. I want to be able to do that with the minis. The minis is like just driving a Mack truck.
Yes.
To be honest.
Yes. The micros were created because people were like, these minis are still too much.
Right. No, quite literally. And sometimes the market gets so volatile, it feels like the micros get a little aggressive at times. But it's looking like the market's rallying here based off of this P&L. So we're going to have to be patient for that. But we do know if we break to the downside, arrows getting stopped out, we're out of this position, guys.
Yep. Immediate to answer your question, yes, the arrows are the entries and exits that Arrow took. We have a partnership with TradingView now. You can link your TastyTrade platform directly to TradingView, and you can trade directly on the charts if you would like to do so. But yeah, his platform is linked up, and so those are the arrows are the trades that you're seeing. Sorry to hear you're still 2 minutes behind, eMedia. 2 minutes of silence so eMedia can get caught up. No. And then, yes, Edward, love TradingView charts. Yeah, TradingView is awesome. We're really grateful to have this partnership. And sorry to hear that you're feeling bad, Edward. I hope you get to feeling better. Sympathy for Edward. Sympathy noise for Edward. But yeah, I think that's great. Great line of logic, great synopsis there. And so you are still actively long, or
we are long right now.
Okay.
We're gonna put in a stop loss down here at these lows. It's giving you a little bit more confidence now here too, that the fact that price, excuse me, whenever you draw these levels, right? Like it's such a taboo thing too, because you see people, support, resistance, sure, the market should Fibonacci, right? We have support, resistance, head and shoulders, it should bounce here. It's like, honestly, whatever your trade thesis is, if the market validates it, then that's gonna give you the confidence to pull the trigger on the trade, right? If I believe there's a level of support here for whatever analysis that I did, I'm going to have more confidence once we see the market respond to that level. Did the market bounce off of this level because I said it was going? No, the market absolutely doesn't care that this level is here. It probably has no idea that this level is here, but if it aligns with your thesis, then now you got someone to work with, at least, So with that being said, because we then bounce again at this value area low, we're just going to right click over here down at the bottom and then go over here and find sell stop. So I'm going to sell one contract at 25,496. And that's going to be the stop, and then that should populate right there. So now hands are off. I'm not sweating anymore because if the market tanks and we get a tweet out of nowhere, I'm not going to be out of an account.
Yeah.
So
that's why it's good.
Good friends with Nasdaq Death Sneeze. We love to hear it. Unless I'm completely misremembering, I thought Errol said he had Jamaican ancestry. Snow probably grew up in the same neighborhood.
The Jamaican ancestry is correct.
Yes.
Yes.
It is correct.
Spot on there. Are we talking, what snow are we talking? Are we talking Snowflake? Are we talking Jon Snow?
So I hesitated there for a moment because I was thinking Snowflake Company. I was like, is there roots or ancestry, maybe the owner? Like, is there any type of roots in the company Snowflake to Jamaicans or Jamaica?
Are they just based in, I don't know. They could just be based there.
That's where I was about to say. I haven't done
no
my
idea.
research on Snowflake or if there's snow in Jamaica. But no, there's no snow in Jamaica. So
yeah, there's definitely no weather snow in Jamaica.
No winter snow. Dad was born and raised in Jamaica. Met my mom in Colorado, and then I was born in Colorado, so I was a snow baby.
If you want a Jamaican in the snow, look no further than Errol Coleman right here.
The bobsled team, if you will.
Yes, Jamaican bobsled over here. Snow, the musician from the '90s. The rapper Snow from the '90s. Oh, I see. I can't say I'm brand aware of Snow and his work.
That's funny.
I'll have to give this a listen when we get off air here.
And with that being said, we got to check out Snowflake. How's Snowflake been doing? And then we'll go to gold, and then we'll go to the micro Bitcoin too. I think you guys, if you like trading the micro Nasdaq, I think you're gonna like the micro gold and the micro Bitcoin. I've been dabbling a little bit more in there and using kind of the same concepts and ideas. And the volatility is really nice in those other products as well. What was it? Snow. Let's check.
Snow. Okay, actually, I don't know this guy. They said he's a white Canadian dude that grew up in a Jamaican neighborhood, and I suddenly was like, oh, there was a different guy on TikTok that's like a white, but he's actually legit Jamaican. It's not like he just happens to be white and also born and raised in Jamaica.
Andreas just said Snow is Canadian, bro.
Snow, the rapper, is Canadian.
Okay.
Yes.
Okay.
But he grew up in a Jamaican neighborhood and he raps in a Jamaican accent, I suppose, that we're learning here. I can't wait to get commentary from our production team about how we don't know anything after this, but I am not brand aware of this person whatsoever. Jim Carrey parodied him in Living Color. Okay.
I love Jim Carrey.
Yes, of course, in the Discord link, Harold. Yes, for anybody who happened to miss that, our official show account here. Shout out James Comey on the production team for handling that for me because I couldn't post the link myself. But there is a link to join the Discord up in the chat a little bit for you guys. No, that guy is British. The ginger guy. The guy I'm talking about is not ginger, and I have no way to describe him other than like an impersonation, which I am not going to do. I'll figure this out. I'll come with some receipts.
We're just looking at some gold real quick. Have you been looking at silver, bro? Oh my goodness, an insane squeeze on silver.
Am I happy I'm out of my shorts?
Absolutely happy.
Oh goodness, yes.
Insane, right? Insane move.
This is crazy.
You would think gold was going to do the same thing, but it didn't. Gold didn't breach its highs again.
Yeah.
Silver was like an actual short squeeze.
That's strange. I remember actually in back in when short squeeze was the word in 2021, that silver was like something that people were throwing around as though it had short squeeze potential. So I wonder if we just landed in a similar situation here. I made a TikTok some 4 years ago talking about how silver could be the next short squeeze that did pretty well, and it was not.
Appreciate the heads up.
But I was right. Now I'm vindicated. Yeah,
you're never wrong. You're just
soon is a relative term.
Yeah.
It's like
it's absolutely
right now is soon compared to 2035.
Right. AI is pretty soon. I might be talking the next 5 years. That's pretty soon.
Yeah.
That could be a long time to others.
Yes, absolutely.
No, but silver's been going absolutely ballistic. Gold has not taken the highs, which is really interesting, right? So we're gonna keep a closer eye on some of these metals, especially with gold. I'm interested in gold, not trying to pick off the top in gold, but definitely interested in a change of character in gold, right? We're on an extreme uptrend, right? Not that the market has to follow any type of technicals, but the momentum and the direction of gold has been to the upside this entire time. So it feels like we're in one of those positions where it's like you want to get involved, but it feels like the risk to reward isn't as much in your favor. Funny to say that after we see the squeeze on silver, right? Risk reward would have been in your favor to the long side. But it can be a little difficult getting involved in some of these products when we're so long. But with that being said, let's continue to keep an eye on these. Let's continue to see what levels of value develop through these next few weeks. Because whenever we get a range-bound market, it's a lot easier to construct trade ideas around those. When we're just straight one direction, it's very difficult to do. And gold has not been range-bound in quite some time. So maybe it will sometime soon.
One direction.
One direction. I was like, what's that smirk?
No, I like it. Okay, micro Bitcoin is what I was going to ask about next. Also, shout out organic farming. You are correct. The guy I was thinking of is M.R, and he is very much from the United Kingdom. And dot is a word, not like it's like M space DOT space R. That's his name. But this is the guy that I see on TikTok. So if you guys are fans of snow, you'll like M.R.
Oh my! I wish I had a Jamaican accent. Imagine I was on here all day just with a Jamaican accent.
Is your dad? I've never met him.
He does, and my brother.
That's fire.
Not Terrell, my other brother.
Oh, okay.
But they full Jamaican accent. Like growing up, my friends would come over, and my brother would be cutting my hair, and they would ask like, "Yo, what language are they speaking?" I'm like, "Bro, that's straight English. You can't do that. That's English. It's just a dialect, straight English." So, no, that would be fun though.
Yeah, I mean, you could probably do one.
Yeah, man. No, I mean, I could. If like a real Jamaican were to be here right now, they would like.
Sure.
Yeah, it's one of those.
That's valid. But yeah, I'm sure you've been around it a lot more than the average bear. Yeah.
For sure.
We'll get this out of him, guys. Yeah. Someday we'll get Errol to do a Jamaican accent for us.
So you know what we're gonna start. What we're going to start doing is we'll circle back around to some more of this Bitcoin, but actually let's put our 2 cents into this Bitcoin real quick because we got a couple minutes left here. But it was looking like we were topping out a little bit more on Bitcoin. We're getting a short-term rally. In terms of our higher levels of value, we got that sell-off beneath those levels of value now. So if we're looking to get long some Bitcoin, I know I'm personally going to be analyzing around this point of control level over here, at least just paying attention to it. Not saying that we always have to take trades, but I think putting in that screen time to just watch how certain assets just behave is really helpful.
Yeah, and especially that this is a much longer time frame. We're talking about much greater aggregation of data here, and I would expect these levels to hold up even perhaps a little better than typical because of how much information is being priced into this. I mean, this is we're talking 6-7 months of data.
Yeah, this would be a little bit more of like a swing. It would be different from like the trades that we're taking on NASDAQ. You're right.
And in general, anything you're doing with charts is only valid on the time frame that you find it.
Right. And so what you're saying, you need everything matters within context.
Yes. And so if you're looking at a months and months long data set, you're going to want your trade to be months and months long to go alongside that. And if you're looking at 1 minute candles, maybe you're cool with your trade being. It's actually an interesting angle. Maybe there's like a number of candles that you have to be like, it should take this many candles before my thesis is validated.
So yes, maybe so. You can add whatever you want.
Yeah.
But what's one thing real quick that I will say? What are those dolls? They're like really small. Then you could put another one.
Oh yeah, like the Russian
dolls,
babushka dolls or whatever.
That's
yeah,
exactly how I view the market. Whatever time frame you're on, low key, like the same principles. It's like fractal. It's like
I think babushka means grandma. It's something like that. Balabushka. Somebody's got me.
But anyways, we'll circle back around to those ideas. Anything top of mind as we circle off?
Thinking about how those dolls are the monkey bombs on Ascension and Zombies. I think it's that map. No, I mean
sounds fun.
More broadly, hoping the rally in crypto continues. This move out of Boeing has been impressive. I was wise enough to catch them at the bottom off a nice dip as well. I'm happy to have that going for me. And then Meta, don't look now, but Meta really starting to turn things around. So I'm hoping for a expedient return to the 700 and 800 levels for that.
Cool. Come on, guys.
I noticed I did it. I consciously did not 6-7 because
With that being
6-7. All right. Are we happy? We got the obligatory 6-7.
Got to get it in there. With that being said, that's going to do it. Thanks for taking the time to hang out with us. Organic Farming Theta Trader Josh, Grumpy Mike, Brandon, Kenneth, Andreas, everybody. Thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control. Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
We're back. It's still Tuesday, December 2nd, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal,
Yes,
I take such issue with the production team only talking down to me about the New York Jets, the 3-9 New York Jets. How come never any commentary about the 2-10 Giants?
Well,
that kind of answered. I actually answered the question myself there.
Yeah, I mean, there you go. That's what it is. You kind of bring it on yourself.
Well, today wouldn't be a good day for football in either New York or Chicago because it's rainy and snowy over here. Certainly, the market is warming up. If that's the Bitcoin description of what we're going to go with today, warming up on this almost winter day, Jamal. Crypto's back on the menu. Really strong gains in Ethereum and Bitcoin today, taking that albatross off the neck of stocks, which have had a bit of a zigzag session. Jamal, what do you think of this market here as we make our way into this next hour on Tasty Live?
Overall market, I would say, is a little quiet, right? A little low in volume. But the crypto market, I think, is the thing that's really heating up. You're right. And when I look at my trades today, that's the main thing I'm paying attention to, all those related to crypto.
All those things related to crypto enjoying a really nice move. It's 10% higher by Ethereum at one point, a little bit off the highs right now, but reversing all of yesterday's terrible losses. Might this have to do with the fact that we see an increased chance of Fed cut here in December? Perhaps. I thought it was a little odd yesterday that crypto dumped, Jamal, when we saw Kevin Hassett emerge as the front runner for Fed chair. You had gold and silver soar, bond yields went up. You kind of had this reflation trade making its way through the market. 89% chance that we're getting a cut in December. Is this what we need to see for equities, for crypto to get off their butts and continue their charge to the upside?
It seems like it is. I mean, it seems like the market likes when we have this high conviction and the chances of a rate cut. I mean, we saw what happened a few weeks ago when that dissipated very quickly and then eventually turned right back around. And it's the thing that's been pushing markets higher. So clearly it's a big deal.
I thought it was a big deal. I saw an interview today on Yahoo Finance where someone was saying that, it's good to see new blood at the Fed. The Fed's kind of become an institution that no one pays attention to anymore. What world is he living on? Didn't we just see a market react terribly to cut odds dipping below 50% and then rally right back when the cut odds went back to 75, 80% following John Williams, the New York Fed chair's remarks the Friday before Thanksgiving? I mean, the Fed is clearly important in moving things around here. I don't know.
Yeah, I don't know.
Seemed like a nutty thing.
It does seem like kind of a nutty thing. I mean, it's definitely still something that I think the people are paying attention to. It's definitely something we have talked a lot about since we've largely been doing shows together for the last 3 years, particularly in that time period, especially starting in 2022, right? And so I go back to 2021, really, when we saw inflation go to heights that we hadn't seen in a very long time. And every time the Fed came out and talked about it, we saw the markets move. Now, by that statement, do they mean that the market doesn't move as much when the Fed comes out and talk? Yeah, maybe we've seen a little bit of lightening of that, but the Fed still clearly means something to the market, and I think this is what's showing it once again.
Yesterday, we said that stocks were being held back by crypto because crypto is down so much. I can't help but wonder today with crypto up so much that stocks are being held back because why would you want to be buying the S&P today when you could be buying Ethereum, which is up 9.9% right now, Jamal? I think that's where we should start here. Both Bitcoin and Ethereum have seen big turnarounds. In fact, Bitcoin is now trading through yesterday's high. So first things first, was this all related to MicroStrategy? I know this isn't a futures market per se, but it feels like MicroStrategy
you can
and
throw
Bitcoin.
This in there.
Yeah, they're doing a dance together right now. And if it's hurting risk sentiment broadly, then it's something we have to consider when looking at the NASDAQ or the S&P.
I mean, look, they own so much Bitcoin, they might as well be a future. I mean, in some ways, right? So, yeah, this is definitely, I think this is one of the more interesting trades on the board, Chris. I'm gonna put it out there. I mean, I have two of the same type of trades, one in January, one in February, what we call the Delta Busters, short put spread to finance a long call spread. And I think this is one of the more interesting trades on the board. Of course, I put it on because I want to win on it, but I also you know what? To be totally frank, I want to see how ridiculous the market is. I mean, I do. It's just kind of like looking at Tesla a couple of years ago, right? When Tesla touched like, I don't know, 120 something dollars, right? And nobody wanted to touch it. Nobody wanted to, maybe it was 180 or 50. I don't even remember. But the point is way lower than where we are now. And nobody wanted to touch it. And then all of a sudden, I mean, there was all kind of negative reasons why they wouldn't. And then all of a sudden you look up and it's $400+ again. I'm curious to see if that's what's going to happen in here. I don't know if January or February is a long enough time frame for it to get back to 230, but that's basically what I'm playing for, it to get above 230. And I got basically the 230, 245 call spread. So I think this is one of the more interesting trades on the board because of just sentiment, right? We see how sentiment changes on things. I mean, that's pretty much what we talk about half the time. We're talking about levels, but essentially we're talking about sentiment, and sentiment has been not that good in the crypto world. And once again, I just find it fascinating. I'm not this big crypto bull or anything like that. I'm not going to say I'm not. Do I own some? Yeah, I have some, but it's not like where I'm making my entire bed. But sentiment is always interesting to me, no matter what. And I have to say, there hasn't been there's been this overwhelming negative sentiment without sort of anything behind it, and I keep repeating this because I'm waiting for somebody to tell me I'm wrong. When we would see sentiment so negative in crypto, usually it's because there's a blow up at an exchange or something along those lines, or some negative thing that's happening, and you just haven't seen that this time around. And that's okay. Sometimes it's okay to have negative sentiment, right? I think that's what happens at times when we see markets at an elevated level, and then we're like, we expect it to pull back. But again, all-time highs is not a reason just to be negative, but there are times you have negative sentiment, and I think this is totally fine. I think this is something to keep in mind, that when Bitcoin is higher, once again, it's above 125, 130. Remember that there was a negative sentiment time, and you have every possibility to sell it lower if you want. But personally, I'm trying to take the other side at this point.
Yeah, I mean, I can't say I'm super shocked that we're getting a bounce out of MicroStrategy today. I tried putting on a trade this morning in it, and I couldn't get filled, which I'm really bummed about because it's up 7%. But yesterday, MicroStrategy, its market cap was at 45 billion at the close, which, considering they hold about 650,000 Bitcoin, given the prevailing market price, that would mean that the Bitcoin they held on their balance sheet was worth about $55 billion. And so, you take out the debt that they owe, which is a little over 8, and you're still talking about they own Bitcoin that's valued at about $1.8 billion more than the company's entire market cap. So that means the software business that they own, right? All the chairs, the print, like all the assets, nothing. Worth nothing. Okay. So,
I mean, should the market cap be higher? What do you think? Should that be included in it?
Yeah. What software does MicroStrategy make that people use?
Oh, I don't know. I don't know the software. I was just saying the amount of Bitcoin. It feels like the amount of Bitcoin holdings isn't really represented within the market cap. It feels.
Well, that's the thing right now. Like, if the market cap is trading under the amount of Bitcoin held, either the rest of the assets on the books are such dogs, or there's a serious price dislocation here.
Seems like it.
Right? If MicroStrategy, and it feels like MicroStrategy has been the tail wagging the dog for what it's worth. Not that this is a market that's going to be governed by anything rational, because I don't know if Michael Saylor is the most rational guy, but if you're a technician here, you look at this chart and you go, oh, okay, maybe a little bit of a Morningstar candlestick cluster. Maybe this comes as we break back above our 1-week moving average on a closing basis for the first time since the end of October. If the worst is over for MicroStrategy, maybe the worst is over for Bitcoin. And if the worst is over for Bitcoin, Jamal, then we go into our stock market, because we don't need to worry about the deterioration of risk appetite anymore. Maybe today people are jumping in head over heels for crypto, so they don't have money to allocate to stocks. But you know what? Yesterday on the show, we pointed out that with the rebound that occurred, at least in NQ, that tail coming in that envelope of the 1 week and the 1 month moving average, you started to see a momentum shift. The positive rates of change in the moving averages accelerating, right? The delta of the 5 EMA from yesterday to today is going up. We're seeing momentum build, and we're building after what was that trifecta of signals we had the Thursday prior to Thanksgiving. One, it was the seasonal peak for volatility / seasonal low for the S&P 500. If you go back to 1950, we have, of course, the washout move. SPY gaps open higher by 1.5%, closes lower by 0.5%. Last time that occurs is April 8th, the low for the year. And we have our VIX spread. We have our volatility spread reaching levels that we had not seen going back to the lows in April. Okay. So that the trifecta was there. The momentum now technically is picking up. And we have our vol crush, Jamal. So like square this circle for me. We were looking at IVRs in the 50s for the NASDAQ just 2 weeks ago. Now we're back into the low 20s. For the other indexes, it's even lower right now. Dare I say, are we getting back into a low vol, low volume float to the upside once more?
Yeah, it is low vol-ish. That's the only thing I have with that, because it's you look past this year, you look across this year, right? And we've seen mostly VIX a little bit above 16, maybe 17, 18 throughout the year. Every now and again, we get the pop to the 20s, but it's been, I would say, as much as we've seen highs, I would say it's hard to say it's been a low vol year. I feel like we've moved around quite a bit, even in the times where we're typically quiet in the middle of the summer, in between earnings. There's always been something going on. So it's been a fascinating year as far as trading goes. I think we're able to get in and get out of a lot of stuff. There's been a lot of two-sided action throughout the year. So while the vol is low, it's not like 2017 low, like low teens VIX. We've been moving around.
I'm going to look at the S&P 500 real quick here, because while there's been some consolidation, I would point out that we have a little bit of a box to play with right now, given the trading range. We see here on November 16th, 67.95 or so highs. We have resistance here on November 20th, 67.91. So 2 points of contact. On the other side, once we break through on November 25th, becomes support. And we saw support here on November 30th as well. Double top, perhaps, if you break below 67.90, 67.95. Otherwise, Jamal, the way that I'm playing this is someone who's leaning long deltas here. I see a break of the downtrend off the October and November swing highs here. I see a potential flag that's forming up. Want to add in above 68.70, would cut short my position below 67.90. This is kind of a do nothing zone as far as I'm concerned. But whichever way we break is going to guide us for the next 100 points in the S&P 500, which more or less means that we could be looking at a retest. If we're north of 68.70, I'm putting my chips on the table for a break of all-time highs before the year's out.
Yeah, that's exactly it. We need to break that we need to bust upwards through that breakdown on November 13th, right? Like we need to get through that area. Once we clear that area, essentially, which is on the low side of 6,900. Once we get through that, I think you could actually see some new highs by the end of the year.
You mentioned the volume being low. We just crossed 1.04 million contracts traded, which, typically, Jamal, when we had our old schedule for Futures Power Hour, at 1 p.m. Eastern, 12 Central, that'd be a healthy figure. But at 1:43 p.m. Eastern, feels a little light.
Yeah. Definitely not. It's a little low volume today overall, and you wonder how that's going to carry over into tomorrow ahead of what may be a little bit higher volume on Friday. I don't know how much PC is going to matter, but it's a data point, and we haven't had too many of those in recent times. But yeah, this is kind of low vol today. It's kind of kept me out of really doing anything. I've kind of been raising cash at times too, because again, this sentiment, I feel like it's still kind of existing out there. It's still a little bit of negative sentiment regarding AI stuff and Bitcoin. And so if those things are going to be the ones that topple the market a little bit, I just want to have a little bit of cash ready. But I mean, I am largely long deltas in a couple of different things. That are more macro. I mean, it's SPYs, it's Qs, it's Microsoft, it's Tesla, it's Meta, a lot of the names that have been beat down. So I figured, those are the volume things. That's where I want to be.
Speaking of, this market today, you look at the 4 indexes, they're all above water right now. I don't know if that tells the full story. A lot is driven by what's going on in the tech space, particularly with semis. I think it's instructive to go back to that daily chart, because semis have retaken the uptrend from the April and September swing lows. We've also broken the downtrend here off of recent highs in October and November, Jamal. Feels important. Feels important that this is progress being made, and it's one of the guiding lights higher for the NASDAQ. But we track 25 different sector ETFs here on Futures Power Hour, just for the sake of this conversation. 18 of the 25 are in the red. This is not a great breadth day. If you look around the board, you're seeing the tech names QQEW. That's nice that the equal weighted S&P or equal weighted NASDAQ's leading the way. And you could look here to the S&P without the heaviness of the tech. And well, it's not going up. The Russell itself is lagging, only up by 0.13%. So how do we square this circle? Should we be refocusing our attention, as it seems to be the market is, just on semis in the Mag 7?
I mean, I think you always got to have attention on those. Again, like I was saying, I mean, that's still where the volume is. That's still where the action is, right? In the Mag 7 names, regardless of what people say. Even, one of the more interesting things over the past week, we were talking about how those names took it on the chin. But even within that, not all of them, right? I mean, for the longest time, going back a couple of years, it was all about the Mag 7s and the volume and the way that they all basically traded together, up and down together. And I feel like recently we've seen a little bit of deviation from that. I mentioned Meta, I mentioned Microsoft. They've taken it on the chin, but Google, you just showed that chart. I mean, that's been crazy, right? Compared to this one, which has struggled. Again, Microsoft, which has struggled, but Google looks like that. This is not what you had on your bingo card. If you think about just from a year ago, this was not the way you planned it. But again, it's been the staggered news at times, right? Of this AI company doing this, and then all of a sudden another one comes and supplants it. And then I just saw some story about OpenAI today should be worried because there's catch up with Anthropic and whoever else. And I mean, it's just been the news, and I don't think the AI story is going anywhere. I mean, I think there's been, again, a lot of fears because it's just been the talk of the market for the entire year. I'm pretty sure if we look at a prediction market right now, I think the chances of AI being the term of the year is probably going up more and more day by day as we get towards the end of the year.
2025 Person of the Year on Polymarket. Jamal, you're such an insightful guy. Artificial intelligence.
I mean, why shouldn't it be?
Did you catch the, did you catch 60 Minutes the other night about Polymarket? Did I just say on air, did you watch 60 Minutes to someone?
I know, but we're that age though. And you know what's funny? They're catering more stories to us, right? Just like we do. We pay attention to our viewers and we try to cater more things to them. 60 Minutes is obviously doing the same thing. I noticed I didn't hear that part. I kept hearing about the soccer kid that they were going to talk about, but I didn't hear about the preview of Polymarket. Interesting. I have to check it out. But
they had the Polymarket founder on. Anderson Cooper interviewed him on the floor of the NYSE. They had on the guy Doma, who, for the folks that watch the Prediction Trade podcast that we did during the 2024 election cycle, this was someone that we referenced. And so they had him on camera talking about why he was, why he bet on JD Vance to be the VP, which it's a fascinating segment for people who are interested in things like this. In any event, though, AI, not sure what happened in the last few days, but as of December 1st, it was 36% to 30 artificial intelligence versus Jensen Huang. It's now 46 to 19. So maybe, just maybe, if AI's named Person of the Year, is that a top for the market? Is that a sentiment sign?
It might be. I know it really might be. Look, as much as, like I said, I'm long Microsoft, I'm long Meta, I'm long Tesla. I mean, all of these things have AI involved. And look, it's not just those names. I mean, if you're paying attention to all the investments that they're doing. And by investments, I mean buying companies. Nvidia's investing in so many other things. I know they just invested $2 billion something the other day. I totally forgot. But it's, they're all investing in a lot of different things. So if you're rooting for AI to be done and it's tops, it'll be top for a lot of things, not just tech names. Just remember that.
It's so funny how market narratives shift, Jamal. I remember a few months ago when everyone was saying Apple is such a bum stock because they have totally fumbled their AI offering and they're not doing enough to build out their investment in AI.
Yep.
And now they're sitting at all-time highs because everyone's saying, Apple's really managed their CapEx well by not over-investing in AI.
Yeah, I mean, it's weird, isn't it? Like it really is. And not to mention their struggles early in the year behind tariffs, like the idea that they're never going to move all of their business from overseas. And that was definitely weighing down the stock. I mean, just look at it back in, not even after April, I mean, it kind of traded sideways for the better part of 4 months. Right. So, yeah, you're right. It's wild. And the crazy part, I don't know about you, but I haven't traded any Apple in quite some time. I mean, it just really hasn't been interesting. But who cares if it's interesting? It's pushing higher, and for that reason, I think Nasdaq has been, is even though there's been times where it's faltered, it really hasn't been in real jeopardy.
Well, I think that's why this Google narrative emerging that they have their TPUs, the tensor processing units for with the ASIC chips that they use. It creates another track for the AI narrative to run on. And you can see how the companies that are being accused of overbuilding, your Microsoft, your Meta, your Nvidia, those are the ones that have struggled. And then the companies that have not been overbuilding, your Apple and your Google, are the ones whose charts are going bottom left to top right, particularly since the beginning of August. But, Jamal, means that tech stocks, broadly speaking, are doing well today. So not only do you have the semiconductors, but you have something like XLK breaking its downtrend. The NASDAQ is a clear winner throughout all this. And the shift in momentum here, that little catch yesterday on that wick, pushing up to a new cycle high. You see it in the S&P, similar type of price action. Down day yesterday, now get a doji, bouncing off of your 1 week. The month of December has been good for stocks. There's two things that come to mind here. I shared them in the research chat earlier. But since 1950, there have been 12 times that the S&P 500 has been up by more than 5% at the end of November, at the end of year one of a president's term. Oh, this is such a niche stat, Jamal. On average, those 12 years produced a 2.1% average return, 1.7% median, for December 100% of the time. As a baseline since 1950, the average and median December has produced returns of 1.4 and 1.5% respectively, with a 73.3% hit rate, as in the market goes up. So it's year one of a president's term. The S&P is up by more than 5% at the end of November. History's any guide, then maybe we get another 2% here ahead of us. If it's an average year, it's a median year, we'll call it 1.7%. So 6,900 should be tested at least once this month in the S&P. I think that's
pretty decent. So.
Yeah, I think so too.
I would think so. And like? the other part of history that's my guide is just this year alone. I mean, look at let's look at the chart. Back it up. Let's go back to let's go continuous. Sure, we can go. Yeah, go continuous. I mean, we saw April. Obviously, we know what happened there. Then that next blip right there at the end of the middle of May, boom, down, bounce, volatility comes in. We go a little higher. Did it again in August, towards the end of July, August, was at the 31st and the 31st. You know what? I don't even remember. I feel like in years past, I can immediately quote exactly the reason why for the dips. I don't even remember half the reasons why. I don't know if it was maybe just tariffs. I don't know. It was nothing real serious though, right? Like, and then we bounced a little bit higher, did the same thing again in October. So that's been the year, really. And like I said, there's been a lot of two-sided action throughout this year. We really don't typically get that. And the fact that we're still sitting around near all-time highs just tells you a lot about the resiliency of the year.
It really does. This year, people are chasing a market. You and I had this discussion back in April and May several times about positioning. How when you look to positioning in the market, you could make the observation that a lot of people had not only sold their positions in March and April, they had actually been short. And it created this perverse incentive structure where the only way then for you to make up for the fact that you were underinvested or on the wrong side was to chase higher. And I know that's been a rationale that we've used a lot for the past 2 years. Maybe it's right, maybe it's wrong. It feels like it's been more right than wrong recently. It kind of feels like that again right now, where there's a lot of people who have underperformed the market. You could go and look up the leaderboards for how multi-strat hedge funds have performed or managed futures funds have performed. Like, not a good deal. So maybe the incentive is to chase to the upside here. In any event, ES, I'm going to go into H6 because I'm looking at that December 31st expiry. 2% between friends, we'll call it 140 points. 140 points brings us up to what? 70-40? 70-30?
We're totally within reach.
Totally within reach. 29 days to expiration, 70. I mean, will I take a 2-to-1 that we go to new highs over the next few weeks? Yeah, I will. Please get filled. Already long MES, Jamal.
Jeez.
So like, gonna ride that out. But this is a market that looks set up. I know the breadth isn't fantastic today. The breadth looks like, secondary to what has happened over the past week or two. A little bit of exhaustion here. We had more than 90% of stocks above their 1 week moving average yesterday. That doesn't happen often, but it's not something that happens in bear markets. It happens something in the midst of a very strong run.
It is. I'm looking at the MES futures. I got to give credit to Mike Butler because he's talked about an all-year trade using a strangle and basically using it kind of near at the money put to sell versus a little bit further upside call, but just kind of collecting that premium and kind of like doing a strangle throughout the whole entire year and structuring it so that he's long delta. I think I'm going to join him in that trade. I was waiting to see if markets are going to fall back down, but I am looking to do that at some point starting in January. And it's just kind of a sort of, not only it's utilizing obviously tasty mechanics because basically you're doing it basically around that 45-day window and then rolling each time. But I'm looking forward to doing something like that. This is going to test my will though, Chris. I've never done like an all year type of trade. This is going to be interesting.
I wish you luck. Yeah, those are called investments.
Basically, yeah, I know, yeah. Right?
But if you get the volatility in the right place, I don't know about executing it right now from my view, but like
exactly, yeah, I want to wait.
Like, give us another 25 VIX, or like a 10 VIX. But I 17, 20, 23. Not my territory.
I know. I was gonna do it when we were down there, but I couldn't really. I just had so many other trades on, and I didn't want to extend any more capital at the time. But now it's looking like, damn, I should have done it. But it's cool. I'm sure the way that this year is operated, we'll get another opportunity.
What are you making of some of these calls? I've started to see some of the 2026 outlooks come out from some of the banks. Lots of 8,000 S&P 500 calls for the end of next year. I know that seems like a big number to us, but that's not a huge percentage gain from this point forward, right?
That's the thing. It's not a huge percentage gain, so it's not out of the realm. I think, I think more than anything, it's just a question of will the sentiment allow that, right? Like where we've had these same stocks that we talk about, the Mag 7s that have been carrying us for some time. Is there going to be a point where the stock market just doesn't believe that they're going to, they're not going to be able to carry us in that way. They're not going to have like the type of ingenuity going forward. Is that going to be the case? Is it going to run out? I guess that's really what it boils down to for me. It's not so much can the market do that. Of course, the market can go higher, but it's all about the sentiment and what's going to be the story that carries us higher. And typically we have no idea what this is going to be. We certainly didn't know for sure it was going to be AI 3-4 years ago. And now that's been the case. So
earlier this year,
for
right?
me, it's about
like what?
Or earlier this year.
Why are Apple and Google at the top of the leaderboards? Oh, because they didn't spend as much money on AI as everyone else. Huh? But also AI is the narrative carrying the market higher?
Yeah, it's weird. Yeah, I don't get it.
Yeah, and that's why you got to stay mechanical in these markets. So forget this news. The news is fun to discuss, but we have to stay mechanical, which is important when we go to treasuries, because treasuries have been smoked the past 2 days.
Yes, they have.
And ZB is doing an awful lot of testing of that 116 figure that I've drawn as my line in the sand to stay long against. This is starting to look like a little left ahead, a little right shoulder here with a pretty clear neckline right around 116. So not thrilled to be.
Listen, as much as we look at head and shoulder, inverse head and shoulder pattern, this one definitely looks like it for sure.
Not great, Bob. Not sure that's something that you'd want to be sticking along with. But yesterday, Jamal, I used the chance in ZN to put on a short iron condor trade because we are effectively at the midpoint between 112 and 114. We're at 112 and 28 ticks, so not quite at 113. But even it's a 4.4 IVR, it could still risk 3 to make 1 at a 60% plus probability of profit. That's kind of been a sweet spot for having reliable trades, in my view, this year. why wouldn't the treasury market continue to chop around? Because I see a lot of chop here. And although I have longer term bullish inclinations, there is the reality that maybe now isn't the time yet.
I think it will continue to chop around. I would like to see if it goes lower. I think that would sort of get my interest for a possible long entry. If we breach below that 112 area, it would definitely get interesting. But I don't know, man. This has kind of been bonds more recently. And I think it might have been a month ago we were talking about bond trades, and I just said I didn't really understand what was going on at the time, at least from the trade, right? Like it's clear what's going on with the Fed and all these other things, although this doesn't really impact ZN too much. But yeah, I just haven't been able to understand, and that's the reason why I don't have a trade on right now. I'm not really sure of directionally if I can play it, because it just has been chopping around like in this kind of mode, right? Versus what we saw earlier this year. So I stayed away. I mean, if there's vol, I would love to sell it, but there really hasn't been much of that neither.
No, so the consolidation and the chop continues here. You can see it in the ZN continuous chart here, where is this going to sustain a rally? The uptrend from the lows in January and again here in May. Are we dancing on that trend line right now, Jamal? So I'm feeling pretty comfortable staying long notes, because if they're going to remain in an uptrend and long deltas are going to work, this is probably as good of a place as any to be long against. You hold at 112, you're also holding your uptrend off of the year-long trend line. It also helps us sustain the breakout from the COVID/tariff trend line that we have here, and that's that high. Line that up a little bit better. You can see the same thing in ZB, right? You hold above 116, you're holding the uptrend off the yearly lows. We're finding support against there today. Oof. So this is it. If you want to be a bond bull, this is the battle. It's happening right now.
I mean, the nice thing you can feel good about is that it hasn't broken below that line, right? Going back to September, ever since it had that September breakout. So I think that's probably your guide right now. And again, if it does do that, then I might get interested. But until it does, I think that it's been the chop and maybe the sort of bounce higher that you've been looking on, that you've been able. It's almost like you just have to like play it for those bounces and then take it off and then see if it comes back and then play it for the bounce again.
Yeah, we're going to just make this really simple. Down here is the danger Will Robinson zone. Okay. Just leave that here on the chart. So that's danger Will Robinson. Otherwise, we're fine.
You got otherwise we're fine. It's got to be something better than that. You gave the downside danger Will Robinson. What's upside? Nirvana?
Family gets back together in space. No one's lost.
Okay.
No time traveling shenanigans. But if we're above 116, then long deltas remain appropriate in my view. Of course, if we don't get to 118 within the expiration window, we could be right about this thing not falling below 116, but wrong in our prognosis that it was going to reach to the upside a little bit more. Maybe a lesson learned from the gold trading over the summer, Jamal, when you and Ilya were like, yeah, I'm bullish, but I'm not buying calls, I'm selling puts. And sure enough, you guys were the ones making money, and I'm the one here who is giving you the money. Maybe that's the appropriate thing to do right now. It's not a ton of vol on the board. It's only a 4.7 IBR, but at current levels, if you went out to 52 DTE and you were to sell this is in ZN, so we want to go over to ZB. So if we went out to 52 days and we sold the 116, 117, if we hold this 60% probability of profit, and you're risking it's like risking 5 to make 4 effectively. That's actually not a terrible bet.
Overall, though, what gets bonds back up to levels that we last saw a few years ago, Chris? Like, I wonder. I mean, we're still in a pretty big drawdown here on bonds overall. Is there anything that eventually moves us back up?
In like the United States budget deficit, from the data that we've seen in the past 2 days, it's bigger than it was for the month of October than it was during October 2020, during COVID. And so if Trump gets his guy, Kevin Hassett, confirmed as Fed chair, then one presumes you're going to be leaning a little bit more in the dovish direction for rates while government spending's up. That seems really reinflationary long term. You and I have, agreed on this over the past year or so. Like they're going to be cutting rates and the government's spending more money. Sounds like acid inflation. Why not long gold and silver and stocks? And I think that's worked out well enough too.
Yep.
So it does beg the question then, if that's the environment we're still in, why would bonds be a good bet to the upside? This is more of if bonds do go to the upside here, it probably means a lot of the other stuff on the table is not working. So I see this as a way to counterbalance a lot of the equity bullishness, the metals bullishness. Could totally see a world in which bonds break down and stocks are going to new highs and gold and silver are screaming to the upside. So take a lump here because that makes sense, right? Reinflation. You get your lower rates, you get your more deficit spending. So you're going to have higher growth, higher inflation embedded in the economy moving forward. So you need that premium at the long end of the curve to compensate you for that additional risk.
And that's exactly it. I mean, I think you just have to have trades on sometimes that might not necessarily seem to make sense, but we've seen enough of sentiment changes over the years to know that things happen surprisingly at times, even despite what we prepared for, right?
Things happen. It's like
It's the PC way.
PC way of saying we are actually helping the algorithm. I recently learned that if you curse on YouTube, it gives you a 10-minute penalty box. And if you curse again within that 10-minute window, it stops sending people to your stream.
Really? Interesting. Never knew that. Interesting.
Yeah. According to Alton Brown, you know Alton Brown, Good Eats? Is that everything you ever watched? Food Network?
No.
He's like the Bill Nye of food. Really zany guy. He just launched a YouTube channel to do cooking stuff, which is, that's my.
Well, that's funny because there's a lot of YouTube things that are full of swears that have a lot of views. So I'd really like to know more about how that works.
It's for live streaming only, apparently. Oh, so silver, Jamal, silver. Silver. Where to begin? Silver prices have had a day where they were up above 59. They were down testing 57, it seems like. We're back to 58.73. I think there's nothing else to do besides hang on long. I don't stand in front of a market that is running to the upside like this. That said, the only reason why I felt so good about hanging on long was the fact that you had expanding volatility throughout. And we have not cleared out the high that we had yesterday, and volatility is starting to slide off the board. The IVR high this week was 86, 85.957, Jamal. We'll round up for Josh. So we'll call it 86. It's now 67. We've seen in the past that when silver vol starts to flatten out and roll over like we did in October, it typically precedes the rally losing some steam. So yeah, things are going well right now. If you're long silver, it's been a great few days. But like I did yesterday, right, I took off my position that was sitting at 22 DTE. The thing was up, 3%, and that position added $50. Like, there's no convexity in that. So I'm just holding a bag. I think that silver may be running out of juice right now, despite someone who's leaning long. I get that spidey sense, given the price action.
Where's that? What's that long-term chart? Remember we used to look at that for a while there. We were looking at going back, right? Like I haven't looked at that in a while. Because that was actually my guide to cause me to get long into whatever that big move was a few months back. Let me look at it. It was, when we had
we had a few things
October jump. Yeah, we had a few. If it was, actually it was September, I think is when did the jump. I can't remember, sometime in September. But it was essentially the long-term chart that made me get interested. This is, you got to go monthly probably, huh? Let's go monthly. Yeah, there it is. That was the chart that got me interested in higher prices in September. And I wonder now, right? Like it's kind of interesting now where what's going to happen. Are we going to start to see the signs of the reversal or not? Or is this just is it different this time? Is it a different environment? I think that's what we're in the process of trying to figure out now.
It's crazy how parabolic this has gone over the past few weeks. We mean, when you're long,
I want
you
to see
don't
more
mind it.
though. Like I said when we were talking on the last call yesterday, I want to see a solid $3-4 another parabolic move, because then I think I would be interested in possibly trying an attempt to short, even just in the short term. Again, it's not like I don't really wage war or campaigns on anything for much longer than maybe a couple of weeks at a time when it comes to trading.
Yeah, you always say make love, not war in our chats, which is very,
Exactly. Yeah.
Could we? There's not even like, you know what I want to do? I would love to buy some $75 strikes for the end of next year in silver.
What?
But we can't. We don't have. The options aren't listed out that far yet. And if I go out far enough, Jamal, it's only 68. I mean, like 68 or 120. Not sure why they're listing $120 strikes in silver, but hey, maybe that's a sign of things to come. So you want to talk about a year-long trade? If this thing is down $3 or $4 tomorrow, given how it's traded recently, I don't think anyone would be shocked. But this is not, gold, silver, the way that they're behaving, and just all that underlying buying pressure right now, and the destruction of the US dollar and blah, blah, blah. All of it still very compelling. None of that's changing. This is a nice little rebound here today, though. We go do a little back test of the trend line from the October, November highs. Little bounce, now back above the 1 week. Not loving the candlestick structure here, particularly against a former high. That kept us in check near 42.85, 42.90. But sticking long for now. And ultimately, 56
I mean,
days to expert.
That looks more promising than silver, honestly.
Yeah, I talked about this with Thomas yesterday, several months ago. There was a lot of chatter around here, when Tom was still on air. Gold-silver ratio is north of 100, right? This is territory that's unheard of. And once you drop below 100, you enter a window in which silver can outperform gold. How far does that go on? You don't know, but that's typically what happens next. The silver-gold ratio is in the low 70s again. That's like a 4.5-year low at this point, Jamal. Should traders be thinking about the relative value here? And maybe it's time for gold to start running again, as opposed to silver being the one leading the metals rally?
I would think so. On top of the way that this chart looks right now, this looks a lot, more bullish to me. At least from the standpoint, like I could see at least it touching or going back towards near-term highs and possibly making a new high. So that looks more interesting to me than anything. I've been using GLD as my proxy to do it. I haven't done it in GC, but I think either works fine. Just depends on what you want to use. But I mean, this one looks a lot more interesting to me than the silver chart.
Gold silver ratio today breaks below the low from May 24. It's currently sitting at the lowest level that we've seen since August 2021. So quick change of fortune there. For copper prices, this is good news for what I'm doing here. I've been advocating, evangelizing range-bound trading in copper. And so the fact that we had a huge explosion to the upside akin to what happened in silver wasn't the best of news for that position. But the reality is, now that we're recentering ourselves into the midpoint of the range, I think my best bet is going to be ultimately to just close this guy out, because today is the day in which I would have to roll anyhow. Considering that this trade has done well, right? It didn't breach the highs or the lows. Do we extract as much money out of it as we wanted to? No, of course not. But picking up $100 here or there, Jamal, that's what you got to do sometimes. So I'm going to take this off the board. Hopefully it gets filled. And now we're out of copper. Immediate.
There's nothing like an immediate fill when you're closing a trade, though. I tell you what, that is like the best.
That is
you just completely just move
better.
on.
Much better. CPER has a 43.4 IVR. It's not super high. This looks more breakouty than anything else right now. So I'm not going to put back on the short iron condor here. I'd be much more interested in looking at copper prices, right? Because if it was first was gold, and then everyone says gold's really expensive, I should probably buy silver. Silver has run up. What if copper's next? Copper has had all this interference. You and I know this from what happened in July with the tariffs. But absent the tariffs, prior to what happened in July, copper was in one of these markets where it's steadily going up, slowly but surely over the past several years. 3s into the 4s, now into the 5s. I would like to have bullish, still retain bullish long delta exposure here, but just finding the timing and the structure of the trade matters a little bit more. So today, recentering at 21 DTE, getting out of the market, not as much money as could have been made if we got out like 3 or 4 days ago, but it's still money made.
Yeah, I had a calendar call spread in copper, the 6 strike spread, and that ended up making me some money over the last couple of days. So closed it out and no position now, but made like $250 on a $500 trade. So we'll take it.
Win is a win. We got to keep racking up those wins. Energy softer today, which marginally off the lows. Are we attacking Venezuela? Are we not? Today seems a little bit less than it did yesterday. Volatility sticking around, kind of 21 IVR or so. Natural gas off 2% today, which again, decent enough news for the way that we're approaching this market, Jamal. I'm really feeling frisky, so I'm double barreling 2 different natural gas trades right now.
What?
As if I haven't learned any lessons this year. John was saying he wanted to get me checked for brain damage, and this is probably Exhibit A in that.
Hey, look, I had it going on not too long ago. It wasn't a double fisted trade, but almost even crazier. I was short strangles, if you remember. I was short strangle in there, and 2 months ago, and then I had another one more recently. That eventually I was like, as the market was getting crazy, and again, natural gas typically trades differently than the market, but it was one of those scenarios where I was getting worried about everything because, as you saw, I mean, everything was starting to sort of correlate to one in a way. And so I ended up changing it into an iron condor, but I closed it out late last week. So as of now, no nat gas position.
Yeah, for today, nat gas is working out ish. Up a whole $5 there, Jamal. 26 in this position, but it's at 24 DTE. Again, squeezing out little profit, little by little. The IVR is still above 50, and the way that the market is structured right now, still to this day, you could look to sell puts under the yearly low. You could look to sell calls up near the yearly high. You can line up something at like 56 days here. I have this 3735 on. That's below the yearly lows. We could go above 6 if we wanted to. There's a 66% probability of profit. There's risking 2 to make 1. That we're not going to break the highs or the lows of the year in the next month and a half. I think that's something we can work with. That should be something that we can work with. So I'm have the 2 positions on right now. I want to take advantage of the vol outs here. Again, unrelated to stocks. So if unrelated to the metals. So it kind of works out, as you frequently mention on this program. Anything that you can do to bring down your beta weighted deltas is not necessarily a bad idea. And I have my Fed exposure for next week, and I have this, which kind of balances out the boat. So if things go sideways, at least not everything is taking on water. Hopefully.
That's what you want. That's what keeps you sane and helps you sleep at night.
Yes, trading natural gas helps me sleep at night.
Yeah, but it's bracketed. It's bracketed. You're good. You're not doing this crazy thing like I was doing with the short strangle. I don't know what I was thinking for a while there.
You're a cowboy, man. Dollars mixed day. I've never met anyone who's had like, oh yeah, I really like trading natural gas. It's always something like, I guess.
Actually, there is one person, Liz Deer King. She always talks about it. She loves trading natural gas. She's the only one I know. Actually, I know another guy too. Friend of mine in NASDAQ. He loves trading natural gas. He used to trade it.
Interesting.
Yeah. There's these rare people. They exist.
They do exist. There are people who like to trade currency. I'm one of them. Is that odd? It's the largest market in the world. $6 trillion trading exchanging hands every single day. So where is that money going this session? It's a bit of a mixed dollar day. You could see somewhat of a risk on tilt in the FX space. The Aussie's up, the Canadian dollar's up a touch. The Japanese yen is down a little bit here. There's been increased talk over intervention in Japan, as we know, that the BOJ may pull the rug on everyone come December 19th when they have their next meeting. Right now, the rally off the lows is intact. And while I myself am still leaning short deltas here, I'm curious to see how this evolves now, because we did try to get through former swing support here in the yen, and we failed in the 6J rally. But then again, the rally off the lows is sustaining itself on this 4-hour time frame. So you know what? I feel a lot better. We get down below like 64.10, 64. This thing looks like it's ready for the next leg lower. At that point in time, as someone who is leaning short deltas here, I think that would be a final flush, at least to have an opportunity to get out before whatever hijinks the BOJ and Ministry of Finance may attempt around December and the holidays here. I mentioned that if only explicitly because within recent years, we can go back in time, Jamal, and let's go back in time. Here we are, late 2023.
Mm-hmm.
The BOJ decided to do stuff during their last meeting of the year during an illiquid market in the run-up to Christmas in the United States. People are on vacation. No one's paying attention. You get good bang for your yen or your buck, I suppose, in this world. 6J skyrockets from 67 up to 72 over the span of 3 weeks. I don't think that's something that we can dismiss here, particularly because of where we are on the chart. You could see we're at multi-year lows, dollar yen spot rates nearing 160. So final flush here. I'm at 38 DTE. It's the 64.65 put spread that was put on at the start of November. We get one final move to the downside. I'm going to take profit, get out of this. And then, let's have a little holiday cracker. Let's do something where maybe we go out to February and we look at the volatility and go, that's pretty darn low. What would buying an upside call spread look like in a risk-defined manner? Oh, I could take out a 5-to-1 or 6-to-1 little lottery ticket here and take the proceeds of the short put or the long put spread trade and recycle it now back into something that if they do intervene, an expansion of all directional movement my way, it works out. I don't think that's a bad idea. Again, not the typical tasty thing, but intervention watch over the holidays. Have something fun to look forward to, a reason to look at Twitter at 8 o'clock at night when your kids are begging for your attention to go to sleep. You're like, no, daddy's got to watch to see if the BOJ intervenes tonight, honey. Sorry, kiddo.
I like that trade. I mean, even, you can even go further out if you wanted to, right? You could even probably, is there a March situation? It really doesn't matter. But yeah, I mean, this is essentially a play on that. And we've seen them with regularity do it. So I like that. It's a very cheap trade.
Yeah, why not? 68.69, maybe 69.70 for March. And you're not even trying to seek out max profit on something like this. It's effectively the prognosis is these options are underpriced given the risk that's out there. And so even if you get 100 pip or 200 pip jump, as long as you have enough time to expiration and volatility expands, the value of the position will increase. And we'll be able to flip it for maybe $200, $300. We don't need to go all the way to, $1,200 to make it worthwhile.
You're going 68, 69. What are you doing? I might go 67, 69. 300 bones. I've done a lot worse with $300.
Yeah.
I mean, I don't mean that that way, but.
No, but who has not spent like $300 on nonsense? I'm happy to spend $300 on placing a bet that maybe the yen gets a little bit of a tailwind here to the upside. But vol, generally speaking, the FX space, not that high, 40 IVR in the pound. Are we turning the corner around 132? It kind of feels like it. So I'm not thrilled with being long the dollar here. Same thing for the euro, trying to turn a corner, holding these moving averages thus far. A dollar that weakens substantially from here, Jamal. It has already started to lose the uptrend from the September and November lows. If this is a double top, we would know below 99. We bounced off a 99 or so yesterday. But weaker dollar in May, June, July. This has not been a problem for stocks, not really an issue for bonds or gold, silver, anything. It may be informative for how we think about the start of the 2026 calendar year.
Yeah, this has been, a real crazy year for the dollar, obviously. And I wonder if we're going to see a little bit of change for 2026. I mean, I've at times to no avail tried to get long the dollar. It did work in late July. When I will say, at the beginning of July, when I did make that play, that ended up being one of the more successful trades. I'm still longer right now vis-a-vis a long put spread in the euro. I'm probably going to have to roll that out further, but that's still just an interesting trade. I think just a contrarian trade to me.
It's still very contrarian, in terms of most hated trades on the board. We've talked about how BOA puts out their fund manager survey every single month. Short dollar is still most crowded short trade. People hate it. Don't love it.
Yeah.
What's next on the calendar? We had a bunch of things due out this morning that I don't know if they moved the market. Quite frankly, there's not really anything due out this week that to me is worthy of a great deal of attention. Next week, we're going to have CPI. We'll have non-farm payrolls coming up around the corner following the Fed meeting, but it's on the other side of the Fed meeting on December 10th. We have to wait until December 16th for all that stuff. Maybe the PMI services tomorrow. Services is about 2/3 of the economy right now, Jamal. So if services are contracting, then you have a problem. If they're growing, everything's fine. Beyond that, any Fed speeches that we've had coming up that are going on this week, it's during the Fed's communication blackout window, which means if Fed speakers do go public, they cannot talk about the monetary policy or economy, the implications of either of them, because you can infer if Powell comes out and says, yeah, the labor market's great. I don't know why everyone's worried about it. Okay, well, then he feels like they don't need to cut rates. Like you can pull on the string a little bit. So anytime you see Fed speakers, just ignore.
Ignore.
You have final thought here, Jamal. What should traders be looking out for over the next 23 hours until they reconvene here on Futures Power Hour?
I think the one thing to keep an eye on is again the relationship done with equities. There's like a three-pronged relationship with equities, with Bitcoin, with gold, which realistically have never really kind of all worked together, but they had been working together in previous weeks, and now that seems to be changing once again. I'm just looking to see if that is back to, I guess, almost more of a normal situation where gold and equities sort of flip-flop prices.
Jamal, you and I are done here. Yeah, that's about it here. And we're done here for today. Tasty Live continues next, of course, after a brief break. Grab some coffee, grab some lunch, come back, see Dr. Jim Schultz with From Theory to Practice, and we'll see everyone later on Overtime.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Tuesday edition of what it is that we are trying to do. I'm so glad that you guys are here because it's only because of you all that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the program. Man, you can celebrate if you're a bull or a bear or neutral, and you can probably commiserate if you're a bull or a bear or neutral these days with the market whippiness. And of course, if you have any questions for me, I would drop them in the chat box. I typically get to somewhere between 0.4 to 0.7 questions per show. So the earlier you get that in, the better it's going to be for you, and the higher the delta that I will get to your question. So Ryan, go ahead, bring us into the market. Let's have a little look-see at what's going on. Man, I appreciate you guys. I appreciate you guys so much. I see you guys already in the chat. Man, here we go. Give the stream a thumbs up. Give the channel a sub if you haven't done so already. And then again, drop a comment in the stream. Why do we drop comments in the stream? It's not even about questions. It's not even about answers. It's for the love of the algo. So drop that guy in the stream and help your boy out. But you got EME S&Ps up 15. Speaking of helping your boy out, EME S&P is green on the day, up 15. You got the risk-free instrument, also known as the NASDAQ futures, which technically is an extremely high-risk product, up 210. You got the boomers up 203. Man, you've got the Russell 2000 futures index up 6 and some change. You got bonds up a couple ticks. You got notes up a couple ticks. You got oil down 60 cents. Got UB40 up 5 ticks. Got the shifties getting slapped around a little bit. Down 44 on the day. Man, look at gold. Where's silver at? Whew, where are my Hunt Brothers at? Are we back to hot and readies? We back to hot and readies for the Hunt Brothers? Yeah, down 39 cents. Maybe, but it is 58.74. Like, that's some crazy stuff. Did it hit 60 last night? We'll take a look at that in just a second, but I'm going to get my hot and ready from the Hunt Brothers on order for sure. And then, of course, you've got volatility. On a day like today, volatility is obviously going to be down a little bit, I would imagine. I say obviously, I don't even know. Volatility futures down 30 cents, and you've got spot volatility down 59 cents down to 16.65. Man, we had them, guys. We really had them. You know, if you look at a chart of the VIX, man, look at that. It wasn't that long ago. I mean, this was like a week ago. Right, a week and a half ago, you had volatility up into the high 20s, and then you go back about, a few weeks before that, you had volatility back into the high 20s again. And so, man, VIX at 1666. That's not good for anybody, I don't think. But yeah, volatility, it feels low. This is historical average. Like, this is your historical norm, right? In that 16 to 17 range is basically the historical average over the last, 300, 400 years. I mean, back in the tulip days, they were trading, 16, 17 VIX. And so this is pretty normal. But if you look at what else is going on, man, look at our Bitcoin bros, man. Look at this. Look at this. If you going out with your Bitcoin bro, with your local Bitcoin bro tonight, I should say, he's buying. Like, he is 100% buying with Bitcoin up $4,800 today. So there you go. Bitcoin back to 91,000. You're excited. I'm excited. Michael Saylor is excited that he's not getting his margin call today, although it will probably be tomorrow. And then we'll kind of see what's what. But there you go. There's your market commentary. That, is it going to make you a better trader? No. Is it going to make you a worse trader, though? No. I think we're pretty unched. There on the market commentary. So, all right, what I want to do, though, let's go into, man, I see you guys. Man, I see you guys in the chat. Man, look at Catterday Knights in the house. Rex Kramer 22. Rex Kramer 22. Are you related to Jim Kramer by chance? Please let us know in the chat. I think we would all like to know, because we all know that we can fade me and make a ton of money. But if you kind of have that in your bloodline, we may have another fadeable opportunity right in front of us. So let us know there, Rex Kramer. I'm very, very interested now. And so, man, I see Base Sight in the house. Man, Brian Dowdy's in the house. Mr. Pillows in the house. Man, look at this. Danish Dynamite, Scramble Everything, James Bond, Daniel Perkins. Man, and obviously a bunch of other people that I'm not seeing, but I appreciate you guys very, very much. All right, so we look at the portfolio, man. This is looking pretty paltry, right? I mean, this portfolio, man, this thing has been dieting for quite some time. We've only got 3 positions on right now. We have Home Depot, and Starbucks isn't even, it's obviously a position, but I don't think about it the same way, because this has been a long-term holding that, we've had for quite some time. And so when it comes to, this Starbucks position, we've got our 100 shares. This is what we put on way back yesteryear, like almost a year ago now. Like, I think it was like late December of 24 that we put this trade on, and we still have it on. I mean, it's still the same original trade package that we put on back in late December of last year. And we've done a bunch of things around the edges and sold premium and bought it back and did earnings trades and did whatever. And now we have obviously this kind of deep in the money, this deep in the money call option that is intended to be a dollar cost averaging substitute. This is intended to be like a synthetic version of dollar cost averaging if you were a long-term investor. The reason why I didn't just buy another 100 shares is because I wanted to save a little capital. And that's exactly what we were able to do, right? We were able to buy this for $26.70, so $27, let's say. So that's going to be $2,700, right? You buy 100 shares of Starbucks, $85 stock, right? $85 stock. That means that, 85 times 100. Again, I'm no Julius Spina, but I think I can handle this. That's going to be $8,500, right? Approximately. You can never be sure. But 50% margin of $8,500, that's $4,200. And so we were basically able to save, 30%, 35% off the margin of the overall addition to the position. And we basically have the same trade on. Now, we don't get any dividends for the long calls. We also don't have clean 100 delta. So those are going to be the gotchas. There's always some gotchas that you have to be aware of, but I like the trade-off. And so that's kind of why we did what we did here. So there's our Starbucks position. Again, I don't really think about that the same way that I might think about an MES ratio, that I might think about a Home Depot position or what have you. And Home Depot getting really hammered today. And so, man, we really had them yesterday. And didn't I have a chance? I think I had a chance to make like 60 cents. And I said no. Like, I think I had a chance. Like, you can go back and you can roll the tapes. Like, you can roll the tapes that I had a chance to make 60 cents on this Home Depot trade. And you can roll the tapes too. That, man, I've been telling y'all about Drake May. It's been years now. It's been years. I was talking about him when he was a sophomore at North Carolina. You can go back all the way, 2018, 2019, 2020, whatever. He's my guy. He's been my guy since day one. Same thing about Home Depot here. And but now we're not going to take it off because now we've got to make our money back in Home Depot. So there's some famous last words for you. But MES is actually the shining star in the portfolio so far. And we're going to sit tight and do nothing there, of course. But let's go ahead. What I want to do, I want to do the other trade I wanted to do yesterday. But yesterday we were getting back in the swing of things. It was Monday after Thanksgiving, whatever. And so we kind of went a little bit long in the tooth when it came to the different things I was talking about with the MES trade and then the other things that we talked about yesterday in the first half of the show, which it takes a lot for me to admit that I was long in the tooth because that's the baseline. Like, that's delta neutral, right, for this show. And so for me to actually recognize that I was a little bit long in the tooth, those were 17, 18 minute, victory laps, for sure. And so if we go to MNQ, let's go to the NASDAQ. It's funny. I mean, you guys don't have to believe me. Of course. I mean, why would you believe me? But I was going to sell a put yesterday in MNQ. I mean, my track record in MNQ has been short puts. That's what we've been doing in MNQ. We've been taking advantage of the market moving higher. We've been just utilizing my favorite strategy, bar none. And so that's what I wanted to do yesterday, but we didn't have time to do it because I wanted to get to you guys. But unfortunately, the market is up 200 points today. And so selling a put on a day like today doesn't look as attractive. It's not going to be as appealing, of course, because it'd be much better, to have sold the put yesterday. Unfortunately, though, we don't know what's going to happen. Unfortunately, though, my crystal ball is in the shop. It's been in the shop for quite some time. I don't know when I'm going to get it back. And so without knowing what's going to happen the next day, it can be a little tricky, to do different things and, trade different products. But if you look at the, let me bring up my chains here. So if I look at my chains, just to show you guys, I mean, here's my MNQ. Here are my MNQ chains. I mean, look at this. We've got, sold a put right there for 433, bought it back for 183. That's a W. Right? Sold a put for 423, bought it back for 209. Another W. Right? Sold a put for 423, bought it back for 175. A third W. Like, I really think I should probably stop saying W. But but this is all we should do, man. Like, why are we doing anything else? Ratios and iron condors and earnings and whatever. I feel like this show should just be from theory to short puts and MNQ. Like, from theory to short puts in the risk-free instrument. Like, I really feel like, that's where this show is just naturally headed. But anyway, I digress. And so let's go ahead and Let's do something in MNQ. I mean, I'm not gonna. I mean, why would you do anything different? If you can't beat them, what do? We join them, right? If you can't find a way to do better on your own, what do? You join the ranks. You just file in the back of the crowd. Nobody sees you, and you just follow along, man. You just follow along. That's exactly what we're gonna do here with MNQ again, right? We're gonna dance with who brung us, and just sell a put. So let's go to January. With 45 days to go, I mean, that's where we like to enter trades generally speaking. So that's good, of course. Let's go ahead and, I mean, obviously one thing to be mindful of, again, is I think we talked about this yesterday with the MES trade. We probably did. If I didn't, then I certainly meant to. I'm pretty sure we did. But remember, we're in January now, 45 days to go. And so that means that this contract is tracking to the H financial future. So Z is done. Z is over. I mean, we've only got another week or two of trading in Z, and then we're going to be rolling into March of 26. That's going to be the active contract, the front month. That's where all the action is. And so if you're trading some expiration beyond December, so in this case it's January, it obviously can't track to a future that doesn't exist anymore. Or actually, let me say that again. It can't track to a future that won't exist anymore after December. And so before this contract in January 16th, before this guy expires, the December contract futures wise will be gone. So it obviously has to track to some product that's going to exist throughout its own life. Like it can't track to something that's going to be gone halfway through. And so the reason why that's important is because when you're looking at the option chain, you're looking at strikes, you're looking at whatever you're trying to, decide where you want to put your where you want to set up your strategy, whatever it might be. You just want to be mindful of the simple fact that, all right, what is the underlying future that's kind of governing this whole process? Like, what is the underlying future that, these strikes are essentially related to? And in this case, it's going to be the H contract. So when you look at, let me bring up MNQH here. If I go to MNQH, so you're 25,851. Right. So this is significantly higher than the Z contract, which again, that's very normal. The financial futures are almost always going to be in contango. I guess maybe after a huge drop, maybe that's not the case. Potentially, it's kind of similar to volatility in that regard. But even then, I'd have a hard time. The volatility backwardation makes more sense to me intuitively. Mathematically, or even intuitively, the financial futures not being in contango, even if it's a shallow contango, doesn't make a lot of sense to me because you've got dividends, you've got cost of carry, and things of that nature that are essentially going to line up all the time, regardless of, or even irregardless of, if you want to play it that way. Hey, man, it's 2025. You do whatever you want with the vocabulary. It's free reign, man. It's 100% your world. Either way, irrespective of what the market might be doing, I can't think of a scenario where a contango wouldn't make sense in the financial futures. That doesn't mean that there can't be a scenario. It just means I can't think of it right now in this moment. And so anyway, I digress. And so there you go. 2 days after the vacation, we're back into mid-season form. We got tangents on tangents. We have digressions off of digressions, and nobody has a single clue what's going on. But if we go, which is probably not good. But again, you got to dance with who brung you. If you go to MNQH6, though, we go to January. We are now set up with an understanding of the price being 25,845. So I think here, let's just go in here and look at these markets, man. These markets are looking a little bit better than what they've looked like recently. I mean, look at these short puts in MNQ. Do you guys remember? If you go back to the chains, I'm not going to bring them up again, but if you were to, pull up the Allison chains again and looked at the time that I put those trades on, I do all my trading on the show, at least 99% of the trading on the show. And so that is, I'm hoping, helpful for you guys because you're not missing anything. There's no gaps. There's no mysterious trades that, didn't happen or did happen or whatever. It's all there for you guys. And so if I did those trades, if you saw those in the chains, then you go back to those shows on those days and you'll see the analysis, you'll see the commentary around those trades. If I'm not mistaken, we saw some crazy markets in the MNQ price, did we not? We saw some Tony Batista markets if I've ever seen them. Now, Tony doesn't do it anymore, so what is he doing? He's mentoring Vinny Batista. So those are some Vinny Batista markets where he's like, listen, Vinny, listen, son, here's what you got to do. You want to widen this thing out as much as you possibly can. 300 bid, 900 offer, MNQ, sold. That's perfect. That's what you start with. Because if it doesn't work out like it didn't for me back in the 80s, you're selling jeans out of your trunk. And I don't want that for you, son. I don't want that life for you. And so he trained him well. And so now when I'm looking at these MNQ markets, I'm like, man, I don't know. Is Vinny still running these markets? Because these look like some competitive markets. These look like, okay, all right, this is a professional behind the wheel here. So if you look at like this 30 put, man, that's not too bad. 374 bid, 390 offer. I mean, it's not the greatest I've ever seen, but it's not as craptacular as it's been in the last couple of weeks here. And so that's pretty nice from a, from a liquidity standpoint, from a retail trader standpoint. Like that's really, really good. I'm glad that the MQ markets are kind of back to where they should be. But let's go in here. Again, I'm not going to overthink it. I think we've already, kind of lost 6 or 7 minutes of our lives that we're never going to get back. So let's go ahead and sell the 24,900 put for 30, a 30 delta put for 30, but it's a 30 delta put. The credit collect is going to be that's the bid price of 374. We'll probably try to get filled around 380 maybe. And you can see the buying power effect is really nice. That's only about 7% of the account. Pop is 74. That looks good. P50s, they're going to make us work for it. It's not available on the futures options, which I would imagine the devs are looking at that because that would be a really, really nice thing to have. But beggars can't be choosers. Maximum loss, minus 49,000. Again, just so we're all clear, that would be the NASDAQ going to zero. Theoretically, is it possible? Yes. Practically, is going to happen? I'm going to say only about a 10 to 20% chance on any given day. And so if you look at the credit collected here, it's pretty good. I like it. Let's go ahead and put this guy out. And then I actually want to see, are there any earnings today? I feel like we got to get back in the swing of things. Let's do, I'll do like 381.50. I don't know. Let's give it a shot. All right, no takers at 381.50. Okay, so let's see if Vinny will give us 380.75. We got 381.50. Look at that. Yeah, see, Vinny, he's watching the show. I appreciate you, Vinny. I appreciate you very much. And so there's MNQ. Let's go ahead and, all right, let's look at earnings. So let's go into the watch list. Let's take a look at Tom's watch list, whoever that is. Let's see. Let's go down. Who's got earnings today? So today is CrowdStrike? Man, CrowdStrike. I don't know about CrowdStrike. I think I might pass on CrowdStrike. Who's tomorrow? Tomorrow morning. So tomorrow morning, we got M. Who's M? Is that Macy's? No. Is that Macy's? That's Macy's. Wow. I mean, they're still doing it. Like, they're still out there. That's really, really amazing. And so if I go, I don't know. Again, you can do all the analysis you want to do. I say go for it, man. 100% go for it. You got to make your own decisions. I will never tell you what to do. But when I think about Macy's, again, just think about it as an idea. Don't even think about it as a stock. Just think about it as a philosophy. How can you be anything other than mega, mega, mega bearish on Macy's? This is unbelievable. So let's go into Macy's. You've got earnings tomorrow morning, which I would imagine will be the final earnings for Macy's. And let's do it, man. Let's do a little, wow, are we really going to do a butterfly on a $20 stock? Man, is that what this show has fallen to? We're doing butterflies on $20 stocks. I'm going to pay 15 cents for this butterfly. I don't think I can do it, man. Let me look at it just to see. I'm curious now. If I do a 22.5, that's like doing a butterfly on Wolf, right? Like y'all trying to get me to trade Wolf, which I'm not going to do it anymore. I'm 100% not going to do it anymore. I mean, check with me next week. But yeah, this would be like doing a butterfly on Wolf. And 22.5, 20.5, 18.5. What's it? It's going to be like 19 cents. Watch this. 43 cents. Look at this. Look at this thing, man. Yeah, even I've got a line that I can't cross, and I think we have found it. It took us 9.5 years, almost 10 years, but I'm not doing a 40-cent butterfly at Macy's. It's just, it doesn't have enough. There's not enough juice in the orange. There's not enough oomph in the fill in the blank, right? Like I need a little bit more kind of happening in this butterfly. So I'm not going to do that for Macy's. But the tricky part, this is what can kind of be tricky about low price stocks, all kidding aside. So if you have a low account, if you have a small account and you're a new trader or whatever, like that's amazing. You're in the right spot. Like we've all got to start somewhere. And $30,000 account's not a big account anyway. I mean, that's on the lower side of modest for sure. But if you've got like 5,000, 10,000, 15,000, whatever, this is actually a great stock to start with. I know I'm joking about it and I'm this and that and the other thing, but if you're just starting out, this is a great stock for you to start it because you can do basically whatever you want to do. And your goal right now is not to make money. Right? Like your goal right now, in my opinion, is not to make money. Your goal is to learn and your goal is to gain reps and your goal is to actually understand how different strategies move and how they react and define risk and undefined risk and whatever. And so you don't want to get caught in the hailstorm that is, a short strangle in Tesla or something like that. Because if that goes wrong, it could be really, really problematic, right? Even if Macy's goes under, even when Macy's goes under, it's a $20 stock. Like there's only so much damage it can do, right? And so that's why starting with low price stocks, in my opinion, if you're just starting out, is just a great place to begin. But for me, I don't know. Do I really want to do this? Nah, I'm not going to do this. I'll do something else in Macy's though. Let's see here. Let's go ahead and do, you know what we're going to do? So we're right at about the halfway mark of the show now. And so let me see here. Let me clear this order away. I'm just going to keep it super simple. I'm just going to buy an at the money put spread. I'm going to buy the 24. Let's do this. Yeah, here we go. Let's do a 24 and a half, 20 and a half. Perfect. We're going to basically do a risk one to make one. I'm risking $2 to make $2. Pretty wide, long put spread for Macy's earnings in the morning, just to kind of grease the wheels and get us back into the swing of things. And you can bet your bottom biscuit that I smell just a tinge of smoke in the air. And so let's go ahead and let's put this guy on. And let's see here. $1.97, $1.99. The Macy's markets are kind of tight. Is Vinny running these markets too? Is he doing a little NASDAQ Macy's crossover deal? I don't know. Maybe. 201. Oh, we got to fill the 201. There you go. Risk 2 to make 2. Perfect. All right, great. So we got Macy's in. We've got our M&Q trade in. It's perfect. Man, it's almost like we prepped for the show. It's almost like that. Like, it's just, a little something. So let's see here. Let's go ahead and where are you guys at? I see. I'm surprised and delay somebody in the middle. Actually, kind of close to the end. This is pretty funny though. Tananta 29 says, "I'm long Macy's. They're rolling out a new AI model tomorrow." Yes, they probably are. Well, and I mean, so if they roll out an AI model, Tananta, like you're going to be good to go. Like that's going to help you, and that's going to be amazing. And the robots are taking over, like all those things, right? That's all working for you. But the stronger effect that you're tapping into right now is the simple fact that you're on the opposite side of the trade as me. The simple fact that you have faded Dr. J, which you guys know you need to be doing. You guys know this is the strategy that you guys need to be following. You're going to be in really, really good shape. So Tananta, best of luck to you, my friend. But I'm quite certain you're going to be just fine. And so, but let's see, where are we at? Oh, I see somebody else in the middle. I'm going to surprise and delight somebody else. So Daniel Perkins in the middle is throwing some shade on my M&Q trade. He says, "I'm not a fan of doing the M&Q trade today." Well, Daniel, again, I'm giving you a chance to be on the other side of this trade. So you are welcome, my friend. Like you are very, very welcome. But again, for me, it's the beginning of December. Santa Claus rally is getting started, right? Thanksgiving rally is over. Like, we're only a couple weeks away from the Santa Claus rally, then the MLK Day rally, right? Then the Sweetest Day rally, then the Valentine's Day rally, right? And then you got the Easter rally, of course. And, everybody knows that the Memorial Day rally is the real moneymaker. And so I'm not wrong. I'm just early. Like, I'm not going to be wrong. We're just going to get a jump start on everybody else and kind of get into these positions just a wee little bit early. And so, by all means, my friend, take the other side. If you were serious about making money, that's what I would do if I was in your position. But yeah, we're going to go ahead and sell this little put here in M&Q. And again, I mean, if the track record is any indication of what might be happening down the chutes into the future, yeah, we might be okay. And those, of course, are famous last words. So let's see here. Who else is in the middle? Man, I see some new people. Hang on, I just want to give a couple surprise and delights to a couple new people that I don't recall having seen in the chat before. And I'm gonna tell you guys something. Like my blueberry intake, it is on point. Like I'm crushing 75 to 100 grams a day, every single day, sometimes twice, sometimes afternoon and little nightcap deal. And so the blueberry intake, I mean, we're doing the organic, like never been touched by human hands. Like we're getting the good stuff in there, man. So the memory is really, really firing on all cylinders. But I don't remember seeing Justin Lero in the house. So Justin Lero, what's going on? Says, hello, Dr. Jim. What's going on there, Justin? I just want to say hello back. And I appreciate you for being part of the show. And of course, I hope you stick around. And if I can ever help you in any way, please let me know, whether it be in the chat, whether it be email, whether it be social media, whatever. Like, I'm here to help you guys. I try to be as responsive as I can be. Sometimes I slip through the cracks. If that ever happens to you, please send it again. It's not that I'm not trying to respond to you. It's just that when it slips past the first page of my inbox, then it's kind of like a Google search, right? I mean, does anybody use Google anymore? I mean, I certainly don't. Like, I'm using Grok. I'm using ChatGPT. I haven't used Gemini yet, but I've heard good things about it. And so I'm like, man, this is a way better search engine. But anyway, I still treat my inbox the same way. But reach out there, Justin, if I can ever help you. And then I also see Bob Love in the house. What's going on there, Bob Love? Bob Love that blob. Love your show, Dr. Jim. Man, Bob, and my show loves you back. Like, my show 100% loves you back. And so I appreciate you so much for putting that in the stream at this very time. And I'm going to send you that cast that we talked about. So thank you very much, my friend. All right, let's go back to the very beginning. Let's see where we're at. Okay. So now we're back to the very beginning. Org Denu's in the house. What's going on there, Org Denu? I appreciate you. Again, I can't remember if you're in Italy or Arkansas, because they're very, very similar in my mind. But I appreciate you, my friend. I know you're in Italy. But Italy, I've been to what's so funny about Italy? So I've been to the Sistine Chapel when I studied abroad in 2003 in France. I visited Italy. I went to Florence. I went to Rome. Did I make it to Venice? I didn't go to Venice. Some of my friends went to Venice one weekend, and I didn't go with them for some reason. But I went to Rome and I went to Florence. So I went to, saw the Statue of David. I was inside the Sistine Chapel, which was amazing, obviously. Well, the reason why I'm bringing that up is not only is Ordenu in Italy right now, but my wife, we homeschool our kids. So this morning, when they were having their little morning time, like they're having their morning time, I'm having my morning time. Like, what are they doing? Like, they're reading poetry and they're doing this and they're doing that. What am I doing? I'm watching the NASDAQ, right? And so you tell me who's getting more work done. Like, you tell me whose morning time is more valuable. I'll let you decide. But they're reading all this poetry and they're looking at these paintings, right? Like, my wife has them doing like these like famous paintings or whatever. And she pulled up something about the Sistine Chapel. And they were all like mesmerized by it. I said, Daddy's been in the Sistine Chapel. And they didn't believe me. They're like, no, that's not true. I'm like, I've been in the Sistine Chapel. I was like, it was 23 years ago or whatever, but I was there. I'm pretty sure it's about the same as it's been the last 23 years. They were not impressed. They didn't believe me at first. And then they were very, very unimpressed. And I'm like, man, this is a tough crowd this morning. But you guys, man, I appreciate you guys so much. And so Brian Dowdy in the house. I should clarify, I put it on 2 days ago. That must be a previous conversation. Here we go. Brian Dowdy. Hello, Dr. Jim. I missed the stream yesterday, man. That's okay. Like, you guys have lives and stuff, man. Like, I understand. Like, 100%. Don't let it happen again. But I understand that one time. Hope you put on some trades. How about trading Okta today? I would like to know if I should feel good or bad about my position. Good job not telling me what you have so that I'm not influenced at all. Okta. I don't know anything about this stock. Never heard of it, to be honest with you. And maybe it's something that's in play right now. I mean, I don't even know. They have earnings. Oh, they have earnings tonight. Okay. So this is another earnings play for tonight. Okta. How are the markets in Okta? So liquidity is 2 stars. Yikes. I don't know, Brian. $82 stock though. Let me look at the monthly. Yeah, the markets are not that great. I've seen worse. I've traded worse. The markets are, I mean, what if we just did, again, we're going all in on short Macy's. And by all in, I mean, we've got $200 at risk. But I really feel very good about that trade, which you guys know what that means. When it comes to Okta, though, I don't know. What if we just did a strangle? Like, what if I just did like an expected move strangle deal? So I sell a 70 put. Excuse me, I sell a 95 call for $4. Wow, that's actually pretty good. I was thinking the buying power was going to be maybe $1,200. It's only $800. All right, Brian, you've convinced me. Now, I don't think I'm going to help you too much because this is a very neutral trade on my end. I don't know what you have on, and I don't know if you should feel good or bad about my neutral position in Okta, of course. But yeah, $4 credit, pop is 69%. P50 is 85%, 86%. Buying power is only $800. Man, I like it. I like it a lot. Now, it's not going to be as fun to, root for earnings or to, have a dog in the race for earnings tonight. But sometimes you got to try to make money. Like sometimes you got to actually be a little bit strategic about it. So let's go ahead and let's do this Okta trade. And let's see here. Let's do $4. All right, no takers at $4. Okay, so this is where the liquidity gets you, right? You guys can see the price discovery. This is where they get you. This is where, all right, we got filled at 397, so it wasn't that bad. I mean, Vinny had the upper hand there for a second, but we ended up victorious in the end. And so let's see, Edward, but hopefully that, hopefully that helps you, Brian. I'm not sure that it will. But Edward Lond is in the house. Scheming a heist. What's going on there, Edward Lond? I appreciate you, my friend. I don't know what the scheming is all about, but there could be a previous deal that I'm missing the inner workings on. Daniel Perkins says, Dr. Jim, I missed you so much, man. I missed you too. How about Drake May, baby? That's what I'm saying. Dude, I've been telling you about Drake May from the beginning. Like, you think Drake May might be your guy? Drake May has been my guy. He's been my guy since his high school days. Since he went to what did he go to? Didn't he go to like I think he went to what? Like was it Costa Rica High, I think it's called? Something like that. Yeah, I'm pretty sure that's right. And so I've been a fan of Drake May from the beginning. And so don't you all ever forget that. I got distracted because my wife is calling me right now. It's unbelievable. I know I should answer, but I'm not going to do that. I should do that. I can't. I went to voicemail. And so next time it happens, though, I'm going to answer. And so when she says, hey, what are you doing? I'm going to be like, nothing. What are you doing? What are you up to? And so anyway, sorry about that. I got distracted. But all right, let's see. If I go to Daniel Perkins, Sam L's in the house. I'm with Doc on the Dad Bod Winter Bulk Extra Calories are just insulation. That's correct. And it's free. Like, you don't have to pay for it. Like the pink stuff you got up in your attic, that's not cheap. Like, it sure ain't free. And so, yeah, man, it's just Pop-Tarts. Just Pop-Tarts and, maybe some, some kicks, maybe some, honey bunches of oats. And so that's where it's at. But let's see. Theta Trader, Dr. Jim at 1330 hours still throws me off. Yeah, me too, my friend. Me too. Like the first part of the day for me, I mean, I have a lot of things going on. But the first part of the day for me feels a lot longer than it used to feel. Like changing it from, obviously I'm in the Eastern time zone, so it's 2:30 for me now, but if you're in Central, it's 1:30 for you. And so for me, it's like, like market open, let's say, or like economic number 8:30, right? Like economic number 8:30 all the way to 2:30, like that is like an eternity. Like that is a very, very long ways away. And so I'm still kind of adjusting myself, but there's gimmies and gotchas as there always are. Daniel Perkins says, I'm not a fan of the new lineup. Yeah, it takes some getting used to. It's just like a new pair of shoes, man. Like you don't like it at first, but after a while, you can't really envision your life without them. So I would think about this the exact same way. So Sam L, big real question. If you're training in, you can still see your abs. Does it still count as a dad bod, or is that just cheating? No, once you can see your abs, you're no longer included in the conversation. And again, I don't make the rules. This is universally accepted, right? And so you have to decide which pathway you want to follow through the forest. Let's see. Brian Dowdy says, I do miss Victor. I miss Victor too. Victor was one of a kind, in my opinion. Let's see. Oh, Edward Lon says change is good. I agree. Theta Trader says, I don't miss time for content. Well, that's good, I guess. I just don't like the way he seemed to be so unhappy. But yes, I would definitely take Victor back in a second. I agree. E-Media says, how about Anton? Yeah, the artist formerly known as Anton. Another oldie but a goodie, man. Like really, really, really good dude and great researcher. Just very good at what he did. And it was really fun. It was fun to work with Anton. And he was great at what he did. And I loved being on the road with Anton too. Like Anton came on the road with us there at the very end, and that was super, super fun. And so Anton on stage and all those things, and his wife Bella. Like, I think from what I know, Anton's doing well. So that's really, really good to hear. But let's see, Mr. Pillows, are the Bulls or the Bears winning? I don't know. I think it might be a tie at this point. James Bond number 4 says, Happy Monday, Dr. Jim. Because of its high IVR, how would you be trading MSTR? Do you have any thoughts? Man, I have negative thoughts on MSTR. Yeah, I don't understand it. Like, it's obviously doing well today, up $15. I mean, Michael Saylor, and I mean, he's buying Bitcoin, but then it's like he's got all these other like convertible preferreds and like all this other stuff going on. And from what I understand with like net asset values and whatever, I haven't looked into it too much because I basically quickly drew the conclusion that there is no way that he's going to be able to outperform Bitcoin itself, from what I can gather. And maybe I'm wrong in that conclusion. Maybe I'm wrong with that analysis. But I'm just like, man, if I want exposure to crypto, I'm not going to do it through Sailor's little, Ponzi-like scheme, like whatever. I'm going to, whatever it is. It might be that. It might not be that. It kind of feels like that. But if I'm just going to go straight to Bitcoin. I'm just going to go straight to Ethereum. Like, I'm just going to wrangle up some Fartcoin. Like, this is basic stuff. I'm not going to go to like some company that's, buying Fartcoin at like wholesale or retail. I'm going to go buy it at wholesale, right? That doesn't really make any sense to me. And so anyway, I digress. How is Fartcoin doing, by the way? Does anybody know? I don't even know what the ticker symbol is. I mean, I know what it obviously should be, but I don't know what the ticker symbol is. So can somebody let me know how the old F coin is doing? I would love to know. I mean, it may not even be in business anymore. That's very possible too. It may have just vanished into the wind. Yes. And so if you go to Dennis Dynamite, Dr. Jim in the house, winter has arrived to upstate New York. My 7-year-old daughter just beat me in a snowball fight. Gotta love snow days. Let's warm up by burning some cash. Man, let's do it. Let's do it. It's actually very warm here today. It's in the low 80s and it's very humid because it rained a lot this morning. And so it's a little sticky outside. Like, I'm a bit uncomfortable. And I understand you guys are in upstate New York and you've got snowstorms and, you're trying to trudge through, 19 inches or whatever. But we've got it tough down here, man. Like, it's a little sticky outside. Like, I almost had to, turn the AC up an extra notch. And so, but that's awesome that you did all that with your daughter there, Danish Dynamite. Like, that's really, really, really fun times. Scramble everything. Welcome to the Tuesday edition of the Dr. Jim Powered 3/4 of an hour. Hope you get your crowd earnings trade on. How about a January 20 Delta 20 wide Iron Condor? I love the idea. I love the spirit of what you're trying to accomplish. I'm going to pass. I'm going to pass just because we already did Macy's. And I already did Okta, and I didn't even know Okta existed until, 3.5 minutes ago. So I'm going to pass for now there, Scramble everything, but I appreciate you, my friend. Theta Trader says it might be Dr. Jim's new partner from Theory to Victor Jones. I think that would be an uptick. I think that would be a big, big, big uptick for the show. So we'll see what we can do. Steve Aguilera for the algo. My man. Appreciate you. James Bond. Let's see. Death Sneeze in the house. Appreciate you. Up and Down says Santa Jim. What's up there, Up and Down? Appreciate you. Mikos 015. Hey, Dr. Jim, I don't need anything. I'm just tricking the algo with this comment. Yes, you are, my friend. And so I thank you so much. Like, this is how we grow the channel, guys. Are we going to grow it through value? No. Are we going to grow it through actual content that helps? No, not a chance. We're going to grow it through gimmicks. We're going to grow it through games, right? And so, guys, for the algo, man, for the love of the algo, I appreciate you guys. And so let's see. Mr. Pillows, drop a like for whatever it is we're doing here. Yes, that's correct. Thank you, my friend. Base 8 says silver is doing good. Hopefully it continues. Yeah, where is silver now? It was down a little bit earlier. Okay, so it's rallying back to, oh yeah, I wanted to see, did silver get to 60? No, but look at that, man. That is quite a chart, I'll tell you. 59.43 on the high for silver. Man, that is some strength if I've ever seen it. Like, that is, 60 is a foregone conclusion. I guess. I suppose. The big number bros may have a different take on that, but man, wow, silver has been incredibly, incredibly strong. Did I tell you all to get short silver like 35, 37? It rings a bell. But now all of a sudden I'm forgetting. Now all of a sudden I'm not so sure. I think I said buy silver, if I'm not mistaken. I'll have to polish up on my deepfake skills in the meantime. But I appreciate you, Base 8. Theta Trader number 22. Anton has his own YouTube channel too. Looks like he struggles on his own. Some people need an on-air foil. Oh, well, that's awesome that he's out there. That's amazing. I'm sure he's doing great. I'll have to check that out. And yeah, he's a one of a kind, my friend. He is 100% one of a kind. And so let's see, Bob Love. There's Bob Love is back. I'm estimating the Marvel short strangle worked well for you. I'm not. Oh, he's talking to A Sing 523. That's awesome. Again, you guys budding up, you guys finding people that are trying to do what you're trying to do. You got 500 people that are trying to do what you're trying to do. So I would 100% be budding up. I see Saturday Nights in the house. Appreciate you. Scramble everything. They would need to change it to the Dr. Jim theoretical power hour from conspiracy to Victor Jones. Yes, I know he liked to go down in the weeds on like government stuff and like political stuff and conspiracy stuff, but he was very, very well versed in all of that from what I could gather. That's not really been my cup of tea. I've certainly dabbled in, here and there, but I've landed on the simple fact that it's all made up. It's all made up. It's all just theatrics on both sides, everybody. And it would take a lot. It would take a ton for me to ever feel differently than that. So that's just my own take. By all means, you got to blaze your own trail. And so let's see. E-Media says Anton charges 2% assets under management. Man, that's some premium service right there. So that's my man right there. That's my guy. So base 8, let's see, it's been doing good last week or so. I think maybe you were talking about the MNQ short puts. Sam L says, Doc, time to burn a fresh stack of cash. What's the pick on Marvel? Nope, not touching it. Flip a coin, close your eyes, and let the fade Doc strategy choose our destiny. That's correct. But I'm not touching Marvel because we already did the other ones. We did Macy's and we did Ota. Andrew Fansler's in the house. Dr. Jim, how about a Black Friday follow-up with an AEO earnings trade? I need the fade. Oh, American Eagle has earnings tonight? Oh, wait, hold on. Are they really tonight? It is tonight. Okay, so this one I have to do. I apologize for passing on the other ones. I thought I was done, but Andrew Fansler. So Ryan, give me like 2 more seconds and I'll be done here. So again, I was at the mall. It was packed. I couldn't believe it. I don't know how you can't be super bullish on American Eagle. Man, I mean, there was a line almost out the door to check out. I couldn't believe it. I'm like, is this 1997? Like, what world am I living in right now? I'm like, we're back, baby. We're 100% back. And so let's go ahead and let's see. Let me go into American Eagle. Yeah, I'm going to do that. I'm going to go 45 days. I'm going to go buy an 18, sell a 22, risking 2 to make 2. Very simple trade. I love it, Andrew Fansler. Let me just get filled, and then I want to get you guys over to Tim Knight. So let's see here. If I go to, these are definitely Vinny's markets. Look at how wide those are. 220. All right, we got filled at 220. So there you go. There's your American Eagle earnings trade tonight. We're back, baby. Earnings trades out the wazoo. If you fade every single one of them, you will probably make a lot of money tonight. So I appreciate you guys. I appreciate you guys so much. Thank you guys for being a part of what it is that we are trying to do, whatever that might be. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic
Hello, everybody. Tim Knight here. And, well, we all await the Fed, don't we? There's really nothing going on in the market these days. Obviously, we're way out of earnings season. And probably the last big event of the year is next Wednesday, 8 days from today, which is the FOMC meeting where it's widely expected that they will drop rates another 0.25%. Meh. And, it's the old wanting is better than having, I think. So everyone's sort of on the edge of their seats about that, seeing what's going to happen, what they're going to say. And that'll be it for the Fed for the year. And then it's just kind of holiday time at that point. So we're kind of stuck right now. We're green generally today, ranging from about 1/3% on the small caps to about 1% on the NASDAQ. And crypto having a big bounce, which kind of strategy signaled that yesterday. If you watched yesterday, we were looking at MSTR, and there was this very well-formed hammer on it suggesting a short-term bottom. So maybe my guess that Bitcoin will poop out at 98,000 is going to come true after all, because we've undone yesterday's losses and then some. And it would be kind of cool to get back over to around 98,000, because that should be it across the board. In fact, if we're going to go really out on a limb, how about we speculate that we will reach 98,000-ish on or before the Fed day. So we'll give it through next Wednesday to see if that happens. And that would be a great kind of crescendo to this, to turn away at that point. I have, as always, some charts ready for you. So let's jump in and look at them. I'm starting to kind of zoomed way out, unlike usually. This is the spider going back to around 2019. You can see a number of big historical financial events. So here was the COVID crash. I know some of you have written saying, I can't see your cursor. I don't know if that's still the case or not. I've let the production team know. So, but suffice it to say that I'm pointing at early 2020. So there was the COVID crash, which was very, very quick. It was really just a handful of days that constituted almost the whole thing. Then the flood of money began. Trillions and trillions of dollars poured into the system. And that led to a pretty ceaseless rally from March 2020 all the way up to December 2021. A lot of craziness during those times. You know, Cathie Wood and GameStop and Tesla and you name it. Just the market did nothing but go up. Then the Fed started to turn the spigot off. And for a little while, we had a kind of a miniature bear market. We haven't had a real bear market since 2008. But we had a little bitty one here. It lasted from late 2021. It really ended in June 2022. It was really just about a 7-month bear market. There was one more little leg down, but from my perspective, June 2022 was pretty much the end of it. The nominal bottom was in October, a little bit beneath that, and then began yet another big leg of the bull market, which seemed to end around February of this year. We took a quick dip with the whole tariff war concerns and Liberation Day, etc. And that had a very dramatic bottom on April 7. Really the futures sometime on April 6/7. And then we exploded higher from there. Now, in this year, we hammered out a wedge, which is pretty much universal across all financial instruments, all the equity ETFs. And we here's one wedge here, which we broke. And then here's a more generous wedge here, a little more liberal, which we've also broken. And most recently, we've been engaged in a series of slightly lower highs. So here's the lifetime high, which was not long ago at all. It was a little more than a month ago. Lifetime high, lower high, lower high. And you can see we had this just lurch higher last week. And the past 3 trading days, we have just been leaning our back against the wall with our thumbs stuck in our pockets. There's nothing going on. But we're still in a lower high at this point. So that's the spider. And that general kind of walkthrough of history is pretty universal. So we will not do that again and again. It's just not often that I take the time to look at the past 5 or 6 years. Here's small caps, IWM. Recent activity is not quite as clean in this instance. So let's change that. We have this ascending trend line, which was broken like so. And we've been just kind of hanging out here. As you can see, the past 4 days, a very tight range, not doing much of anything. Pretty much at the same price level as we were at the peak in December 2021 and a year ago. So, here and then again and then again. So tremendous amount of smoke, very little in the way of fire, nothing really persistent. As far as the cubes go, the only feature on this one worth noting is the gap, this price gap that took place between the 3rd and the 4th of November. We've stayed beneath that gap for a full month. And from a bearish perspective, hopefully will remain so. We have like 7 green bars in a row here. So the strength is still there. The mega caps are still doing very well. Nvidia has become kind of a giant bore compared to how it used to be. Google sort of shunted it aside because Google is this incredible champion. I think it's like doubled since April. And it's just been a raging success story. But yeah, the cubes, the gap is still intact. And a little more specifically, the semiconductors, SMH, same idea. We've got a gap between the 3rd and the 4th of November. And we've got just green bar after green bar the past 7 trading days. But we're still beneath that price gap. So for myself, the correlation between stocks has been eroding. We lived in a kind of 1.0 correlation era for a while. We've moved away from that. It's become more of a stock pickers market, which for chartists like myself is a breath of fresh air. And so I'm just honing in on little issues, some of which I've never traded in my entire life, but just basically any chart that looks promising. One specific semiconductor firm which still has a nice little bearish pattern is Advanced Micro Devices, AMD. And you can see here around the top. And we don't have 7 green bars in a row on this one. We've actually got a bit of a dip going on right here. Here's a red bar today, bouncing away and beneath that topping pattern. So that's one of my short positions. As I said, Bitcoin had a wretched time yesterday. It has just undone that. It controlled Z, all the nastiness from yesterday. That orange line that I've drawn there is my best approximation of where I think things are going to exhaust themselves. There's a staggering amount of overhead supply here. $100,000 is a very important psychological level, but I don't think it's going to even get quite that high. About 2% shy of that, I would say. And I had mixed feelings about yesterday's plunge because my prediction was 98,000. It didn't even muster that. Maybe it still will. If we had continued falling away, then different story. But maybe we'll still make that 98,000 that I talked about and wrote about a week ago. And in turn, obviously, if Bitcoin does well, strategy is going to do well. MSTR yesterday during the show, I remarked what a well-formed hammer pattern this was. This candlestick pattern, this little bitty body right here, and this long shadow beneath it. That's a textbook hammer right there, and it's particularly bullish short term. Candlesticks are 1-day patterns, 1, 2, or 3-day patterns. So these are short term. It's particularly bullish since this is a reversal gap. Notice that we've got space between the low and the high here, and the high and the low here. So this hammer's all by its lonesome. So I wouldn't be surprised to see strategy rally back up to, I don't know, the low 200s. It just kind of get dragged along as Bitcoin, I assume, has about another $5,000 or $6,000 of healing to do. Over in precious land, that was a good trade for me. Yesterday I made mention of being short-term bearish on gold, and so I shorted GLD and I bought DUST, D-U-S-T, which is the leveraged bearish ETF against precious metals miners. And so gold itself is down today more than a full percent. You can see here we're down almost $50. And so far so good on that. I'm still with that trade. Silver is down a little bit. It has had a particularly powerful run, lifetime high close yesterday. And we were talking about the hammer with strategy. This is kind of the same pattern up here, sometimes called a hanging man when it's at the top instead of the bottom. But that's short-term bearish. So silver is barely down right now, but I would not be surprised at all to see silver sell off pretty hard in the days to come, maybe for a week or two. So I'm sticking with my GLD short. And there is actually, this is less known than the likes of GDX, but there is a silver miners ETF, SIL. And this is down about 1 3/4 today. Let's just put a marker right there to show where the former lifetime high was. But yeah, as I said, I was bearish miners. So here's GDX, which is down a little more than 2%. And what I actually bought was a DUST, DUST, which I did sell earlier today. It was, I got out a little above 9. So it was about a 7% gain or so overnight. That may be a mistake. Miners still are probably weak, but the only kind of participation I'm retaining here is my GLD short. I'm not too crazy about holding on to leverage instruments more than a day or so. So I'm out of DUST, had a nice profit on it, but took those and left. As far as palladium goes, even though gold is down, silver's down, palladium's holding up. And PALL is up 2.56%, pretty impressive. We are still lingering at the top of this range. You can see this. Here's the support, and here is resistance. Up, down, up, down, up, down, up. And so I'm not in this right now. If gold shakes off its blues and blasts higher and palladium follows, shame on me, but no shame deserved yet. We'll see if that resistance holds true to its name. But hats off to palladium for holding up this well in the face of everything else selling. Also, something I hardly ever mentioned, but platinum also has its own ETF. As with PALL, this is PPLT, also thinly traded, but it is out there and it's down too. So palladium's the weirdo that actually is managing a gain for the day. As far as short positions go, here's just some odds and ends from what I've got. Don't get scared. I didn't short this a week ago. I actually just shorted it today. This is Abercrombie and Fitch. It has lurched higher recently. So I've shorted that one. And to my eyes, I think this is kind of a triple top going on here. We can see here, and then most recently here, reaching this level. So as of today, getting back into A and F. Also getting back into Bed Bath and Body Works, BBWI. A couple of weeks back, I shorted this, I forget exactly where, and it just plunged. I got out on this day. It fell a little more, then went shooting higher. So too bad I didn't wait another day, but I also avoided this business. But I'm getting back in this one too, because I think long-term, this is still quite vulnerable. A new one here, CIFR, Cipher Mining. And this pattern's not complete yet, but we're gonna stick our neck out a little bit and see if this can eventually hammer out a head and shoulder top. So new position, CIFR. Also continuing to be short Monroe, MNRO, which doesn't look like much from here, but very, very long term. I think it's a very powerful topping pattern. A new one also, COP, C-O-P, this is ConocoPhillips, getting reversal away here. This has been very range bound as well, as you can see here. Down, up, down, up, down, up. This whole range zone, but short this one with a stop right at that gap right there. So that's a nice clean gap. What else we got? Well, I'm gonna give a little bit of a shot to Netflix. I haven't drawn it here, but this has broken below its long-term ascending price channel. So short NFLX, a few more of these while we're at it. Another energy one, Occidental OXY. Short that one. And STX, this is down a little bit today. This is Seagate Technology. And one last one of these examples is the very unsexy, but to me interesting chart, WD-40 company, WDFC. And yeah, I've got a bunch of different positions, but those are just a handful of those which I'm short. I still am enthusiastic long-term about Rivian on the long side, but as I've expressed, what's weird about this chart, and I really can't remember any other examples of this, is this phenomena where it bases, blasts higher, and then crumbles. And we've had 1, 2, 3, 4, 5, maybe 6 instances of this. It just doesn't seem to persist in its ascendancy. It just seems to like to backtrack. For that reason, I've taken profits on this because it's just about the time that it kind of rolls over if history is any guide. But long term, this could be terrific. And I could be kicking myself for this one, but good profits on this so far. It's a squirrely beast. It just sells off out of the blue like that. Well, I'm out of time, it looks like. So that'll be it from me. And I will see you here Wednesday, and that'll begin our 1-week countdown to the Big Jerome Powell event. So thanks for coming by, and I'll see you tomorrow. Bye-bye.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
New from tastytrade. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and we are back and wearing our green because what time does the game start, Jenny Andrews?
It starts in 26 minutes, Liz. I have it fired up on the TV, ready to go. It's on the U if anyone wants to watch.
Only because we're on Zoom. Can you hold it up closer to the camera?
Oh, hold up the state medal. This is for dance, but I'm hoping for a football championship. We haven't had a football championship since 2014. So if they win, the kids get a day off of school. So all the kids are really rooting for a state championship.
Oh, okay. I would be rooting for it too. Can we take off?
Liz, if we win today, we're off tomorrow.
That's awesome. That's awesome. Well, if you didn't get enough of us from the trading floor, we'll be live from the trading floor again tomorrow. So yeah, this is gonna be a fun last 30 minutes. Jenny, I did not expect this market. I mean, it's not that crazy. Can we jump into the platform? I want to take a look at the VIX.
Oh.
Okay, before I type it in, all right, don't look at the side. Where do you think the VIX is?
1650.
Oh, you're good.
Ooh, oh. Hey, you know what? I was just at Jewel and everything was not adding up right. And I was like, listen, I do math for a living. Like, I think I can figure out there's a problem here. So honestly, this is just a warning for you. I saw an advertisement for Jewel, 33% off wine and spirits. 33% off wine and spirits. So in between the live from the SIBO and last call, I thought, I'm going to run to Jewel and get everything I need for the holidays because it's 33% off wine and spirits. Well,
listen, my wine and spirits for the last 9 months were free. It's so funny because I got refunded for 90 bottles of Prosecco. So yeah, free.
That is so funny. That is so funny. So and did you tell that story on air? I can't remember.
I did. I told it on the morning show, but Costco sent me a letter in the mail saying that they were going to refund every bottle of Prosecco that I bought for a 9-month period. And there were like 5 massive parties at my house. And I went there and I got back. He's like, I was like, I'm kind of embarrassed. He's like, don't be embarrassed. Don't be embarrassed. It's only 6 bottles. And I was like, it's 6 trips, not 6 bottles.
6 trips, 9 cases. I don't know. That is so funny. I mean, that's hilarious.
Yeah. Well, did you get your 30% off?
Okay, so I'm like, I had the whole cart full of, case of those little 6-pack cases, like as many as I could fit in the cart. Went to check out. Apparently, it's limit 6 bottles.
Or you like, forget about it?
I was like, I gotta get on a show. It was so tight with me having to get home to get on for last call. I just bought them all at full price, and I drove home so mad.
Oh.
I was like, wait a minute, these are supposed to be 33% off.
I'm telling you, there is karma in the world. Mine are free. Yours were. All right, but we are in the platform. Jenny is the guesser of the VIX, and you are now within 2 cents of it. So I'm very, very proud of you. I think my big mover on the day, Jenny, I'm going to go to IBIT because that's what we have.
Well, yeah, crypto is a big mover today.
Yeah.
Tell me what's the price of Bitcoin? I know you're in IBIT. What is the price of Bitcoin?
You know what I'm going to do, Jenny? Because I'm going to use our handy dandy platform. I'm going to trade. I'm going to go to, wait, hold on. I'm going to go positions. Then I'm going to go to, how do I get to crypto again? Trade.
Here, I can say it's not. So
I'm going to do this. Watch. I agree. I'm going to tell you exactly where
it is. 89, 90.
It is 90. It's almost 91.
Okay, because I knew it wasn't as high as it got on Friday because I want to say IBIT was over 52. IBIT was over 52 on Friday, and we're trading 51.60 because I was assigned on the 52 puts. And so I own like extra IBIT at 52. That was on Friday. And on Monday, I sold the 50 calls against it because it seemed like a good idea. What day was what day was Monday? Yeah, yeah, yesterday. Not
right here,
right. Yeah. I was like, I need to reap some of this money back. So I sold the 50 calls against my man, whatever. It's only against some of my IBIT, but there's still a lot of premium in there.
There
I'm
is
not
still
gonna
a lot of
complain.
premium.
I'm not going to complain.
Well, what I was going to go to is I was trying to look at our biggest winners today. So, I mean, the market hasn't really reversed. I want to look at our silver and gold pair because that seems to be on everybody seems to be talking about silver and gold, not just Burl Ives. Because that's
silver and gold. It's already a winner. And we did the so small scale. So small.
We did a so small scale. Oh, I can't highlight them both at the same time. So one is down 12, one's up 0.3.
Can we look at the chart and see the movement since we put it on this morning?
You know what, Jenny? I will do that for you because I'm in a great mood.
You can look at the daily. This time it was 14 shares of silver.
14 to 2.
14 to 2. And let's see the chart.
Hold on. It keeps taking me to. There's our daily chart.
So there's the little jump. That's the what we made today. So that little jump right there, we're up like $11. Great.
Yes. So silver is. Mm-hmm. Did we say? Oh yeah, silver is up.
No, like gold is up more than silver. Right now, today, since we put on the trade, gold is up more than silver. So silver's up.
Hold on, I just want to go to this. So silver is up 1%. Okay.
Yeah.
Now go to GLD.
But I don't know exactly. So I don't know exactly where it was during our show because we bought gold and sold silver and we're making money on the day. So like I see that gold is down and silver is up, but I don't know exactly where it was when we put since we put the trade on, gold is come up because we bought gold and you could see we're up $23. And then we sold silver. We're down on that, but we made more on our gold than we lost on silver. So since we put the trade on,
and we're gonna wait.
Yeah.
We want at least double this.
Okay. So this Intel trade that we have on was one of the big activity, lots of activity. We saw it on the
this volume buying the 150, 160
and selling that put spread to pay for it. That was all one trade.
So the put spread is what we're making money on. We are not making any money on that call spread.
So this was all one trade. You could see we put it on 35 days ago. It was in the unusual option activity, 2 to 1. It was 2 to 1, that 50-60 call spread, 40-30 put spread.
So I'm going to go to.
Is there still, look at the open interest.
So I just want to see nobody's getting out of it today. But so here is volume was today, open interest 34,000. And this is volume today, 5,000. 18,000 here. This was probably a 1x2 is my guess. And then here we've got 120,000 and 242,000. I think it's 2 1x2s. I think it's 2 bat trades.
Yeah, maybe. So I don't know, but it was in the unusual option activity 35 days ago. So we put this on. And this trade, how much are we up since in the trade overall?
Yeah, $122. Today, we're making most of our money today.
Yeah, we made it all today.
Yeah.
And we made up
some. And then some. Yeah.
So I don't know what to think of this. It's a January trade. Do you want to take it off?
I mean, I would like to take it off. Sure. We should for sure take it off because it'll give us back $1,000. If we want to do something else in there, we can.
I said to Liz today, I want Intel to be the next Micron. Can we look at Micron back when it was $75 and see the...
Well, then I'm not going to take it off because if you want it to be the next Micron or if you think it's going to be the next Micron, this is a perfect trade for it because this has a lot of upside potential. Now, my only go-to move would be to take off the put spread and leave the call spread. But that call spread is still worth $1.
The call spread is only worth $1. The put spread's still worth $1 something.
Yeah. Let's give it one more day. Let's see what happens.
And so this, you know how sometimes like things happen and I think it's an omen.
Yes.
Omen. So when I was,
I like that you bring your voice down. Now, what are you going to tell us? What secret are you going to tell us?
You can remember what this was. I'll see if you remember what this was. And I don't want to keep talking about it, but, this fell out of my backpack out of nowhere. I don't know where it came from. Fell out of my backpack on the floor. And I thought, what is this on the floor?
I can't see it.
You can see it. You can see it.
I can't see it. I don't know what it says.
It's a button. It's a button.
Oh, Oklo button. It's the only button I have.
Out of nowhere. I mean, after months, this thing went rolling out of my backpack onto the floor. And I said, the Oklo button.
The Oklo button. I know your brother got me an Oklo bag and an Oklo button. I don't know where it is.
It's the Oklo button. And I felt like maybe this is a sign.
So OKLO is up 6%. It's up $5.25. It is helping my account today. We don't have Oklo in here, Jenny Andrews.
No, we don't. Let's sell some puts in there or sell something.
If you're not going to sell some, like what you can do, because we can't afford to sell puts. It's very expensive.
Is it now?
Yeah. It's
Yeah.
$3,000. So you have to be a little bit more, you know what, Jenny? Here's what I think we should do. It's got a 34 rank. There's no earnings on the horizon, right? And I know Marvell has earnings, so we're going to get to that in a minute. There's
no big lizard.
That's what I was actually going to go kind of like what we do in IBIT to give us a little bit of room, where I'm going to go, we got $1. I'm going to
Oh my gosh, is this our first January? I know Intel's January, that was only because of unusual option activity. Is this our chosen January trade?
Think it is. This is using $1,500, but it's not bad.
That's not bad.
And I did exactly what we used to do in IBIT. So we have from 75 to 115 where we can make $5, right? There's no risk to the upside. To the downside, our break even is 70.
We've got $1,500 in risk, but we know if it drops down to 65, that put spread will be trading for like $700.
Yeah, I'm shipping it.
Ship it.
Our January trade.
What is 70, 85? Yeah. Yeah, if it trades down to that level.
Yeah.
Good.
Okay. Now, Jenny, I know you were struggling with this before the show, and because you closed all of yours.
I closed all my Marvel. I just panicked. I got myself into a pickle where my calls, I was rolling them out to Jan, trying to protect myself. In too many of my downside ratio spreads or downside, so many times I tried to protect my stock with downside ratio spreads, and in too many situations recently, it went so far down that it didn't help, only got me longer and longer. And so I just decided, you know what? I'm done. I closed all my Marvel. I'm not going to.
Do you know what I did? Sat back and did nothing. So I'm sure I'm going to ruin the day tomorrow. I didn't even try to protect it.
I mean, it could be up a lot. Who knows? It could be up a lot. I just didn't want to take my chances. I thought I have a nice P&L in Marvel this year. I'm just going to shut it down.
Guess who's calling me? Tasty Trade Support.
Maybe they have an answer for us on that PDT rule.
I've asked everyone under the sun. I will get to the bottom of it eventually. So I wonder who it was.
That is so funny. So funny.
Hi, support whoever was calling us, because I know they have us on the TVs there.
Hello. If you're calling us, we're on air. All right. So Marvell, you're just leaving yours. 46 rank.
I'm lying. I'm pretending like I'm such a cowboy. I'm telling you. So what I did was I have a little, it's a bigger position of mine. So I bought put spreads to cover a third.
Yeah.
So a third. I didn't want to spend the put spreads on all of it, but I figured I would buy some protection just in case.
And you know, I hope Marvel goes up tomorrow. I know a lot of people that use it.
So we got filled. Okay, we did get filled during the show. I want to make sure we hit our AEO. So that's one of our things that's out there. And then here, just for the rest of earnings, so everybody can see this: GetLab, CrowdStrike, AEO, OKTA, ASAN. Not sure what that is. Dollar Tree and Macy's. Now, I will say a lot of the retailers have been doing very, very well.
We'll see.
No, I'm not saying that. I'm saying the ones that have come out have done very well. I can't say going forward. What is that? What is it? Past results are not indicative of future performance.
Yeah, past performance is not indicative of future results. I thought you were going to say my old saying, if tomorrow could be like yesterday.
I haven't heard that in a while.
Okay, so when I'm trying to push out trades, we haven't gotten filled on anything yet. So maybe you want to adjust something.
Oh yeah, I do want to get filled on this. So midpoint.
We're filled on AEO earlier. That was at 11:47 after our show.
So what's hard about OKLO, Jenny? And I'm just going today.
Here, you know what, Liz? Maybe cancel that trade, because I think we've done big lizards in OKLO before, and it doesn't matter how high that thing goes. They don't ever make money. They don't come in. They don't. The premium stays in those trades for a long time. Like I've got short puts in OKLO that I sold when OKLO was much lower, and I'm barely making money on them.
So if we want to be bullish OKLO, and I want it to be like a cheaper bullish trade, I'm going to go 105.
I think you got to do.
That's not bad.
I think you got to do what are you looking at?
It's a diagonal, but it's a 10-day, 17-day, and I'm selling the 105 and buying the 93. Well, I mean, it's not bad.
Hey, it meets all the rules. It's you're paying $6 for a $12 wide, 50%. That's how it should be. Sure. Yeah.
Yeah, that's not bad. Let's ship it. And then we're bullish. It's the same kind of thing. I mean, we're getting
only because this just was rolling this was rolling after me.
I can't believe our train conductor saw the piece of my eyeliner, and you're like, there's nothing on the floor.
I didn't see it.
I didn't see it either. I was like, it's okay. There's nothing there.
I was like, girls, you dropped something. It's Liz's eyeliner. I was like, I don't see anything. There's nothing there.
I didn't see it either. I was like, I don't know what he's doing. Okay, so this is OKLO. Now, this is not. OKTA does have earnings tonight. I'm just keeping an eye on this. This is not earnings. This is just a diagonal.
So for earnings, why don't we have American Eagle? Why don't we do do you want to do something in Marvell? I don't really care about OKTA.
I just was going to look because somebody was confusing with OKLO with what we were doing. So this does have earnings tonight. OKLO does not. Just a little FYI. So there we go. We can do something in Marvell, but you're out of it. So but
I'm a chicken. I'm telling you, I'm a chicken. I got out of my Marvell. I had too many positions that I had like nice P&Ls in that took a real turn a few weeks ago that now if things have come back, I'm just locking in profits. I wish I would have locked in more profits because my P&L's not as good as it was a month ago.
Okay, so I know, I get it. Okay, like, mine isn't either. So just a little FYI, it's not as if I'm sitting here on easy street. But I mean, we live to fight the good fight. Okay, now take a look at this, Jenny, and tell me what you think. If I am bullish Marvell, which I am, I took a look at this is an earnings diagonal, meaning I'm selling that front month. We don't necessarily have to do this.
It's not bad. We're risking $390 through earnings, but it's not
decent profit potential.
Yeah, it's $10 wide. It's $10 wide. So that's not bad. That's not bad. Can you pull up one other thing I just want to see? I just want to see how much it would be. I'm not sure. Like, let's say you buy, if you clear that, if you buy like the 94 call.
Okay.
And sell the 98 call. So that's just $1.50, right? Yep. And now go down and sell put for $1.50. It's too close. It's too close.
Yeah.
Yeah.
I mean, Marvell's not bad because it's not like OKLO. So OKLOs are, I mean, more expensive. It was, almost $3,000 to be putting on a naked put. Here, the margin isn't bad in Marvell.
But like here, you can make 400. If it goes up, you can make 400. But I thought for $1.50 we could get out of the way of the expected move, and we couldn't.
No, you can't. You can't. Now, this isn't a bad. So from that perspective, what we just said, we could do something very simple. Oh, it's only 12 cents. There's 33 cents, and then go down and sell.
Nah, that's not worth the risk.
I mean, it's something. It's something to be in.
I don't think it's worth the risk. I don't. Those 80 puts are puts that I was long. It was at 80. So when it was 80, not that long ago, a week or two ago, a few days ago, it was 80.
I was just looking back through all this. It was at 80, and then before that it was at 60, and it got all the way down to 44. This was painful because I've had Marvell for right about here. So, but in full disclosure, I'm still up. This is the tale I'm going to tell. I'm going to weave this story for you. Okay, Jenny? So let's say I got in about here, right? Like, let's say up at the top, and I wrote it all the way down, all the way up. So if I look at my P&L in life, not year to date, I would like to state that for the record very crystal clearly, not year to date.
In life.
My P&L in life or P&L open on this, it's really good because I'm using options. And I know
it should be because you got in years ago at 80, and guess what price it is now? 80. It's like, but I'm using options. So that's the story I'm weaving. Is like, it's right back to where it was. But even in the fall, I was never losing. I never had a loss on it because I've always been using options to improve my cost basis. Right.
Always.
Right.
The only time that I actually don't is if I want to be like a cowboy through earnings.
Yeah, I see. I see. I mean, it's not a bad trading vehicle. It's not. It's just to the point where I was like, geez, it's December. I'm happy with my Marvel P&L. I'm just going to close it and not risk earnings.
Favorite. Can I just say my favorite thing that you do is when you talk as if you say this out loud, you're always like, geez, golly. You never say that in real life, except if you're saying it to the camera.
Geez. I don't want to lose my nice P&L in Marvel. I didn't want to risk it through earnings. I've had, I just do you ever notice that your mood changes depending on your P&L?
It used to a lot more. Now it doesn't affect me at all.
I can't say it doesn't affect us at all because I do notice it sometimes with the two of us. I do notice it.
It is. You would have talked to Liz and Jenny 10 years ago. We would have.
So anyway, around the holidays, I want to be very happy and chipper. I don't want Marvel earnings to ruin my mood.
Okay. All right. Just settle down there. It hasn't even come out yet.
I wasn't going to take the chance. I mean, I hope it goes up.
Oh, you got to be kidding me. Let me look at SPX. I was on Easy Street for so long.
What are we? Who's at 14?
Oh. Yeah, who's at 14? Or SPX is up. SPX is up.
Yeah. So, let's take a look at my, I just wimped out and took my calendar off for like $130. Let's see what price it is now.
It was a put calendar.
It's 68.10.
So, I mean, I'm going to sell that one and buy this one.
Look, same price. And SPOOs are at 68.30. So, it's 20 points away, 68.10, 20 points away, and it's still the same price. It wouldn't be a loser. At some point in time, I took it off for about $130 because I thought, well, what if the market really rallies and I didn't want it to be a loser.
No, I think that's pretty smart. But
it's same price.
It's the same price. And I think that's interesting. So if you wanted to have that, you can just go out and buy that now. But I do kind of like what you're talking about. And I do think that this is going to be our newest
study
Jacob piece, right?
Yeah, I think
so. I've already asked Jacob to do me a favor and to look at something if you sell this and then immediately put an order in to butterfly it off.
Like Mikey, this is going to be the Mikey. This is going to be the Mikey trade.
It's going to be the Mikey. I wanted to know a couple questions about it. I think there's a lot of nuances to this. Like, what percentage do you want to take? Are you just letting it go? And a lot of this had to do with the PDT that we're trying to get to the bottom of. So we'll find out, right?
Right. Yes, we will find out. Liz, can you tell me, were we filled on anything during the show? Because I haven't.
Yeah. OKLO.
Oh, we were filled. Okay.
Yep. OKLO.
Not to be confused with OKTA.
Not to be confused with OKTA. So other than that, I mean, the bonds had a good day, didn't they? Let me see. Bonds, no. I mean, we're exactly where we were. We traded ZB yesterday. I want to take a look at where the chart has been. ZB went down yesterday. We placed that trade. I guess it's got a little bit of a rally today. Gold is down. I'm just going to take a look. We've got oil down.
Oh, geez, it's 257.
I know.
We're not waiting for any earnings. I've got 3 minutes till game time. 3 minutes till kickoff.
3 minutes till kickoff. 3 minutes till Wapner.
And I don't know, in the beginning of every one of our games, because we're the Celtics, I don't know if that is even why, but we have the bagpipers. Our rule at our school is if you play the bagpipe, you go to school for free. So you get our hefty tuition off. You pay $0 if you're a bagpiper. So the bagpipers
All
play.
bagpipers, or do they choose one?
No, all bagpipe. If you play the bagpipe, you go for free because they have the bagpipers play.
You had two kids that went to Providence. You went to Providence. Why didn't you from the get a bagpipe in Logan's hand?
I don't know, but it is nice. The bagpipers lead in the football team on the field. The bagpipers lead in like at baccalaureate, at all the events. At all the events, the bagpipers come through first. And so if you play the bagpipe, it's not easy to find. High school kids playing the bagpipe, you go for free. So I don't want to miss the 3 o'clock. I might have already missed the bagpipers, honestly. They might.
Okay, Ash, I got to tell you, Ash thought you said that the game was canceled. It was canceled on Saturday. They're replaying it today.
Yeah. 3 o'clock. 3 o'clock kickoff.
Yeah, Jenny, I can't believe you didn't have bagpipes in your kids' hands since they popped out of the womb.
You know what? I didn't know back then that the bagpipers went for free. But I don't think they always went for free, but I think it became really hard to find students who were playing the bagpipes. So then they started.
They had to grease the wheels a little bit. That is a hard instrument to play. Did you play any instruments?
The flute.
You did?
Did you?
I mean, the French horn. I mean, we couldn't pick two nerdier instruments for us, the flute and the French horn. I was the size of the French horn when I played it. I mean, I was in 4th grade, although I was always the biggest person in the class. But I was in the 4th grade. I think they were like, "You're tall enough to carry the French horn."
Oh my gosh. That is so funny. Maybe we'll have a Christmas special. One day we did a Christmas special and Liz sang. Do you remember that?
Oh, do I remember that?
That was funny. And we had Slim on. Slim sang. Slim was singing and playing guitar. Liz was singing. I was just sitting there in awe.
Yeah. Frank is telling us it's time to move on. We can't talk about instruments anymore.
We got to go. Yeah, it's time to move on. The kickoff's in 1 minute. I got to go.
All right. Well, we will be looking at all the earnings, and please stay tuned for overtime. I think today it's Chris and Leah, right?
Probably. I love those guys. Stay tuned. They're great. We will see you tomorrow. We will be live from the SPX pit at 10 o'clock.
10 o'clock. We'll see you then. Bye, everybody.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Crypto bounces back. Is that good news for stocks? It's still Tuesday, December 2nd, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, here to take you through the next 28 minutes as we wind down this trading day. Stocks had a nice little bounce here this session, led higher by the NASDAQ as tech semiconductors rally once again. The breadth isn't fantastic. Not many sector ETFs are up on the day, but perhaps a green light for risk is given by crypto, which a sizable bounce here for Ethereum up over 8%, Bitcoin over 6%. Not quite the rallies we had earlier in the session, but still quite strong. Overall, you're looking at gold, silver pulling back in slightly given some of the recent moves to the upside. I don't think that's a surprise there. Ilya, maybe people were selling their gold and silver to buy some crypto today. In other news, bonds there stabilized somewhat, not great news. Yes. Same thing for the dollar, a little bit more stability, but not necessarily great news. Energy's a touch softer. Tomorrow we have ISM services data, Ilya. We have a lot to talk about here. So let's break it down right now. NASDAQ is on our screen. It's our point of interest. Bitcoin bounces back above 90K. Tech rallies is the breaking news headline on CNBC.com right now.
Indeed.
Is crypto the most important thing in this market in terms of sentiment right now?
It's tough to say because where has it really gone? It's erased its sell-off at the start of this week. It's basically in a range and has been in one really since the beginning of last week. I'll tell you this much. I'm really happy to have taken half of my short position off yesterday and booked it. I haven't added back in at this point. I'm going to see if this range top holds. Crypto is certainly this sort of on again, off again barometer for risk appetite. And if you look at what the NASDAQ did today, it's ultimately a lot more impressive than crypto. I mean, sure, in percentage terms, the crypto move is larger, but of course it is. It's a illiquid, highly speculative digital tulip of an asset. Don't get me started. But the sort of magnitude swing here aside, if you look at how well-founded the positioning now looks in NASDAQ and the progress it's made, it looks a lot more impressive than does crypto in this sort of Bitcoin avatar in its guise. I think when you look at a day like today, it does sort of seem encouraging to say this is a sentiment thing. But if it is a sentiment thing, I'm not sure it's saying much about sentiment that is terribly supportive. If crypto had broken out, if it had cleared the top of its range, that would look like an impressive signal. I don't think we have that here. So I don't think that in the absence of other news, we didn't really get anything today. The big data is tomorrow. All we had to kind of think about today was a European CPI number, which isn't much. So with that, if this is just sentiment evening out from yesterday's kind of comeback day after the holiday, you look at ES as a kind of barometer of overall market sentiment, and you've gone nowhere. In fact, you've gone nowhere for a while here. So I'm not sure you take this crypto rally as a sign that anything is particularly steadier, more like things are oscillating and sentiment is waiting for its cues.
I'm thinking a lot about what's happening with MicroStrategy here right now, Ilya, just because of how it seems to be the tail wagging the Bitcoin dog. It had a 5.7% rally here today, but that's not before like the 12% drop that we had yesterday. So you're in this weird place right now where they're sitting on 650,000 Bitcoin worth roughly somewhere between $55 to $60 billion, depending upon where Bitcoin's trading that day. The market cap is sitting 45 to 50 billion. So the market cap of the company, including the entire 8.2 billion in debt they've piled up to build this Bitcoin war chest, the net number is still that MicroStrategy's net Bitcoin holdings are still like somewhere in the neighborhood of $2 billion above its market cap right now.
Sure.
So you get this weird thing that's going on, whereas Bitcoin declines, people think that the Bitcoin selling is going to have to transpire. And, what's the point of holding MicroStrategy then if the flywheel isn't producing ever upward moving price movements? Maybe that's stopped here today, ever so temporarily. Bitcoin futures, they didn't clear out the highs that we had at the end of November there, but we did get back above 90K. So we can't dismiss 6.9% on the session. What do you think about the liquidity in the market overall in terms of risk-seeking behavior? I want to think that today is a good session, but when I'm looking at the scoreboard here for sector performance, I only count 5 of the 25 that are in the green. It feels like outside of tech and semiconductors, which had decent days. Tech was up 1.02%, semis were up 1.807, right? Semis comfortably back above their April-September trend line now with today's close. Everything else feels like it was a bit of a Can't say I'm too impressed.
Well, I mean, this is really the story of this whole thing. If you kind of take a step back for a second, but for tech and AI, which is a singular sort of thing, you look at the equal weighted S&P or the equal weighted NASDAQ even, and it isn't looking all that great. It looks like we've been basically going nowhere since October. Well, let's call it early October for the S&P, mid-October for the NASDAQ. And in that sense, the sort of AI names, the Mag 7, and just tech in general seems to be its own kind of sentiment barometer at this point. And I wonder to what extent it is almost like a bright light to the flock of retail money that's perpetually looking to buy the dip and is conditioned to do that now. Anytime that there is any kind of a dip, you get this sort of wave of speculative money that's never seen a downturn, that's not necessarily prepared for the possibility that markets can also go down sometimes. That seems to be an almost kind of barometer onto itself. Risk on, risk off seems to have almost transitioned into tech on, tech off. So you see tech outperform today, but is that really a barometer for the broader sentiment about markets and really sort of the underpinnings of markets, the economy, the sort of financial architecture? Increasingly, it seems to be the answer is no. It's more like a barometer on retail investor sentiment than anything else. I mean, if you look at the professional investing, at least sort of chatter, everybody is exceedingly concerned. And everybody is kind of going, this is how speculative bubbles end. We don't know when, we don't know how, but this is looking hairy, increasing. And when you look at the price action, the skew in it kind of seems to validate that idea. Obviously, we don't have any great confirmation that this is the time to short the bejesus out of all the markets. But to your point, this does not portend strength the way that things are looking today.
We just want to square two things, like thinking about 2026 in terms of a North Star. You and I have had this discussion before here on air, thinking about, kind of the way that I approach markets is through a Mundell-Fleming model perspective.
Yes.
I care if fiscal policy is expanding or contracting. I care if monetary policy is expanding or contracting. Sure. I do want to note that we do see that Hassett's odds of being the next Fed chair took a dunk today, but that's because President Trump said he's going to make the announcement early next year. And so the no announcement by December 31st became the prevailing running favorite right now. But in terms of actual candidates, Hassett's at 15%, Waller's at 1%, everything else is under 1%. I think the market is convinced that if an announcement is made, it's going to be Hassett right now, Ilya. So I have that in one corner, and Hassett's probably the kind of guy who's going to push for looser monetary policy. Sure. Not like an apparatchik. He leans dovish, right? I think we'd probably get 2 or 3 rate cuts next year from May onwards, but he's also an economics professional, even though I don't necessarily agree with a lot of the outcomes that he puts forth or solutions to some of the problems.
Not unlike Stephen Mirren. I mean, Stephen Mirren is not a person who just blindly says things. He knows what he's talking about. I may not agree with his assessment, and neither does the majority of the Fed board, but he's not out of some sort of...
He's not a Peter Navarro.
Yeah, right? He's nothing like a Peter Navarro. He's a competent economic thinker who understands how these things work. If anything, he's more like a Robert Lighthizer, who understands how the cake is baked He's just not baking anything I would eat.
Right. So like with Mir and his credential going to Harvard and a trained economist, Peter Navarro cites Ron Vera, a fictional person that he constructed, as a source in many of his books. So like there's a fundamental difference in terms of seriousness.
Yeah.
Of course, Peter Navarro has a great deal of influence over trade policy, which makes no sense to me. I digress. What I find interesting about all this is, so on one hand, you have Hassett's going to shift things in that direction, right? More dovish. On November 10th, the Trump White House put out a statement to Axios. There's no affordability crisis. That was in the wake of Mamdani winning in New York City. Today, he was asked, on affordability, are the American people getting impatient with the reforms you're making? Trump, I think they're getting fake news from guys like you. Affordability is a hoax.
Right.
So if
this is going to be terrible next year if this is how this continues.
Well, I'm not thinking about the politics, right? I'm thinking about the prognostication here. If I'm a fiscal authority and I'm saying that affordability, aka inflation, is a non-issue, that means that I'm geared to spending money.
Indeed.
I don't think inflation's an issue. So what's the problem with more deficits and debts? And as it turned out from the most recent government available data, which came out at the start of this month, we had a bigger government deficit in October of 2025 than we did in October of 2020 in the thick of all that COVID spending, Ilya. So here we have higher deficits than we've had before during crisis periods. We have a fiscal authority that's telling us that inflation's not a problem.
Yeah.
And you have now a Federal Reserve, a monetary authority that's going to be leaning a little bit more dovish. I don't know, man. Asset inflation still seems like it's on the menu for 2026.
I don't think there's anything unreasonable in that assessment. I think it'll be interesting to see how a Hassett Fed works, because we might be in an environment here where I can't really think of a historical analog off the top of my head at the moment, but it would certainly be the first time in immediate memory that you might have the Fed chair outvoted on some sort of a regular basis, because the Fed does have to vote. These policymakers do vote. And although they are not technically compelled to vote, at this point, everybody's expecting them to vote. Everybody's paying attention to dissents. It would be a tremendous blow to the Fed's credibility to change that system and somehow let Hassett run the place by decree rather than by consensus. So short of that, he's one guy. I mean, yeah, you can have someone like a Chris Waller for the past several months before the Fed started actually cutting in September, yelling into the wilderness and everybody going, oh, well, we recorded a dissent. Nobody else wanted to cut, so off we go. That might be Chair Hassett next year, if he is that. And so then you cue all of the frustration that the president would have with that, and it would take a long time to beef up enough
That's going to be
governors on the board.
The market could get ahead of itself thinking that a Hassett Fed and all of Trump's picks are going to deliver uber dovish monetary policy. And when they don't, and they're a little bit more measured because of the constraints around the voting, it leads to a little bit of a letdown.
It's a different kind of a situation. Yeah.
Yeah. Anna Wong, who's the head economist over at Bloomberg, she's been spot on with a lot of what's happening in terms of the Fed and the machinations around the Trump administration. So just as like a point of reference for me, I like to pay attention to people who seem to be accurate. Okay. And so that's going to change from time to time. Yeah, it changes from time to time. Some people have their ear to the ground in the right spots during certain cycles and certain, economic financial regimes. Others don't. And that changes over time. In my view, Anna Wong's has been a fairly prescient observer of the Trump admin and how it impacts monetary policy since the election. She writes that our view is that monetary policy under Hassett could see a slight dovish tilt. He has more faith than most current FOMC members in the potential disinflationary impact of productivity and deregulation, but not a wholesale shift. So I just think as a baseline, right, the Fed is going to keep easing. It's going to stay loose. The arrow right now is pointed towards easier monetary policy over time. And fiscal authorities are telling us that inflation's not a problem. So like, why do they need to stop spending the money? Why are the deficits an issue? That to me is like the entire thing of gold and silver. I saw a bunch of questions here today. Are gold and silver done rallying? I don't know if I personally.
It doesn't seem like it.
Silver is up at 59.21 right now, 59.20 here after hours. It finishes the day positive. Gold was off close to 2% earlier. Now it's not, back to 42.40. These are still probably my two favorite trades heading into next year.
I mean, I don't think there's any reason to get off the boat at this point. Certainly there's been no evidence to want to get off the boat. Gold, yeah, okay, there's been a little bit of a pullback. There was a bit of a reaction high there, just under 4,300 there. That was the tops from early November. Not surprising, really, that there was a bit of a price response there. And if you look at the high, it pretty well lines up with where this market ran into it yesterday. So you look at all of this and you go, okay, so there was a bit of a price reaction to whatever that previous range top was. Where did we hold on the pullback today? In the former consolidation range preceding it. The trend higher is intact. So I'm fine staying long this. I'm fine staying long silver. I don't think any of the constituent parts of this, even when you take yourself away from kind of the U.S. government is going to spend a bunch of money and be really expansionary idea. Because frankly, if that were the case, if the market for gold needed for that to be the story, the dollar would be doing much worse. The situation in bonds would be meaningfully different, but they're not. So I don't actually think that
smoked at the start of the week.
They did, but that was really more about sort of everything resetting. So stocks kind of reset after the week they had last week, or at the very least, they pointedly lost momentum. Bonds reset a bit. Dollar changed gears. Ultimately, bonds are still in the same range they've been in for weeks. They just retested the bottom of it. But there's nothing going on here, and certainly that move in the bonds did not correspond with a surge in gold. Quite the opposite. And so you look at all of this and you go, you don't need expansionary U.S. fiscal policy to get gold moving higher. This is a bigger story. This is a story about deglobalization, about the trade war, about central banks wanting reserves in more diversified assets to be more nimble, and frankly, less sovereign dependent assets. Because again, we're going into a deglobalized world increasingly. If you're a central bank in this environment, you're not going to want to hoard one kind of sovereign asset or another. You're going to try to hoard something that isn't a sovereign asset because you trust nothing and no one increasingly. And that's just the nature of the beast.
Mm-hmm. Can I just get to something real quick here? I saw earlier today, someone in the chat was suggesting that they like trading Bitcoin. They're looking for the micro Bitcoin futures on the platform. If you do /MBT, those will pull up. There are also listed options, unfortunately, only for one expiry right now. And this is not a tastytrade thing. If you go to the CME website, you'll see that there's only one listed expiration for micro Bitcoin futures right now. But they are there. And if you are not seeing them on your platform, if this is something that you're trying to trade and you can't do it, just give a call into the trade desk. I've been specifically told if you reach out to Marty, he's the guy to help you. So Marty, sorry for all the extra work, but people want to trade micro Bitcoin futures. So let's make that happen.
And of course, there's also IBIT, which is the ETF version if you wanted to sort of manage your size and have a liquid options market.
Yeah, so I'm using IBIT. We put a position on last Wednesday. Tony and I, are you still short or are you long now?
So I took off half of my short yesterday. I'm still short the other half. So I still have a put vertical. I was in it for weeks. Yeah. So I rode down this entire move for the most part. I didn't sell the absolute top, of course, because you and I both like our technical confirmation. But
catching 20% of a 25% move lower is pretty good.
I'm not going to complain. So not at all. So I took half off yesterday because it looked like it had gotten to its former support. I still have the other half. I don't think that the bias has changed here. I think we're more like consolidated.
Yeah, I mean,
but I am doing it with IBIT because it's liquid and the sizes are great and it's easy to move around in. It's actually a very kind of user-friendly instrument, IBIT.
Yeah, and Bitcoin futures in the Z expiration December, the swing low here on this 4-hour time frame is the high that we have here on the 28th. It's roughly speaking 93,590. We'll call it, 93,600. If you punch above there, Ilya, I think that we have somewhat of a workable bottom to trade around. Looks a little bit, then would look like a little bit of an ascending triangle, so to speak, at a low, which could be a bottoming signal. Right. And then all of a sudden you go into the last few weeks of the year and you're thinking about, okay, if crypto's bottoming here and we got the rate cuts coming and, stimmy checks, this, that, okay, asset inflation still on the menu. Maybe this thing has another squeeze to the upside, which I have some fun stats here. I know, everyone likes the little niche stats. Two of them coming from Ryan Detrick over at Carson Investment Research. Could December be strong? Any given year since 1980, when the markets had a greater than 10% return at the end of October, 20 such occurrences. For the last 2 months of the year, we have averaged a gain of 4.9%. Coming into December of this year, we had only moved up by 0.1% of the S&P 500. The average year, so any given year, the final 2 months produce a 3.3% gain on average. So you could say that when you're double digits by the end of October, there is a disposition for the final 2 months of the year to see kind of like a chase, in which those 2 months tend to be better than years in which the market's not up by, at least 10% by the end of October. The other one pertains to presidential years. Since 1950, Ilya, there have been 12 times since 1950, there have been 12 times that the S&P 500 has been up by more than 5% by the end of November at the end of year one of a president's term. On average, those 12 years produced a 2.1% average return for December with a 100% hit rate. As a baseline since 1950, the average December has produced a return of 1.4%, trading higher by 73.3% of the time. So, given my disposition, what's news to you? The stock market's up. It looks like it has a tailwind. We had all those seasonal things that were triggered and the SPY gap from the Thursday before Halloween. 68.70 goes in ESZ5. I got to like 69.50 looks like it's going to be something the market's going to try to reach, at least test once more before the year's out.
I wonder what are these tailwinds of which you speak that we have not priced into this market already. And that is really the essence of what I think was the disappointment at the end of October. That there really wasn't anything else. The world was priced for perfection. And when the perfection was withheld because the Fed, and in particular Chair Powell's speech after that FOMC meeting, punctured one of the pillars of the perfection that everybody had priced in, everything deflated and has not reflated meaningfully since. We are still off that high. We can't even get back over the secondary high in the middle of November at this point. So I'm not sure that we have much of a tailwind assortment here. We'll see. But going into next week's Fed meeting, I suspect you don't get much in the way of follow through, because I think if that's what the markets are afraid of, and now we're at 89% chance of a cut again, and you can't get this thing to rally, looking a bit tenuous.
Heading into tomorrow, any significant changes position for you? I'm basically trading every single futures product right now, but I guess the goal here is long dollar, long stocks, sideways in energy, long metals, long bonds. Bonds obviously haven't worked out the past few days, but it feels like I don't see a reason to change. And if I'm also of the mindset that it looks like, if we wake up tomorrow with gold at 43.40, that would also not surprise me.
No big changes for me. I bought a little bit more dollar via dollar CAD or via selling the Canadian dollar. I did it through MCD futures, which are the micro futures. Still short a little bit of Bitcoin from the other half of my position. Short a little oil, long gold and silver. The only place where I'm short dollars is against the yen. That seems to be working. So I'm long dollars and long a little bit of yen. I added back into my EWZ position. I took half of it off yesterday and booked a nice little piece there. I'd been long from 27. And I peeled off half yesterday because it seemed to have hit the previous high, the swing top there from early November, and stopped. But because today it broke out, I added it back on. It obviously extended some duration. So that's really it.
There we go. Well, with that, overtime's out of time. We'll be back tomorrow, same time, same place, every Monday through Thursday, right after last call, 4 Eastern, 3 Central. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading. We're going to stick around here, though. At least Ilya will be, because he's on next. Macro Money after the break.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tanta paciencia, contigo quiero una indecencia, por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te...
The week continues to give us a sense of sentiment that has run out of juice. We get a little bit of a brighter view on Wall Street today, but not by much. So what is it that these markets are so jittery about, and why is last week's explosive momentum struggling to continue? That's what we're going to try to unpack here on Macro Money. I'm Ilias Pivac, head of global macro here at Tasty Live. And as ever, we are going to look at the price action here, take a look at where things might be headed, and from there, see if we can make sense of where this is insinuating we might go next. So let's begin here with just a quick rundown of where things went today. As we can see here, a NASDAQ, the clear outperformer, and echoed there by a spirited jump from Bitcoin up almost 7%. But the broader markets are quite a bit more soggy. S&P 500 up a mere 0.2%, 10-year yield flat, 2-year yield just a touch higher, despite the fact that Fed rate cut odds actually firm up today. If we take a look at where we are on the CME FedWatch tool here, looking at Fed funds futures and extracting from them what the markets are pricing in, we're just a touch north of 89% chance that the Fed is going to give us a 25 basis point rate cut next week. That's the highest we'd been in at least a week. So there's a week ago here. Of course, the most interesting bit here is that while the markets were very strong indeed last week, just remind ourselves, here's last week's performance, strong gains for stocks, a strong gain for gold and for Bitcoin, a weaker broadly US dollar. We can see that the euro up here is a little higher. Yen is flat. And that's something of a victory for it after all of the precipitous falling that the yen was doing leading into last week. And yields are off for a second consecutive week. So there was a real sense last week that the markets were cheering that the rate cut was back on. Because indeed, as we can see, a month earlier, that was not so much the case, or at least not with the same kind of conviction. And of course, for the longest time there from the Fed's meeting on October the 29th, we were in 50-50 mode. And for a while there, the odds were even favoring with better than even odds that there will not be a cut. So by the beginning of last week, the markets were already well over 80% in the there will be a cut column. And so we get this extension here today, but it's not like that rally last week was predicated on something the markets ostensibly didn't know. It was already priced in by the time last week kicked off, with a likelihood so convincing that it seems like last week's move was more about sentiment readjusting after an elongated risk-off period and ahead of a holiday week where liquidity was going to thin out and market participation was going to decline, rather than anything novel that occurred on this front. And indeed, again, today, this soggy showing is occurring despite the fact that those rate cut odds have only strengthened. So looking at this today, it seems as though what we have is, again, some residual sentiment hesitation to follow through. Now, as far as the data flow or news flow is concerned, there wasn't all that much today. The Eurozone published their inflation data. It came out a touch hotter than expected, 2.2% year on year for November versus 2.1 expected. But there's really not a whole lot for the markets to be doing, as it were, with that information. And indeed, we can see by the euro's performance, it didn't really go anywhere. And that's because if we look at policy expectations as they are priced into the European interest rate futures complex, these are ESTR futures, the Eurozone equivalent of Fed funds, there's nothing on the menu here as far as policy adjustments, of course, for the rest of this year, but also next. Here's the priced-in outlook for 2026, and we can see there's maybe 5 basis points of wiggle room here. So it's not as though we're looking at something here that really speaks very kindly about what is on the menu for next year vis-a-vis these inflation numbers. I mean, yes, we have inflation a touch hotter than anticipated, but if the ECB is not going to do anything about those things, then does it really even matter? And of course, the answer is probably not, because the markets only care about economic data to the extent that it shapes policy expectations. And clearly, in this case, there isn't much of that that's going on. Now, as far as the rest of the immediate outlook is concerned, there's going to be finally a little bit more on the data front out of the U.S. coming up here that might inform the landscape. The incoming release here of the ISM service sector report is going to give us a decent sense of the U.S. economy's current state. We can see here that the expectation is for a little bit of a cooling in the pace of service sector growth. As ever, this is done in the logic of PMI data. So 50 is neutral, above 50 is growth, Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And of course, we saw already with Monday's release of the manufacturing side of the equation, a little bit of a disappointment. We can see there the reading showing us a deeper slide below 50, so 48.2 there versus 48.6 expected. The upshot is that the manufacturing sector was expected to contract, but it contracted ultimately at a faster rate than anticipated. And that's sort of the back story here going into these numbers for the service sector. Of course, the service sector is a much bigger component of the overall economy than is manufacturing. And so this should be a very important piece of the puzzle here, especially as we still struggle for timely government data out of the U.S. in the wake of the shutdown, even as we have this Fed meeting coming up where officials are going to do something or other that's going to require an assessment of U.S. economic conditions, not only for this rate move, which again the markets now see as much more likely than not, but more importantly for this the updated set of the summary of economic projections. That, of course, is going to give the Fed its marching orders, or at least what it thinks should be its marching orders for the next quarter, the first 3 months of 2026. After this update, it'll be updated again in March of next year. And there is a meaningful disconnect between what the Fed thinks and the markets do. Recall again, here's the summary of economic projections update in September. It called for 3 rate cuts this year by narrow margin, largely because Stephen Mirren was a dot in the forecast this time. The majority of the board does not seem to have been in favor of a 3rd cut this year, but Governor Mirren certainly was. And so we ended up with this skewed slightly average, but nevertheless, the drill down was 3 cuts. This was announced in September, along with one of the cuts, with 2 meetings left, October and December. It isn't terribly confusing then to think, if you're a participant in the financial markets, that the remaining 2 meetings with 2 cuts left to do will bring cuts. And so that's been the assumption that the markets have been moving on, obviously with the kerfuffle after the October 29th Fed meeting, sort of throwing a monkey wrench in those works and giving us quite a bit of consternation that the markets are still attempting to recover from, even though the likelihood has rebounded, as we've discussed. So the real disconnect here isn't what the markets again have realized should have probably stayed baked in, or at least stayed at higher likelihood, because it lines up with what the Fed already showed in September. It's what's on the menu for next year, where we can see here a move from 3.6 to 3.4 is just 1 cut. But if we look at what the markets themselves are pricing in, we've got 63 basis points on the board for next year. That's at least 2 cuts, so 50 basis points, and then 13 basis points in the direction of a 3rd, which now puts the probability of that 3rd cut at 52%, so narrowly better than even. Obviously, there's a very big disconnect there between what the Fed is saying and what the markets think is actually going to occur. And so the real risk for next week's meeting is perhaps less so what the Fed is going to do. That's looking increasingly like the markets have decided it's a foregone conclusion. It's what the Fed is going to say. And what they're going to say is, of course, going to depend on what their assessment of the economy is. So that takes us right back into this ISM report for lack of government data that's current and substantive to give us a better view. What's interesting here is looking at the interior parts of the manufacturing bit, we can see the kind of stagflationary issues that people looking at the onset of the tariffs at the beginning of the year were warning about. So we can see the index on prices has, of course, surged and come back, still is quite elevated relative to recent history, as we can clearly see. But at the same time that it remains elevated, and indeed actually moved higher for the first time in months in November, we simultaneously have a deep deterioration in new orders, which is accelerating into contractionary territory, and most of a year's worth of contraction in employment. So the underpinnings of this manufacturing sector look quite weak indeed. And if that were to start to extend into the service sector, which again is a much larger part of the economy, one wonders what the upshot would be for markets. Would they cheer that because more rate cuts? Or would those be the rate cuts for the wrong reasons that the markets don't like? To that end, we are also going to get the ADP, automatic data processing, their version of payrolls data, because of course, apparently we're not getting a November payrolls report from the BLS. So here we're looking at an expectation of just 5,000 jobs added to private sector payrolls. Now, under normal circumstances, ADP is not the world's most reliable indicator vis-a-vis its ability to foreshadow or forecast official numbers, but in so much as official numbers are not available with any kind of timely insight, we are looking instead to this. And the markets, as ever, just want a common yardstick. So if we get something along these lines, then perhaps all is well, things have softened, but not fallen off a cliff in a way that isn't expected. And so the Fed is going to probably cut, and then people can be relatively sanguine about that part of it, because, of course, that's the logic the Fed has outlined, that they're moving to cuts now because the labor market has grown somewhat soggy. Now, it's unclear what these rate cuts are going to do in any kind of a near term for this labor market, because as the Fed has carefully explained, it isn't so much that there is a vast amount of firings. The unemployment rate remains relatively low. It's that hiring has stalled. And explain this with a variety of ideas, including anticipation for what AI may or may not do. But if this ends up being a stronger number than expected, and that starts to put some question marks around just how much the Fed is going to ease relative to market expectations, sentiment might look weak. If at the same time we have a disappointing number and the markets don't like that, well, then we would have an interesting sort of environment where the markets want Goldilocks outcomes, no hotter, no cooler. And we'll see if cooler actually starts to animate markets into cyclical concerns, or if they'll just embrace them as more rate cuts equals good kind of logic. For what it's worth, the S&P Global PMI numbers that have already come out show us that the U.S. economy appears to have been strengthening on this measure for the past 3 months and seems to be in relatively rude health. Here is where we are currently. That's lining up just about with the multi-year highs reached in the second half of 2024, which you can see take their reference points back to early 2022, before growth slowed substantially because the Fed launched that rate cut cycle. So we're looking at a situation here where markets want that cut. At least this measure seems to suggest the economy is doing relatively well, or at least holding up relatively well. If that speaks to resilience in the service sector that is more so pronounced than expectations, and a pickup in payrolls growth that's larger than anticipated, one of the more interesting things here might be that the markets actually end up not liking that because they want these cuts. We can see here that the S&P has basically stalled since early November, late October, which lines up with this Fed meeting on the 29th, as we've mentioned, when the Fed came out and made its announcement. But of course, Jay Powell then said, if you thought December was a foregone conclusion for a cut, it isn't. Stop it. I am, of course, paraphrasing, but only a little. Here's how the dollar has fared. It's pulled back a bit, arguably against the backdrop of the recovery and risk appetite last week, but things are holding relatively steady. And that seems to be another little telltale sign that perhaps we're not out of the woods here. Perhaps last week was more about sentiment readjusting and rebasing and less about the markets being animated with some sort of a new and extrapolated catalyst that has follow through in a risk-on direction. As far as positioning is concerned against this backdrop here, I'm still long a little bit of gold, pullback here today, but the trade still looks like it will be something that might continue to trend in a supportive direction. It doesn't look like the trend is broken here. By the same token, still long silver, and that one actually diverged and did work. So this call spread here that I've got remains in place. I took off half of my EWZ exposure that I had been holding from a strike of 27 yesterday, as we discussed on the show. And I have now, with the breakout above the swing high from November today, added that second piece back on, obviously, different strike price here at 33 and extended duration into March. So the long-term ride here in Brazilian stocks, I'm looking for that to continue. Still holding the second half of my Bitcoin short. I thankfully took off half of it yesterday for a nice little lucky break, but I still have half on, and I'm looking to see what this does. I think the trend is still down, and so I'm open to adding back on when I get some confirmation. Still short a bit of risk here via these SPY put verticals, and I don't think much has changed for me there. I'm in from basically Fed Day in late October. So the trade is still narrowly in profit, much more narrowly than it was a week and a half ago, of course. But we'll see how this goes. I don't think the idea has been invalidated just yet. Still short a bit of crude oil, although this is coming up on expiration here relatively soon. So I'm going to have to figure out what to do, either roll or not. I haven't made the call yet. We'll see what crude does. It's been slow going so far. The bonds still remain. I still have that on the long side. This is the long end of the curve. We had a meaningful pullback at the start of this week, but it looks like the range has held. So still have that on. And for the dollar, I've added a little bit more long dollar exposure. I've gotten short the Canadian dollar here, still also short the euro, the pound, and the Aussie. And the only place where at this point I am short the dollar is against the yen, which of course had that massive run. I took off my short yen exposure toward the beginning of last week, again, as we've discussed on the show here. And I did that bet as with this one with spot FX, just because the size is more conducive, more flexible than our 6J futures, which are quite large. So at this point, I'm short a little bit of USD JPY, that is spot dollar yen exchange rate. And you can see our friends at Tasty FX about that. That's of course on the Tasty Trade platform now. So that's the only place where I'm on the short side of the dollar. Elsewhere, I am still long. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I am likewise writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.